Torsten Slock of Apollo writing, the market is clearly expecting rate cuts, but the upside risks to inflation are significant. The stagflation theme in markets is intensifying. Torsten joins us now for more. Torsten, good morning.
Morning.
Let's talk about the Fed's dual mandate. Should both sides of that dual mandate be treated equally?
Well, that's, of course, up to the committee and, importantly, up to the Fed chair. So far, it's very clear that Jay Powell and the committee have been putting a lot of weight on the worry that inflation is not yet at the 2% target. So for that reason, if you think that inflation is now at risk of going up because of tariffs, inflation is going up because of the depreciation of the dollar, all that is creating an impulse on inflation over the next 6 months, where there are some arguments to say, well, we should not be cutting because inflation is under some upward pressure. On the other hand, growth is slowing down, as you know from the employment report. There's some headwinds, of course, not only from tariffs. There's also headwinds coming from student loan payments restarting, especially middle-income households are facing some challenges as a result of that. That means that growth is slowing, which, of course, says the Fed should be cutting. But the current administration at the Fed, if you will, or the FOMC committee, is certainly putting a lot of weight on the inflation worries and the potential for more inflation impulse coming over the next several quarters.
Do you believe that derails some of the impulse to reduce interest rates on the FOMC?
Well, now, as you just talked about, we're expanding the search for who the next Fed chair will be. And, of course, some of these names certainly are more traditional Fed staffers and have been on the FOMC for a very long period. So that does begin to raise questions around, well, what is exactly the intention of the new Fed chair. But the important thing, as usual, is that there are 12 voting members on the FOMC. And even if the Fed chair comes in and says, I think rates should go down, if the other FOMC members say, no, we don't think rates should go down, well, then they will not be cutting, because it is a vote. And we will find out, of course, what the composition of the committee looks like.
Well, Jay Powell told us that the main number to watch is the unemployment rate. With this kind of unemployment rate, should they be cutting?
Well, the market obviously is saying we have 2 cuts this year. So I do think that the dot plot is telling you that the next move is that rates are moving lower. But it's very clear that this whole debate around, when you put it up on the scale in the dual mandate, how much weight do you put on inflation, which is now at risk of going up? How much weight do you put on the unemployment rate, which is at risk of also going up? Well, that becomes a very, very difficult debate, because at the moment, the Fed is currently saying, well, maybe we still worry more about inflation, but if the labor market does deteriorate more meaningfully over the next several months, and there are chances that could happen. We have certainly seen some, of course, bad data, in particular, of course, on the employment report itself, but also the headwinds from, in particular, the consumers in the middle-income household group. High-income households have been doing well for a long time because of asset prices going up. Low-income have been stressed because of interest rates and therefore higher cost of borrowing for them. But the middle-income household now, for the last few months, also facing headwinds, is now also a downside risk to the growth outlook.
How much has this trade story been a headwind? Because in June, you wrote that Donald Trump might have outsmarted all of us when it comes to trade policy, which was welcomed by the White House.
Well, but if you think about the trade deals that Trump has been able to generate, both with Europe and also what he's been doing with Japan, at least when you look at the tariff part of that, that is beyond what most people expected, even when you go back to Liberation Day. So from that perspective, I still think that Trump did manage to get higher levels of tariffs with a lot of different trade partners than what anyone really expected in the beginning of April during Liberation Day discussions.
Let's sit on the data we get later this morning at 8:30 Eastern Time. To what extent do you believe that inventory management has delayed some of the pass-through? And how many more months do we need to see of data before you get comfortable that we've seen the limits of this?
That's exactly right. That's why the census data for the inventory to sales ratio, first, companies were building inventory as, of course, we saw tariffs come in, and those inventories have now been running down, especially for retailers. And now those inventories are down now to a more normal level. So now we are getting into a situation where companies are pricing goods not so much on whatever is left in the inventory, because there's not much left in the inventory. It really is the new price that includes tariffs. And that's likely why the number this morning, what is most important is not only what's happening on the goods side, where most of the worries are about inflation, but the fact that ISM prices paid for services also showed a very strong uptrend in the latest data, is telling you that for a long time the story was, oh, it's all about goods, services is fine. But the fact that ISM services paid for the last several months have started to move higher is telling you that there is a bigger risk, in particular also with deportations at the same time removing labor from the economy. That means more upside pressure on wages, especially in the sectors where undocumented immigrants are working. That all means that service sector inflation could also be a very important part of the number that comes out here at 8:30.
Are you seeing this show up in inflation expectations? Survey-based inflation expectations of consumers can be very volatile. What are you seeing in markets?
Well, so the one-year ahead swap, meaning what does the market price, and this is people putting real money, betting on what will headline CPI be in 12 months' time, is currently pricing that inflation at this time next year in 12 months' time will be 3.3. That's significantly higher than the Fed's 2% target. So that's also telling you that The market is pricing that inflation expectations have almost become unanchored already. Is that because people think that inflation will be higher on its own, or is it because the expectation now is that the Fed will be cutting and therefore there will be even more impulse to inflation, not only from tariffs and not only from the dollar depreciation, but also from potentially the cut that's coming from the Fed prematurely?
What do you think it is?
I still think the risk is that the market is beginning in the long end to look a little bit more wobbly when it comes to inflation expectations. Markets are, broadly speaking, especially when you take last week's auctions for treasuries, there was a number of issues with 3-year, 10-year auctions last week where you begin to worry about, well, if we now have on top of the fears that inflation might be moving higher, then rates in particular in the long end could also be moving higher simply because of the significant fiscal issuance and treasury issuance still in the pipeline.
Final question. Do you trust the data?
Well, what's really unique about this discussion in markets at the moment is that the BLS controls both parts of the Fed's dual mandate. They control non-farm payrolls, the employment report, and they also control the CPI and inflation statistics. So that's why, let's take, for example, non-farm payrolls. If non-farm payrolls is really good, the market may say, well, this is not necessarily the right data, this is just done for political reasons, and therefore maybe the conclusion is that the data is not that good. Well, what if non-farm payrolls actually comes out as bad or really bad? Well, then the market will be also concluding, or will be maybe things are actually really
자, 잠시 후
so in that sense,
8월 12일 화요일 개장 브리핑 시작하도록 하겠습니다.
It is the case that if the data does come out a lot better, or in this case, say a lot worse, the market will be putting a lens on of beginning to ask questions about, is this the real true data, or is this data that is actually being painted with a different brush? So, broadly speaking, I do not believe under any circumstances the BLS staff and their staff, the way they collect the data can be really changed in any way. But it is, of course, a very important debate we're having at the moment when this discussion is, of course, about firing BLS commissioners, suddenly the way it's been done here more recently.
Torsten, it's good to see you. Appreciate your time. Thank you. Torsten Slok there of Apollo. It's the Chinese effect. It's how we treat Chinese data.
Everyone's concerned, even in conservative economic circles, that this individual is just too partisan, and now the whole independent institution is politicized.
We'll see how things change down in Washington. Up next, we'll catch up with Stuart Kaiser of Citi, Michael Zezas of Morgan Stanley, Angela Zena of CFRA, and Elizabeth Economy.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it. And so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Astonishing day for US technology. shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
자, 안녕하세요. 8월 12일 화요일 개장 브리핑 시작하겠습니다. 자, 금일 미 시장에서 가장 주목해야 할 이슈는 두 가지입니다. 첫 번째로는 금일 9시 30분 예정되어 있는 CPI 소비자 물가지수 데이터와 연준의 금리 정책 전망, 두 번째로 엔비디아, AMD, 인텔 등 반도체 기업의 중국 매출에 대한 미국 정부와 15%의 매출 공유와 합의안입니다. 위 두 가지 이슈가 시장의 전체적인 방향성을 좌우할 수 있고요. 말씀드린 흐름을 중심으로 주요 뉴스 및 실적 발표 짚어보도록 하겠습니다. 자, 첫 번째 이슈부터 정리하자면 금일 발표될 CPI 헤드라인은 전월 기준 대비 플러스 0.2%, 근원 CPI 지수는 플러스 0.3%로 예상됩니다. 연율로 보자면 각 2.8%, 3% 수준입니다. 자, 웰스파고 등 주요 기관들은 최근 관세 인상 효과가 소비자 가격에 반영되기 시작했다고 분석하고 있습니다. 자, 만약 CPI가 예상보다 높게 나온다면 연준의 금리 인하 기대가 약화되고 반대로 낮게 발표되면 9월 금리 인하 가능성이 확대된다고 해석할 수 있습니다. 현재 시장에서는 금리 인하 확률을 약 89%까지 보고 있으며 노동시장은 최근 3개월간 둔화 신호가 뚜렷하게 보여지고 있었지만 실업률은 4.2%대로 안정적입니다. 자, 이와 같은 스탠스는 인플레이션과 고용 사이에서 연준의 스탠스를 흔들 수밖에 없는 상황입니다. 자, 금리 방향이 중요한 이유는 방향에 따라 주식, 채권, 환율 등 모든 자산군의 밸류에이션, 직접적인 영향을 줄 수 있기 때문입니다. 자, 두 번째 핵심 이슈 알아보도록 하겠습니다. 자, 두 번째 핵심 이슈는 엔비디아와 AMD, 인텔 등 미국의 반도체 기업이 중국의 AI 칩을 판매할 때 매출의 15%를 미국 정부의 수익을 공유하는 새로운 합의안입니다. 이 조치로 미국의 대중국 기술 견제와 동시에 기업의 수익성에 직접적인 타격을 줄 수 있습니다. 실제로 위 합의가 발표된 이후에 엔비디아와 AMD의 주가가 1에서 2%대 하락했고 시장에서는 이 합의가 향후 다른 기술에도 확대될 수 있다는 우려가 나오고 있는 상황입니다. 자, 반도체 섹터에서 마진 압박과 글로벌 공급망 리스크가 커진다는 점에서 투자자들은 기술주, 기술주 보유량 조정과 더불어 방어적 섹터로의 이동까지 고려할 수 있습니다. 자, 해당 합의안의 중요한 이유는 미국 정부의 정책 리스크가 기업 실적과 밸류에이션, 직접적으로 반영되는 대표적인 사례이기 때문입니다. 자, 이어서 뉴스 흐름을 살펴보면 CPI와 반도체 이슈 이외에도 트럼프 대통령의 중국과의 관세 의전을 90일 연장하는 행정명령에 서명했다는 점도 중요 이슈로 확인되고 있습니다. 자, 이와 같은 관세 의전은 미국산 제품에 대한 관세가 145%까지 급등하는 것을 막고 양국 간 무역 협상의 시간을 벌어둔다는 의미입니다. 자, 시장에서는 단기적으로 무역 리스크 완화로 해석할 수 있지만 장기적으로는 여전히 불확실하다는 평가가 많습니다. 자, 또한 트럼프 행정부가 엔비디아의 축소판이라 불리는 블랙웰 칩을 중국에 판매하겠다는 가능성도 언급했는데 이는 기술 경쟁과 국가 안보 사이에서 미국 정부의 정책 유연성을 보여주는 대목으로 확인이 되고 있습니다. 자, 여기서 금일 이슈 정리해보도록 하겠습니다. 자, 9시 30분 발표될 CPI와 연준의 금리 정책, 반도체, 기술주에 대한 정책 리스크, 그리고 금, 에너지, AI 관련 기업들의 실적이 금일 시장의 핵심 변수로 작용할 수 있다고 판단이 됩니다. 종합적으로 금일은 CPI 발표 결과에 따른 연준의 스탠스 분석과 중국과의 무역 협상 진전 여부 등이 시장을 좌우할 수 있다고 판단이 됩니다. 자, 여기서 개장 브리핑을 마무리하도록 하겠습니다. 자, 이어서 전일 장 종료 후에 있었던 기업들의 실적 발표 결과 말씀드리도록 하겠습니다.
Significantly above. We probably need numbers that are 0.5 on some of these things to really delay cuts, and so that'd be kind of a bogey or 0.5 or above.
You say in your note that equity markets can shrug off some tariff-driven inflation. How?
Well, we did it last month.
Right, but not all the tariff rates were set.
Yeah, I think at this point there's a question of timing and magnitude on when the tariffs actually get into the data. If there's one little mistake I think the Fed made is they said we expect to see this over the summer.
자, 8월 11일 월요일 장 종료 이후에 플러그 파워, GVO, 플루언스 에너지, 아처항공, 빅베어 AI, AMC, SAT 스페이스 모바일, 오클로 등의 실적이 발표되었는데요. 하나씩 살펴보도록 하겠습니다.
John has been talking about this, the inventory with the pull forward effect, and at some point that inventory is going to run out. So do you see this being a bigger problem for the equity market going into 2026?
It could be if it starts to get into the margins. I mean, Scott Cronin on our equity team took up his earnings forecast for next year by about 5%, which gives you a sense, on how positive the quarter has been. But yeah, I mean, there is a risk going into next year that the tariff impact.
자, 오클로부터 살펴보도록 하겠습니다. 오클로는 주당 순이익은 마이너스 0.18달러, 예상치보다 63.6% 하회한 결과를 발표했습니다. 자, 매출은 발표되지 않았습니다. 자, AST 스페이스 모바일. 자, 주당 순이익은 마이너스 0.41달러, 예측치보다 242% 하회하는 결과를 발표하였습니다. 자, 매출은 1.16 밀리언 달러, 예상치보다 79.6% 하회하는 결과를 발표하였습니다.
Also have a big legal process that's going on parallel to this about that, and if they refund tariffs, who gets them back? No, so I think it's a good question about I think if the economy is stronger, corporate America will try to test on pricing a little bit, right? If the economy looks a little bit weaker, you'll probably see it go kind of into margins a little bit. So I think it's all sort of context dependent in terms of how strong the economy is, what the details on tariffs are, and how much they feel like they can push through.
Credit to you, you've been super consistent over the last several years, I would say. Long, strong until the data starts to break. Can you just define for us the data breaking? Because clearly 2 Fridays ago, people felt like the data was breaking.
Yeah, it's the unemployment rate. I mean, if you really wanted to distill it down a little bit, and I think you need to get that kind of going back up to about 4.5% or above to really, kind of disrupt things. What's interesting is if you look back to last summer, we had 3 consecutive months of sub 100K payrolls, which we're kind of going through again now. And then you triggered the SOM rule at the end of the summer, and the market kind of suffered under the weight of those 2 things. So I think what you're really going to need, is you need firing to increase. This can't just be about not hiring. It needs to be about actual layoffs, and I think you need to see it get into the unemployment rate, get the number at least above 4.5 to become a real issue.
Well, that's the question. Is the labor market actually slowing, or is it just frozen? No hiring, no firing, because what corporate America has been telling us is that we are putting everything on hold because we are uncertain with policy coming out of this White House.
I think it's exactly that. I think it's an on-hold, frozen kind of labor market.
자, 플러그 파워는 주당 순이익은 마이너스 0.20달러, 예상치보다 25% 하회하는 결과를 발표했고요. 매출은 174 밀리언 달러, 12.1% 상회하는 결과를 발표했습니다.
When you get to those transition points, though, the risk reward really falls apart because you're going to get data that some
자, 빅베어 AI. 빅베어 AI는 주당 순이익은 마이너스 0.71달러. 약 1000%대 합의했고요. 매출도 32.47 밀리언 달러, 20.3% 합의한 결과를 발표하였습니다. 저 서클은 주당 순이익은 마이너스 0.43달러, 예상치보다 38.7% 하회하는 결과를 발표했고요. 매출은 658 밀리언 달러, 예상치보다 2.3% 상회하는 결과를 발표하였습니다. 자, 금일 실적 발표는 예상치보다 좋지 않게 나왔고요. 추가적인 분석 이후에 금일 트레이딩 진행 여부 말씀드리도록 하겠습니다. 자, 현재 예상보다 좀 부진한 실적 발표, 그리고 CPI, 반도체 이슈 이외에도 이제 관세 리스크 등 시장 분석에 어려움이 좀 있다고 판단되어서 금일 트레이딩은 진행되지 않을 수 있는 점 참고 부탁드리겠습니다.
Good to see you, mate. As always, thanks for dropping by. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Yahira. Hey, Yahira.
Hi, John. The U.S. and China have extended their trade truce for an additional 90 days. President Trump signed an order extending the truce through November 10th. Had the truce not been extended, U.S. tariffs on Chinese goods would have jumped to at least 54% at midnight. The extension may clear the path for Trump to meet with Chinese President Xi Jinping in late October. Meanwhile, President Trump has reversed his criticism of Intel CEO Lip Bhutan after they met at the White House yesterday. Trump described their meeting as very interesting, calling Tan's success and rise an amazing story, and said Tan would meet with members of his cabinet in the coming days. And General Motors is renewing its push to develop a driverless car. Sources telling us here at Bloomberg, the automaker is trying to lure back some of its former employees of its now defunct Cruise autonomous vehicle business. This time around, the project would be focused on autonomous cars for personal use rather than a robo-taxi service. That's your Bloomberg brief. John?
Yahira, thank you. Thank you very much. How many times have we seen this over the past few months? If you get a meeting with the White House, apparently get long the stock.
Absolutely. It's so interesting that this Intel CEO went to that meeting with the president calling for his firing publicly. And now he said he's an amazing guy with an amazing story. So I think for Intel, they're pretty happy with the result of that Oval Office meeting.
Stock is higher this morning in the pre-market by 2.7%. Up next on the program, expanding the search.
Look, in 2019, the president contacted me and said, would you serve? And I said, yes. If the president contacted me and said, I want you to serve, I would do it. If he says, Chris, I want you to do the job, I'll say yes.
Governor Waller might be the front runner, but that list is getting a whole lot longer. We'll catch up with Michael Zeese of Morgan Stanley up next.
자, 금주 리스크 발생 방지를 위해서 금일 트레이딩은 진행하지 않도록 하겠습니다. 자, 예상보다 부진한 기업들의 실적 발표와 반도체 관세, CPI 등 시장 예측이 어렵다고 판단되어서 금일 트레이딩은 진행하지 않도록 하겠습니다. 자, 매매하시는 분들은 개장 브리핑 때 말씀드린 부분 참고하셔가지고 매매하시길 바라겠습니다. 자, 금일은 트레이딩 진행하지 않도록 하겠습니다.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg surveillance.
금주 수익분 확보되는 상황에서 리스크 방지를 위해서 금일 트레이딩은 진행하지 않도록 하겠습니다.
On the S&P, on the Nasdaq, the bond market going absolutely nowhere. 2-year, 10-year, 30-year bond yields. Yields unchanged on a 10-year at 4.29, on 2s at 3.77. Under surveillance this morning, we need to talk about the Federal Reserve expanding the search.
Whoever they choose, you're going to have somebody that has credibility with the markets, or you're going to see inflation expectations spike. You will not get lower interest rates. You will get higher interest rates. Look, in 2019, the president contacted me and said, would you serve? And I said, yes. If the president contacted me and said, I want you to serve, I would do it. If he says, Chris, I want you to do the job, I'll say yes.
So here's the latest this morning. The search for a new Fed chair is getting wider. Sources telling us here at Bloomberg that the Fed's two vice chairs, Mickey Bowman and Philip Jefferson, plus Dallas Fed President Lori Logan, are under consideration to replace Chairman Powell early next year. Bloomberg's Wendy Benjaminson joins us now for more. Wendy, welcome back to the program. What are we learning about the process so far?
Well, our colleague Saleha Mohsen yesterday broke the news that the people you just mentioned are under consideration or being considered by Treasury Secretary Scott Bessent, who is running the search. And that is sort of expanding the universe that includes Chris Waller, who you just saw there, Kevin Hassett, some other people who might, all be considered for it. All these people are sort of within the normal spectrum of who you might select. And he does have Stephen Moran in place right now, or will be in place soon, to cover Adriana Kugler's term until January. And then presumably any one of these people or any of the other people we've mentioned could replace Jerome Powell next year when his term as chairmanship ends.
Wendy, this is a very credible list. Most people on Wall Street would agree with that. Can we say the same thing about the candidate that might succeed the empty vacant seat at the BLS?
I'm afraid not. As you said, all the candidates for Fed chair, perfectly within normal range, should sail right through the Senate. Now, E.J. Antony, who we're seeing there, will probably also sail through this Senate for confirmation. But no, he is really Steve Bannon's pick to run the Bureau of Labor Statistics, which is the least sexy agency in D.C. It is a place where, PhD economists and statisticians and people who really love numbers, would be there to present jobs data. And this person believes in promoting what Donald Trump wants him to promote, which throws into question some of the key data that everything else is based on.
Wendy, appreciate the input this morning. Thank you. Wendy Benjaminson of Bloomberg in Washington, D.C. Plenty of questions about just how easy that confirmation process is going to be.
Well, first they need to go to the Senate Committee on Health, Education, Labor, and Pensions. And there's individuals on that committee, Republicans, who have gone against the president and who have been vocal. So I'm not sure, and he can't lose a single vote there. So I'm actually not sure that this is going to be smooth sailing. There might be some hurdles, and this could be very contentious and potentially this individual might not actually make it to the institution.
We get more economic data from the BLS later on this morning, 8:30 Eastern Time, for inflation data. Joining us around the table is Michael Zizas of Morgan Stanley. Michael, good morning.
Hey, good morning.
It's good to see you. Let's talk about the tariffs so far that are set and how they're influencing inflation outcomes for you and the team. How do you see things at the moment?
Yeah, so we're at an effective rate of about 16%. That's more or less where we expected to be, but at the end of the year. So we got there a bit faster. Our economists think that the CPI print you're going to see this morning is going to show core about 0.32 month over month, getting you over 3% on an annualized basis. That's the type of thing that would show kind of 2 consecutive times where there's been some inflation acceleration and show some reasonable tariff pass-through. And that's the type of thing that we think helps keep the Fed on hold come September. If we're wrong, right, and you actually don't see that pass-through, that would suggest there's more tension in the system. Companies are eating more of that cost. Perhaps they're having, by the way they're eating that cost is through labor and through layoffs. And so that's the type of thing that gets you to a more dovish posture. So really, I think we're in the zone now where the tariff outcomes, the uncertainty in the near term is kind of reduced, and we're really kind of watching the data to tell us what the actual impact has been.
Well, do you have a good handle on how that 15.1% is being spread across the supply chain?
Not yet. I mean, so you have to patch this together, and over time, I don't think we'll really be able to tell this story in the near term. It's probably like a year from now we'll be able to see what companies have said on the record about how they've been able to absorb the costs, and really kind of how some of their suppliers overseas to what extent and in what industries they've absorbed the costs, and then what the pass-through is. So I mean, clearly there is cost burden sharing across that supply chain. A CPI print like this that sort of accelerates would tell us that most of that is going to be pushed onto the consumer. But again, we just don't really know yet.
We do know that there's going to be 90 more days of this détente between Washington and Beijing. What are you expecting the next talks to look like between these two countries? What will be the focus?
Yeah, I mean, listen, I think the U.S. still has a list of demands that China doesn't seem particularly willing to engage in all that much. I mean, a lot of the tension in the U.S.-China economic relationship, going back to Trump's first term, has really been around the way that China organizes its economy. And the U.S. really wants it to change some fundamental aspects of being a centralized economy. And I think China's going to be very resistant to that. So the sort of narrow arrangement that they've already made, which is effectively a swap of semiconductors for rare earths, with an elevated tariff level from the U.S. on imports, you know, we think we're kind of indefinitely in a position like that. And maybe tariffs are going to go up and down a little bit as the U.S. kind of toggles them to try and nudge negotiations forward. But we don't really think there's much more of a substantive agreement coming.
The US market is a market that any country would want access to. Makes a ton of sense, really powerful, wealthy consumer. Are there any signs at the moment that China is struggling without that access?
Yeah, I mean, there's certainly some, our economists in Asia have kind of pointed out that there's been some weakness there as a result. But on the other hand, I think things like this news where the U.S. is going to have some of the semiconductor companies effectively pay a portion to the U.S. to sell into China, and the market is telling you that it's not particularly concerned about that outcome, i.e. that there's going to be full pass-through, it tells you there's probably sufficient demand on their side and then probably sufficient export capacity on their side, even with these barriers raised up, that none of this is sort of existential for either economy.
Since you brought it up, can we ask you what you thought of that development? Just putting export licenses alongside a share of the revenue for the U.S. government.
Yeah, I mean, it's unprecedented, right? And so there will be, I think, an obvious question of under sort of what legal framework this is permissible. Now, we're told, read the headline, that this is an agreement. So if it's just, sort of a bespoke agreement, then in theory this could stand. And who would actually challenge this in court if this is a voluntary agreement? It's unclear. But of course, there isn't much precedent to this. And it would matter in so much as it would actually change the dynamic of what could be exported. But I think right now the reaction in the market is telling you that it's an extra cost that's willing to be borne.
Does corporate America need to start thinking about this every time a CEO goes and visits the president? Because this was done, according to the Wall Street Journal, really basically a conversation between Jensen Huang and Donald Trump.
Yeah. I mean, I would put it on the menu of any C-suite official who's talking to the president, just to kind of have in mind that this is something that could come up, because the what our clients tell us is that engagements with DC, a sort of wide range of options is always discussed. But if you're asking us to set the precedent where now everyone exporting into China is going to have to pay something, I don't think so. I think semiconductors are a very specific issue that goes back over multiple administrations who are trying to be preserving the U.S. technological advantage in this space. Partly because we're trying to win the AI race, as well as other advanced technologies that are deemed critical for the economic security of the U.S.
Well, Beijing basically turned around to the United States when Treasury Secretary Scott Bessent says to his counterpart, we want you to structurally change the dynamic of your economy and say, well, now you're doing central planning too.
Yeah, I think it's a fair critique, right? And I think, that, again, so back to a point about where do these negotiations ultimately go with China, I think the answer is they continue. The discussions continue. You sort of avoid re-escalating to the levels that we saw earlier this year where we had tariffs above 100%. But these discussions can include toggling of tariffs up and down 30% to 40, 50%, and then kind of a cooling down as you go. But the arrangement, in our view, has been made. It's effectively we're going to continue to trade with tariff barriers on certain things, but the swap of semiconductors for rare earths is kind of what both sides need, and we're going to kind of continue the relationship with that as the baseline.
You said it repeatedly. Last time around, it took 18 months. Going to see a series of 90-day extensions before we get there.
And the Treasury Secretary basically said that to me in July. He said, now we have a cadence where we can basically meet regularly. What I want to know is what is on the list for the next few meetings, and all of this potentially leading up to Xi and Trump meeting.
Michael, it's good to see you. Thanks for dropping by. Michael Zezas there of Morgan Stanley. Up next on the programme, Angelo Zeno of CFRA as China pushes back against US chips. Plus, Yahira with your morning movers as the makers of On Shoes delivers a higher outlook.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
2 hours away from the opening bow, 60 minutes away from the inflation report. Equity futures totally unchanged. Said it all morning. It's like the calm before the potential storm. Futures down by not even 1/10% on the S&P. Basically unchanged on the Nasdaq. The S&P within 1% of all-time highs. As we count you down to the opening bell and that inflation data.
자, 금일은 트레이딩 진행되지 않습니다. 수통방은 여기서 종료하도록 하겠습니다. 자, 예상보다 부진한 실적 발표. 이외에 반도체 관세, CPI 등 시장 예측이 어렵다고 판단되어서 금일 트레이딩은 진행되지 않습니다. 금일 나스닥 정규 트레이딩 진행되지 않습니다. 예상보다 부진한 실적 발표 및 반도체 관세, CPI 등 시장 예측이 어렵다고 판단되어서 금일 트레이딩은 진행하지 않도록 하겠습니다. 자, 소통방은 여기서 바로 종료하도록 하겠습니다.
Has been hurt by tariffs on top of weak sales, but it did report a good second quarter recently, so guilt in thinking that it could help turn things around for this struggling company. And worth noting again, Intel, because it is a new day for this company. Shares are up 2.6% with the CEO back in President Trump's good graces. They met at the White House yesterday, and apparently, according to President Trump's social media post, the meeting went well with him calling Lip-Bhutan an amazing man with an incredible story. Quite the contrast from just days ago when he was asking for him to resign over his alleged ties to China. So they left things on a positive note, and we may see a fresh pledge from Intel on U.S. investments. John?
Yahara, thank you. Appreciate it. Stock is higher by 2.6%. On our radar this morning, China urging local companies to avoid using NVIDIA's H20 chip, particularly for government-related purposes. Sources telling us here at Bloomberg that China aims to shift away from Western chips in favor of local alternatives.
So two things going on here with Beijing. One, they're concerned about some of the potential location tracking, they say, coming out of U.S. chips. You see NVIDIA really pushing back against that. And also, they want to make sure that their own domestic champions are the one that their firms are relying on. What's interesting about this, and according to Mackenzie Hawkins, the lead journalist on this story, after the U.S. said it would resume allowing these sales to go through, you've seen it in Chinese media basically saying stay away from these chips. But now that we've learned they've sent this guidance, there's more urgency from Beijing because the Trump administration told NVIDIA and AMD, go ahead, get those export licenses as long as we get 15% cut.
Hugely controversial 24 hours for this sector. In just a moment, we'll catch up with Angelo Zeno of CFRA to get his views on that. So stay tuned for that. I wanted to squeeze in this story as well that the president is tapping E.J. Antony to lead the Bureau of Labor Statistics after firing the former head of the agency. Trump posting on Truth Social that Antony, who comes from the Heritage Foundation, will ensure that the numbers released are, quote, honest and, quote, accurate.
So the concern is because this individual is highly political and very partisan, and even there's a ton of pushback from conservative economists, the question is, will this undermine the data? Will the data just be seen as political? And I still wonder whether or not he can actually get through the Senate. Libby Cantrell, after the firing of the BLS chief, put out a great note and was talking about the fact that this individual needs to get through a subcommittee, and that on that subcommittee, where they cannot lose a single Republican vote in order to make sure they can advance to a full hearing, there are individuals who have not been afraid to go against this president, voice their concerns, senators like Susan Collins. So potentially this might end up not happening at a very low level in the Senate. This person might not even see a hearing.
I think we've got to draw a distinction between dependable and credible. The data, when it's released, in the minds of a lot of people on Wall Street, isn't dependable because it's revised so much. It's prone to heavy revisions. But the process, the perception of the process on Wall Street is highly credible. And that's what we're talking about this morning, the credibility of the data. and whether this will undermine it or enhance it. I think a lot of people on Wall Street share the views that we should have a look at the process, maybe enhance the credibility of that process, and then we can make it maybe more dependable. I think that's a worthwhile pursuit, and we've talked about it endlessly over the last week. With this selection, if it becomes heavily politicized in Washington, particularly the confirmation hearing, it's not going to help things. And you heard from Torsten Slock of Apollo, this stuff is very, very asymmetric. And a simple way of saying that is just look at how we treat Chinese data. Every single month it comes out. We've been doing this for years. When it's good, we say, can't be that good. And when it's bad, we say, it must be really bad. And you don't want to see that happen with US data releases.
Absolutely not. It undermines the institution, and also it undermines the market confidence of that data. The best case scenario could be if this individual doesn't talk about the data and just runs it as an independent institution, leaves it up to the statisticians, which, by the way, the commissioner only sees the report a day or two before it goes to the president of the United States. And maybe this person, given his close proximity and relationship with President Trump, could actually get the Trump administration to lift the hiring freeze. Maybe they get more statisticians. Maybe they look at AI advancements on how to actually make the data more reliable.
That's what a lot of people would like to see in Washington, that's for sure. That's the latest on the BLS. I wanted to squeeze in this as well. The president downplaying expectations for his upcoming meeting with Vladimir Putin. Trump describing it as a feel-out meeting where he plans to tell Putin to end the war in Ukraine, but says they might leave without reaching an agreement. You'll be there. How high are expectations?
Well, I think the president just really dialed down those expectations. And this is what I said yesterday going into this meeting. My thought process was always, as Trump said, feeling it out. This is basically a beginning of a process. But even if the president is able to say there's not going to be a peace agreement from one meeting when also one party is not there in terms of Volodymyr Zelensky, but if this is a start of a process to hammer out really difficult long-term concerns, especially security concerns, then potentially this is a path to getting to that bigger peace agreement.
That meeting's set to take place this coming Friday going into the weekend, so look out for that. Let's turn back to technology. Sources telling us here at Bloomberg that China is discouraging domestic companies from using NVIDIA's H20 chips. Angelo Zeno covers NVIDIA for CFRA and has a buy rating on the stock. Angelo joins us now for more. Angelo, welcome to the program. So you've talked a lot about getting access to the Chinese market and the extent to which NVIDIA has de-risked their exposure to that story, but we'd just love your initial reaction to the news of the last 24 hours. Truly unprecedented.
Yeah, no, absolutely. It really is unprecedented, and it'll be interesting to kind of see how this kind of changes the dynamics, for the tech industry and the semiconductor industry in the future, as well as potentially other industries. But I would say, kind of on the surface, I think this is pretty good for both sides in many respects, especially for a company like NVIDIA. I mean, it does now give them access to the second most important semiconductor market out there. So they are going to get significantly higher revenue. In the, we think the run rate is north of 30 billion at this point in time for this company. But, more importantly, the addressable market expansion story, the broadening expansion, customer base expansion story here, greater diversification and what have you. Great for the long-term potential of this company. Access to more developers is a huge key for Jensen Huang here. Half the world's developers are in China, so that's a huge part of the story here for NVIDIA and even an AMD out there. And then, we think also it helps kind of potentially slow down the Huawei story, right? I mean, there's been a lot of fear that NVIDIA not being in China would only strengthen Huawei, and by now NVIDIA kind of being able to go back into China and even potentially at some point, rolling out a tempered down version of their Blackwell chip, I think gets developers more, tied to NVIDIA's ecosystem, and hopefully slows down that Huawei story.
Angelo, often difficult to get access to decent market data out of China, but I'd love your read on things at the moment, just how you're running the numbers. Can you share with us what you think the market share of Huawei is currently in China? And given that the last 12 months of business for NVIDIA has been highly disrupted, how you think about things looking 12 months out, their share of revenue going forward, and ultimately the kind of slice that the White House can anticipate?
Yeah, those are all great questions, right? And to your point, there's that very limited data there. I think when you think about what we know is, there was basically potentially an $8 billion run rate for NVIDIA just a couple of months ago. And when you think about what Jensen has said is, he viewed the 2026 market as potentially a 50 billion or so addressable market in China next year. And our view is Huawei has gotten stronger here over the last couple of months. We do think Huawei with their next gen chips in 2026, and the fact that China does want to continue to support that local brand, and Huawei being that crown jewel that they are, will continue to allow them to gain more share on that side of things. But our view again of that $50 billion market, Nvidia should be able to take at least 30 to 35 billion. And again, that doesn't really assume much higher growth from the current run rate. So we do think there's upside to that, especially if there's a tempered down Blackwell chip that does launch into China here over the next couple of months. And on the AMD side, it's going to be a lot smaller in nature, but we think at least 3 to 5 billion from their perspective. So you could almost kind of back into what Huawei would be on that side of things. But Huawei is going to be kind of a key story for China here over the next couple of years. And as far as the administration is concerned here, I do think they do want to make sure that I think their growth agenda really over the next couple of years under the Trump administration is going to be tied to AI. So having access to those developers, what Jensen is kind of throwing into the U.S. administration, I think means a lot to how the relationship between China and the U.S. is going to go here.
Does it basically mean that export licenses are now for sale in the United States?
I think I think when you think about the U.S. administration here, I think they've got a pro-economic agenda more so than anything else out there. So if you're kind of asking me, is there a price for President Trump here? I think under the right situation, I don't want to say he can be bought, but in many respects, I think there is a certain price that can be paid to a certain degree, right? I think there are definitely national security issues tied to semiconductors here. But I think maybe instead of being 3 to 4 generations behind, if you're potentially only 2 to 3 generations behind, or 1 to 2 generations behind, I think there are conversations that can be had with this administration, if the price is right and the trade deal is correct.
So if China is telling its firms to snub the H20, what chip do they want to get their hands on that potentially the Trump administration would have put a price on?
Yeah, I mean, listen, I think when you think about the Chinese market here, it is really all about the developers, and the developers continue to be really tied and tethered to NVIDIA's software ecosystem, and that's why it's really important for developers in China to have access to the H20 right now. And again, I think ideally, the H20 is not suited for machine learning. It's great for inferencing, and I think similar when you see a tempered down version of a Blackwell chip. Again, it'll be Blackwell is kind of this inferencing massive platform out there. So I think when you think about the Chinese, when you think about China, they'd love to have that next gen platform, but I don't know if there's kind of a situation out there where they're going to exactly get what they want from the U.S. administration. That is kind of the next latest and greatest chip.
Angelo, appreciate reaction. Thank you, sir. Angelo Zeno there of CFRA on NVIDIA and the developments of the week so far. Let's get you an update on developments and stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. The Trump administration is set to have expanded its list of potential replacements for Fed Chair Jay Powell. Sources telling us here at Bloomberg the central bank's 2 vice chairs, Michelle Bowman and Philip Jefferson, are now under consideration, along with Dallas Fed President Lori Logan. Meanwhile, Citi CEO Jane Fraser is in Mexico City for talks with President Claudia Sheinbaum. Sources telling us here at Bloomberg they're discussing a potential public listing of Citi's retail Banamex unit. It's unclear if Sheinbaum is imposing any conditions on the sale or IPO of the unit. And Ford has unveiled a $5 billion plan for a new line of budget electric vehicles, starting with a $30,000 pickup truck set to roll out in 2027. CEO Jim Farley calls it a bet to take on Chinese rivals, warning there are no guarantees in the unpredictable U.S. EV market, which, as we know, has been struggling as of late. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara in about 30 minutes' time. Up next on the program, dealing with China.
We've been dealing very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America. They've been dealing quite nicely. The relationship is very good with President Xi and myself.
Up next on the program, we'll catch up with Elizabeth Economy of the Hoover Institution. Live from New York City, you're watching Bloomberg TV.
Our applications have been received positively both in Kenya and UAE, and we are optimistic that we should be able to open the office in the fourth quarter. We think the Middle East have deep capital sources. It has strong logistics for trade, and it is a strong center for investment. And we are seeing increasingly the global GDP is increasingly becoming overweight in Asia and Middle East. So that linkage with the middle income segments growing in India and China, they will provide a very strong market.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Inflation data 42 minutes away. The estimates look like this. Core CPI month over month 0.3%. That's the median. The range is wide, 0.1 to 0.4, and the uncertainty is high. This from Citi just moments ago. Andrew Honhorst expecting the larger and more widespread upside to goods prices not likely until the fall. This is going to take a few months. That's the latest data you can anticipate in about 40 minutes time. Here's the price action going absolutely nowhere going into it. We're down just 1/10 of 1% on the S&P. Similar move on the Nasdaq 100. And the surveillance elsewhere this morning dealing with China.
China tariff deadline is tonight, but do you plan to extend that?
We'll see what happens. China's been, we've been dealing very nicely with China, as you probably have heard. They have tremendous tariffs that they're paying to the United States of America. And we'll see what happens. They've been dealing quite nicely. The relationship is very good with President Xi and myself.
Here's the latest this morning. President Donald Trump waiting until the 11th hour to extend the China trade truce for another 90 days, saying all elements of the agreement remain the same. Bloomberg's Enda Karen joins us now for more. Enda, welcome back to the program, sir. It's been too long. Please translate the following. They've been dealing quite nicely. The relationship is very good with President Xi and myself. What does that mean, Enda?
Well, it certainly means they've got a new window now for negotiations, Jonathan, on these tariffs. You remember the tariffs, had that pause not gone into effect, you would have been talking about tariffs in the 50-odd% range today. Instead, they're sticking at that 30% area. Obviously, the effective tariff range is much higher, but the broad point is tariffs are on hold for now, a new window for negotiations on all those topics such as export controls, fentanyl, maybe more soybean purchases, and of course, excess capacity on the Chinese side. So all these issues are on the table, and on paper at least, taking this at face value, the thinking is it may lead to some kind of agreement in the fall when the two leaders have an opportunity to meet at one of those fall summits, perhaps one in South Korea, for example, and perhaps they can ink a kind of a trade deal there. But as I say, that's the headline take on it. Obviously, under the bonnet, there are a lot of tensions and differences still to be played out on all of this.
And Karen, down in Washington, D.C. Let's explore some of those differences. Joining us now, Elizabeth Economy of the Hoover Institution and the former Senior Advisor for China in the Commerce Department under President Biden. Elizabeth, welcome back to the programme. It's good to hear from you. I want to lead on your expertise here and your experience, and something I know you're thinking about at the moment. Are we blurring the lines between national security and trade?
Yeah, I mean, I think that is a question that was clearly raised over the past week or two with President Trump's decision to reverse his administration's earlier decision, April decision, to put the export controls on NVIDIA's H20 chip. Typically you put an export control on technology that you believe could contribute to, a country or companies in that country developing military capabilities that will undermine your national security. So that was the decision that the administration made just in April. And then we saw, just earlier this month that the president reversed that decision without any explanation as to why that decision was being reversed. And I think it points to a larger challenge with this administration in that they have not yet articulated a real China strategy. We don't know whether this president considers China to continue to be the greatest long-term strategic threat, which is something that his first administration did put out there as part of a China strategy. That helps an administration set priorities, understand the trade-offs that you're going to make or not make. But without that kind of overarching framework, we don't know, where this president is coming from, where he's going, whether everything is up for negotiation moving forward.
Elizabeth, given your work in the Commerce Department, have you ever seen anything like this? Some corporation able to get their hands on a license because they're willing to give some of the revenue back to the U.S. government?
No, I mean, that was certainly a new twist. But even taking one step back from that, it's a new twist to have the head of the Bureau of Industry and Security, Jeffrey Kessler, go to London to be part of the trade negotiations with China. In the Biden administration, and frankly, in all previous administrations, you would never consider linking export controls with trade negotiations. Export controls deal with broad issues of foreign policy and national security. Tying them in some way to trade really makes no sense. But that's what this administration has opened the sort of the door to. So I think it's a bigger problem, even more than just this one-off decision, is just this new world that we found ourselves in. And as far as the 15% revenue, the sort of NVIDIA and AMD having to give 15% of their the revenues from the sale of these chips back to the U.S. government, of course, that only sort of amplifies or reinforces the sense that somehow our national security is up for sale. Because, does that mean that all chips moving forward, or even other goods that the United States, sells to China, can all then be subject to some kind of new tax of some sort, and the revenues will have to come back to the U.S. government? It really is fundamentally changing the nature of the interrelationship between national security and trade, and frankly, just trade generally.
There's a number of issues brewing between these two economies. Fentanyl, China continuously buying Russian and Iranian crude, disagreements about U.S. business operations in China. When they sit down, what do you think is the U.S.'s main goal out of this relationship?
I mean, I would have said in the first Trump administration that there was an emphasis placed first on, of course, securing these big purchase agreements that, again, President Trump seems to place as a top priority. He mentioned just yesterday or the day before having China quadruple its purchases of soybeans. Of course, China's already diversified away from the U.S. It gets 70% or more of its soybeans from Brazil now because of the tariffs that the president began, the tariff war that he started when he first came into power. But I think, number one, yes, getting more purchases from the Chinese. But I think also the U.S. wants a secure and stable supply of rare earth elements from China, which are, of course, essential for both our national security and technology industries. And we saw what happened when China put the squeeze on those, earlier, just a month or two ago. Companies in the United States really began to feel the pinch. So I think that's probably the second priority. And then all of the trade adjacent issues that you just mentioned, fentanyl, China's economic support for Russia in its war of aggression against Ukraine. TikTok is still standing out there. But I think those fundamental issues around the Chinese economy, things like China's export of its overcapacity in many areas of core technologies, I think those are going to be very difficult for the Trump administration to make progress on. I don't think they have the leverage that they need, or maybe that they even think they have, to get China to sort of fundamentally change the way that it does business.
We're up against the clock here, but in the 45 seconds we have left, Elizabeth, why has it been so difficult to convince the Chinese they need to rebalance their economy when so many economists agree that it might be good for them?
I think Xi Jinping has a vision of how the Chinese economy should work, which is reliant on exports and heavy investment, investment now into core technologies. And he believes it is working for the Chinese economy and is willing to suppress Chinese consumer demand and Chinese incomes to achieve what he believes will put China in a stronger long-term footing moving forward.
Elizabeth Economy of the Hoover Institution. Elizabeth, thank you. Appreciate it as always. That final point is so important. Treasury Secretary Scott Bessent has been on top of this now for quite a while. Pushing this economy, this country to rebalance is a big goal of his. It's incredibly difficult to achieve.
Incredibly difficult. And even when the U.S. was pretty much taken off the market for them with those sky-high tariffs, what did we see? We saw their imports, their exports into other economies like the European Union actually go up. They will find a place to dump.
Up next on the program, one story dominates everything in financial markets worldwide. Inflation data on deck. 34 minutes away. We'll catch up with Greg Peters of PGIM Fixed Income, Sucharita Ghazali of Forrester, Tiffany Warning of PIMCO, David Kelly of JP Morgan Asset Management. The third hour of Bloomberg Surveillance. Up next.
Single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And, the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We published a story recently about the explosion of robotic companies and innovation in China. I think we said there's something like 50 or 60 robotic startups in China. Are we behind, and should we be concerned about that?
I think as far as the state of innovation, no. Most of those robots aren't built for work, for the things that, which is the entry point for these robots today. They can do some interesting things. A lot of times, It's backflips or making coffee or something, but not really useful work. These robots can pick up to 50 pounds on our next generation. So they're great for the education of robotics, getting people interested. But as far as humanoids, they've got to check that safety box before they can come into any of the facilities here. And that's a big bar that we haven't seen much of out of the Chinese robots.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We've been calling this environment stagflation light.
You're going to have inflation that is just kind of sticky, but you're not necessarily going to see a big pop.
We're not expecting a reacceleration.
What we should be concerned about is, do we have a persistent uptick in inflation?
It's also quite possible that we'll see a slowly increasing inflation rate.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. The third hour of Bloomberg Surveillance starts right now. Looking ahead to tomorrow, this just in, Treasury Secretary Scott Bessent in the studio here in New York City tomorrow morning, 7:30 Eastern Time. Get that one on the calendar. Don't miss that and don't miss this. 30 minutes away, inflation data. Here are the expectations. The median guess, 0.3% for core CPI, month over month for headline 0.2. For year over year, we could creep back into the threes going into the Federal Reserve meeting next month in the middle of September. Equities at the moment have been a snooze all morning going into this. Futures unchanged on the S&P, unchanged on the NASDAQ.
This is why the conversation tomorrow with the Treasury Secretary will be so important, depending on what we see from this data. How much of this insight will we get from the data on Trump's tariff policy? Are we finally starting to see the trade policy creep into consumer prices? And this is something, Jonathan, this administration, when they were on the campaign trail, ran on. We will make it a more affordable America. Well, is that going to be true, depending on these numbers we see later this morning?
This will shape a lot of guesses about what the Federal Reserve will and won't do come September. The man in charge of what this might look like next year is the President of the United States. And the man in charge of the list that will land on the President's desk is the Treasury Secretary. And that list to replace Chairman Powell is getting longer. It's not getting shorter.
It's getting a lot longer. There's about a dozen names or so now, I would say, 10 to 12 names on this list. And Celia Mosin, our colleague in Washington, D.C., has added last night 3 more. Michelle Bowman, Philip Jefferson, and Lori Logan. And you've done a really good job this morning pointing out that this list is highly credible, especially when you have the likes of individuals already serving on the FOMC and individuals like Philip Jefferson. This is someone who was appointed and then given a higher title under the Biden administration. So no one can look at this list and say this is not credible. These are highly successful economists and other individuals in this space that could potentially take on from the chair.
This story is going to play out over a number of months. The inflation story as well. Going into it, equities and bonds doing nothing. I've talked about stocks, bond yields this morning, almost totally unchanged on 10s at 429, on 2s at 377. Coming up this hour, we'll catch up with Greg Peters of PGIM Fixed Income with risk assets holding steady. We'll speak to Sucharit Gadali of Forrester on the state of the US consumer, plus David Kelly of JP Morgan Asset Management reacting to that inflation data. We begin this hour with stocks little changed as markets await the latest read on inflation. Greg Peters of PGIM Fixed Income writing, higher effective tariffs are now a reality, but their impact on activity and inflation in the US and the rest of the world is still unclear. Greg joins us now for more. Greg, welcome back to the show, sir. It's good to see you. Let's talk about what you and the team are looking for in 27 minutes' time.
Yeah, so I think we're largely in line with consensus. There's a lot of focus, obviously, on this print. I think the bias is for anything kind of below 0.4 on core is a signal for the Fed to ease in September. Anything above calls that into question. So I think there's a real skew here. But you know what I haven't heard talked about a lot is the shelter component, which is a very large component to the overall CPI. It might not manifest itself in this print, but what I think you'll see over the upcoming months is this push-pull between, yes, you will see inflationary effects of the tariffs, and you're seeing it already, but that's going to be almost completely muted by what's happening on the shelter component side. And so I really don't see inflation getting out of control here, maybe moderately higher, but if anything, I see the bias lower, not higher inflation.
Greg, let's just stay on that theme. It's an important one. The offset that you might get from services inflation. If you're on the FOMC right now, is there good reason then to look through what you might see develop on the good side and put some more weight on developments on the other side?
I think so. I mean, I think that's the story. I mean, it is manifesting itself in payrolls too, and the labor force, right? So what you're seeing is companies have a couple decisions to make, of course, you know, whether they eat the tariff, they lay off workers in order to defend margins, or raise prices, right? And what I think you're seeing is just a cooling in the job market writ large, and I think that's due to tariffs. And I think that should be the focus of the FOMC. And my suspicion is anything other than a really hot print around, you know, CPI will, you know, move them forward as far as the rate cutting cycle is concerned.
Greg, do you have an understanding yet of exactly how the tariffs are impacting consumers? What percentage are they paying if, say, the new average rate is 15%?
I don't think we know, right? This is what makes it so challenging. I know it's a terrible answer to say we don't know, but that's the right one. But I think we'll know more over time, right? We're still in the very early stages. There's been an inventory rebuild. There's been an ever-changing kind of tariffing rate. So I just don't think we know yet. But I do think over time that cost will be passed on. And once again, it's going to be passed on either through less labor demand or increase in prices. But I'll tell you what we are seeing is that companies that are actually more levered, that have to defend their margins and must pass those price through, they're actually doing so. And companies that have a little more wiggle room, they're trying to buy share, and they're allowing kind of prices to remain fixed here. So over time, I think that'll converge, but that's an interesting development early on, I think.
Well, if you don't know and the Fed doesn't know, how much optimism are they going to have basically in September when the meeting rolls around to cut rates?
Well, because I think the focus will be on the labor side, and rightfully so. So you are seeing a cooling around labor, and then ultimately the tariff inflationary impact is a quote-unquote one-time impact, right? So it's not persistent as far as the change is concerned. Yes, that inflation's in the system, but doesn't obviously continue to rise necessarily. So I think the focus will be on labor and the economy more so than the tariffing effect.
So, Greg, I wonder how well
received
received that might be for the rest of the market. If we can start talking about what this could mean for bond yields, if you begin to get a sense, if the broader market begins to get a sense that this Fed will prioritize one side of the dual mandate over the other and begin reducing interest rates with headline inflation maybe back into the threes, does that unlock higher yields at the long end?
Well, I think it's a curve steeper no matter how you look at it, right? So, you know, you're seeing that play out. I think there's more room for that to go, of course. But yeah, I mean, there's a variety of different reasons why I think back-end yields will remain stickier relative to the front end. You know, risk/term premium is one measure of that. And that's why I think what's kind of lost in here is that all this focus on the Fed reducing interest rates in order to get mortgage rates down and help the consumer, so on and so forth, that's going to be offset by the term premium effect, right? So you're not going to see the same pass-through into mortgage rates, as an example. And I think it's going to be somewhat of a self-limiting strategy.
We saw an episode of this drama just last year. Greg, you remember that? They cut interest rates by 100 basis points. Of course, that anchors the front end. Long end sold off. Do you see reasons for a repeat then? And what was the lesson from that experience? Is it the same thing all over again?
Yes, I do think, you know, it's the same thing. What's interesting is that I thought the administration was very much attuned to that as well, but I think they've kind of shifted the narrative along the way. But yes, I do think that the bond market is going to reflect these additional risk factors, namely the debt and deficit, mainly the kind of the pushback around foreign demand. So yeah, all else equal, I don't think you're going to have the same response to the belly of the curve, the back end of the curve, to the front end that you ordinarily would.
Now, Greg, does that lead to tighter financial conditions overall? What would that mean for broader financial conditions?
Well, it should, all else equal, but financial conditions are just incredibly easy right now, which is why it's often hard to make the argument that policy is currently restrictive, right? If you just look at financial conditions. But I think over time, just that beta effect, or less of a beta effect, where the 2-year will, let's say, rally 100 basis points, and the 10-year will only rally 50, just as an example, I think that'll have an effect over time, and that does hurt consumers over time, which is why it's just incredibly important to show some path around the fiscal side, because I think what the bond market's looking for what is a greater focus on the fiscal. Now, somewhat ironically, the tariff income that's coming in, bond investors are looking at that and they say, wow, this isn't so terrible. But the question is, will that remain in place or not?
Greg, base the question. Just play this out. Let's just think about things. Let's say the courts come out and say these tariffs can't go forward. They vote against them. Let's go with that. Greg, what would that mean for fixed income? What would that mean for bonds? Would bonds rally or would they sell off?
Well, I think it would just enhance the curve steeper. I think what you would see is just additional kind of movement or lack of movement, I guess, in the front and back end. That just puts more pressure on the fiscal story and forces the government in ways to how to kind of cut spending. And I think we all know how difficult that is. So yeah, I think that's bad for the bond market, just because those revenues are desperately needed.
Greg Peters, a PGIM Fixed Income. Greg, appreciate the outlook. Greg Peters there, looking ahead to inflation and looking ahead to what might happen if the courts strike down these tariffs.
Well, two things I'd say. It would definitely hurt their talking points, because a lot of the times when they talk about the offset to the one big beautiful bill is the fact that the CBO does not dynamic score with the tariff money coming in. So that's their first issue. The second, though, I would say is that we might get a knee-jerk market reaction, but then the market would realize the tariffs can stay. They're just going to have to use a different path forward. No more IEEPA. They're going to have to use 232, 301. There are other ways to enact a tariff agenda without using this broad sweeping IEEPA plan.
It gets messier, potentially more volatile. Nothing volatile about this morning so far. And that might change in about 20 minutes when inflation data drops. Let's give you an update on stories elsewhere so far this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Chinese authorities are discouraging local companies from using NVIDIA's H20 processor, especially for government-related purposes. Sources telling us here at Bloomberg that Chinese officials are worried the chips could have location tracking capabilities and remote shutdown capabilities. NVIDIA denies that. Sticking with China, Chinese real estate giant Evergrande Group will be delisted from Hong Kong's stock exchange. The move marks the end of an era, with Evergrande at one point being the country's largest developer by sales, but its downfall symbolizing China's sweeping real estate crisis. Shares will be removed on August 25th. And for the Swifties, Taylor Swift has announced her 12th studio album. Swift revealed the new album titled The Life of a Showgirl during a cameo on the New Heights podcast hosted by her boyfriend, Travis Kelce, and his brother, Jason. There are no details on a release date for the album. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Thank you very much. Up next, the morning calls, plus Sucharita Kodalia Forrester with a read on the US consumer ahead of a key inflation print. From New York City, this is Bloomberg.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The number this morning, what is most important is not only what's happening on the good side, where most of the worries are about inflation, but the fact that ISM services paid for the last several months have started to move higher. Service sector inflation could also be a very important part of the number that comes out here at 8:30.
Torsten Stark of Apollo, just absolutely fantastic. Joining us on the programme a little bit earlier, anticipating the data point we're all looking forward to. 15 minutes away, inflation data in America. Equities trading water into it, unchanged on the S&P, likewise on the Nasdaq 100. That's the price action. Here are some morning calls. First up, Baird, upgrading Starbucks to outperform, citing confidence in its turnaround strategy. Your second call from JP Morgan, raising its price target on Micron to 185, emphasizing strength in pricing. And your third and final call from Loop Capital, upgrading Five Below to buy, highlighting recent merchandise and pricing changes. That stock is up by 1.6%. Let's stick with the consumer. CPI data just minutes away. Sucharita Gadali covers retail for Forrester and joins us now for more. Sucharita, welcome to the program. Welcome back, I should say. Let's look ahead to this data point in 14 minutes' time. What's the pass-through that you've gauged so far from the tariffs, which are now fixed in many cases, to the consumer?
Well, we haven't seen the tariff impact significantly on consumer spend yet. The consumer spend levels to date seem to be relatively resilient, although the story is varied depending on the kinds of retailers that you're looking at. It does appear that a lot of shoppers are trading down to value merchants, whether it is the dollar channel or it is the mass merchant channel through stores like Walmart, or even off-price stores like a TJX. So that's certainly what we seem to be seeing, is more of the psychological impact of what could be tighter wallets that shoppers need to have, versus necessarily that they're seeing any inflationary impact of tariff prices being passed on to shoppers.
Are you gauging a much more limited price tolerance this time around compared to, say, the inflation scare coming out of the pandemic?
Well, I think that there's a lot that remains to be seen. It depends on which categories that are going to be facing those higher numbers, where we've seen a number of inflationary issues where we saw them following the pandemic, was in a lot of very prominent shopper-facing items, primarily whether it was gas prices or it was grocery goods, things that you purchase on a regular basis. And when those are higher, there's sticker shock. What we've seen is a number of those goods be more normalized now. We're actually seeing deflation in categories like apparel, which also are extremely consumer facing. And a lot of the inflation numbers now are in utilities, they are in shelter, in home, and it's in categories that are not necessarily that closely tied to the consumer goods that we saw being the biggest issues post-pandemic.
Sucharita, how long will it take to see the entire impact on the supply chain of the tariff rates?
Well, it's still it's still very early to tell, because there have already been so many preemptive actions that a number of suppliers and merchants and retailers have done. They've done everything from drastic moves like trying to reconfigure their manufacturing bases to they've front-loaded a lot of inventory earlier in the year. They may be housing some of that in bonded warehouses, or they're managing some of that merchandise in other ways. So they've offset some of the potential impact in that way. I expect by Q4 or even in early 2026, if these tariffs persist, though that's when we'll see more of the impact. But you also have to remember that a lot of this, the tariffs were a threat to try to get negotiating leverage with these other trading partners of the United States. If these other countries come to the table, we may see a lot of these tariff rulings actually being eliminated. So there's still very much, it's a work in progress and TBD what ultimately happens in 2026.
Fluid situation for sure on the trade front. When it comes to front loading, how much is left in inventory for some of those companies that went out and decided to do this?
Well, from the conversations that I've had with merchants, there is enough to take them through Q3 for certain, and even probably for some of their key goods into Q4. You have to remember that in a number of categories, they're highly seasonal. And for some of their best sellers, they have either negotiated deals that can ensure that those prices are going to go, that will hopefully they will remain stable and they'll have enough inventory to not run out of stock like we saw issues during the pandemic and following the pandemic. So I think that what we'll ultimately see is hopefully no shortages of major demand goods in Q4, but kind of that's certainly a blanket statement, and there's no doubt that there will be here and there retailers and likely certain product categories that we may see some shortages, and that may also create some panic buying for some shoppers in some categories in November.
Sucharita, appreciate your time. Sucharita Katali there of Forrester. Your question, I think, is a really important one. Tariff management has had a dampening effect on pass-through over the past few months. That could change. This is a process that's going to take time, and this is something that Andrew Honhorst of Citi has pointed out, who believes the Federal Reserve is still going to cut interest rates, by the way, but believes the goods inflation will firm up through fall.
And if your inventory is run out, what does that mean later on in the year, especially as we get closer to the holidays and Christmas? That may become politically challenging for this administration.
Mike McKee is going to join us now with a preview. Mike, welcome back to the program, sir. The data 8 minutes away. What are you looking for in just a moment?
Well, we're looking for a couple of things. Obviously, we are looking to see what tariff-influenced price changes we get. We'll look at apparel, electronics, things that are imported that might already have been tariffed, especially things made with steel like washing machines. But we're also going to be looking, and Torsten Slok brought this up with you guys, at services prices. There's a feeling that a decline we've seen in airfares is going to reverse, and the same will be true with lodging away from home. And motor vehicle insurance, that could push up the CPI faster than it had been expected to rise. And some people are saying, even some economists are saying in our survey, even a 0.4 rise in the core, which would put us at 3.1% year over year. And that would be something that would certainly get the Fed's attention.
And Mike, in some ways, is this data getting harder to forecast?
It is because of the timing of the tariffs. We know the president has threatened tariffs for a long time. The reciprocal tariffs have just gone on, but we don't know what the pharmaceutical tariffs, the semiconductor tariffs, all the other ones that are hanging out there, we don't know when they would be imposed. And so it's going to be a continuing process, and that'll be part of the debate at the Fed, because, of course, you have someone like Chris Waller saying they're a one-off. And yes, in each category, they're a one-off, but if the categories keep getting pushed out, then we'll continuously see some inflation effects as the months go by.
And Mike, I'd love your thoughts on another issue. You mentioned Torsten Slok. Torsten also talked about the BLS and the changes that he's anticipated. He pointed out that ultimately they produce the data that governs both sides of the dual mandate of the Federal Reserve. What's your reaction been to developments not just in the last week, but particularly the last 12 hours?
Well, I think that the new BLS Commissioner designate, E.J. Antoni, is going to be a quite controversial pick. He will probably get confirmed because Republicans control the Senate, but Democrats will ask some interesting questions. He's tweeted a lot of his criticisms of the BLS, calling them a random number generator from the magical world of make-believe. He's accused them of having a negative bias towards the administration. He's questioned all of their methodology. It would take a lot to change that methodology, but maybe they're just getting started on that, or maybe this is an effort to put somebody in there who will challenge bad numbers and try to get the public to believe that the numbers are wrong rather than the tariffs and other Trump policies are having an effect.
Michael McKee, thank you, sir. Looking forward to you breaking down the inflation numbers in about 5 minutes' time. Just got to put my hands up and concede that I have also on occasion called it a random number generator, and I'm not alone.
On more than one occasion, you've called it a random number generator. When I saw that and looking back at some of his old tweets, I thought maybe he's watching surveillance and taking that cue from Jonathan. But that gets to the crux of the issue the president has. Why are these revisions, not just this year, also more than 800,000 revisions last year? This is a concern for a lot of people in the market. They want better data. The issue with this individual is that even in conservative economic circles, he is a controversial pick, as Mike was just saying.
I should say, we often say that because it's prone to large revisions and not because we're accusing the BLS of any particular political bias.
Yeah.
Okay, got that out of the way with. Up next, the CPI report. We'll catch up with Tiffany Wilding of PIMCO, David Kelly of JP Morgan Asset Management. The data, 5 minutes away.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. we go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Inflation data 25 seconds away. Your scores going into CPI shaping up as follows on the S&P 500, almost totally unchanged. On the Nasdaq 100, firmer by 0.1%. Some outperformance on the Russell. The small caps are by 0.4. In the bond market, 2-year, 10-year, 30-year bond yields shaping up as follows, unchanged as well. This market has been a snooze all morning, anticipating this number. The 10-year at 428.49, the 2-year at 377. With your economic data, here's Mike McKee. Good morning, Mike.
Good morning, John. Well, let's see what we've got here. A rise in the CPI on a month-over-month basis, bang on with consensus up 0.2%. The core is up 0.3%. We'll check that out in terms of 3 digits. On a year-over-year basis, that takes us to 2.7% for headline and to 3.1% for the core on a year-over-year basis. That's more than thought, so this must have been a very high 0.3%. Trying to take a look at some of what we're seeing in terms of the actual changes in the categories, and we'll look here to see some of the ones that come up when we look at tariffs. And the tariffs for, I'm looking for apparel up just 0.1%, so not a big deal there. But used cars up 0.5%. New cars were up were flat basically on the month, so apparently auto companies absorbing some of the tariffs there. In terms of services, rent of primary residence up 0.3%, owner's equivalent rent up 0.3% for the 3rd month in a row. Medical care services up 0.8%. Motor vehicle insurance only up 0.1%. There was a thought that might be higher, but look at airline fares. After being down for 3 months in a row, they're up by 4% on the month. So that's one of the reasons that we are seeing that core rate go up. I'll look at more numbers. Let me just note that food prices were flat on the month. And you guys can check the markets and come back and I'll give you some more of these tariff numbers.
Hey, Mike, thank you. Give me some time to break down the details. Just the early reaction. The first move, not always the right move, but this is what it looks like. Equity futures positive now by 0.4%, trading on the fact that we don't have an upside surprise. That's the good news this morning. On the Nasdaq, higher by 0.5. That outperformance on the Russell continues. In the bond market, unlocking some lower yields at the front end of the curve, down 5 basis points at 371.84. Not the kind of number, at least for the first look, that derails the Federal Reserve's efforts to cut interest rates maybe as soon as September. With those moves at the front end of the curve, you look at the FX market, euro-dollar, euro stronger, dollar weaker, euro-dollar back to about 116.36.
Bang in line. So there's no real drama, Jonathan, as you would say, when it comes to this number. But we should note that for the first time in 6 months, the monthly core CPI reading failed to undershoot the median forecast. So you do have this question on whether or not does this mean this is an inflection point going forward that potentially we could see a little bit more of hotter prints.
Mike McKee still with us. That number in line for month-over-month CPI headline, stripping out food and energy, month-over-month in line as well at 0.3 versus a 0.3% estimate. Mike, you've had a second look at the numbers. What do you see now?
Well, gasoline played a big role in holding down the overall number because it was down by 2.2%. It has been up a little bit, but the seasonal adjustment for this time of year takes some of that away. As I mentioned, food prices were flat on the month and used vehicles up 0.5%. So you get a little bit of the tariff impact, a little bit left out of it. And apparel prices up just 0.1% on the month. Still looking to get to the electronics portion of this, which we should see some increases as people buy more stuff from Asia, but I'll get back to you on that one in a second.
Mike, thank you, sir. Tiffany Wildiger-Pimpos is going to join us in the meantime. Tiffany, welcome to the program. Is the door still open for a rate cut in September?
Yeah, I mean, I think the CPI was completely in line with expectations. How we've characterized the sort of tariff-related pass-through, the evidence is that it's happening, but it's happening slower than I think many people expected, going back to April when the more dramatic tariff announcements were first implemented or announced. It's happening more slowly, and across industries, you know, it's more uneven. So I think the broader story here that we're still seeing is that it's very concentrated within goods. It's happening slowly. And outside of that, inflationary pressures look very manageable. So I think for a Federal Reserve, that is a very good sign. In addition to that, there's, I would argue, better news in terms of the so-called second round effects with higher prices leading to higher wages and getting more into the inflationary process. We've actually seen inflation expectations from various surveys start to moderate. The University of Michigan survey, which we'll get later this week, the longer-term inflation expectation index for that one had accelerated more, but it's moderated more recently. So I think all of this points to, a central bank that can get on with normalizing policy rates back to neutral.
Tiffany, something we've been exploring throughout the whole of this morning, and to be fair, over the last several months, is whether the tariff story is delayed by the fact that we've seen fantastic inventory management from some of the retailers at the moment, and that maybe we haven't seen the full extent of this. When would you get comfortable that we've seen the limits of it all?
Yeah, I think we expect a good portion of the pass-through over the next several months, but I think the bottom line is that companies have room. It appears that companies have room as a result of still high margins coming out of the pandemic. Companies have room to sort of more slowly pass this on to consumers. And so what that means is that, goods inflation could be a little bit more persistent over time, but you're not necessarily going to have that bigger surge that many people expected as you get that faster price level adjustment this year. So I think for the Fed, I think that's all good news. The other thing that we see when we look at, a range of data, is that companies so far are absorbing, we think, the lion's share of the additional costs of tariffs. And as I mentioned, they can do it. Their margins were elevated post-pandemic. That has remained the case. And so they do have room here, at least the largest companies have room to sort of manage this process. And we think that's what they're doing. The other thing is the tax legislation that was recently passed, the One Big Beautiful Bill, that is, reducing the effective tax rates for a lot of companies, especially those companies that are capital intensive. They invest a lot. They're getting, upfront expensing tax credits, and that will help offset the impact of the tariffs as well. A lot of those tax credits were retroactive for 2025. So all of that just means that companies do have a little bit of flexibility here and can manage the pass-through rate.
So, Tiffany, are you basically saying that because of the One Big Beautiful Bill, companies are able to eat more of the higher tariffs from this administration?
Yeah, I certainly think that that's the case. Now what we estimate in terms of the tax savings in aggregate for 2025 is around 150 billion. The tariff tax collections that are happening, we annualize at about 350 billion. So the tax legislation is not completely offsetting the additional taxes paid by tariffs, but it certainly is in mitigating some of it. And so that's why, we've argued you'll still see, we think, some pass-through of higher tariffs onto prices. You'll get some price adjustment. But we think the risk here is just that it takes longer than many people are expecting. And the inflationary effects of this in the back half of this year are somewhat less. And again, that just sets the Federal Reserve up to, continue to restart its cutting cycle to get back ultimately to neutral policy rates.
Tiffany Wilding, PIMCO. Tiffany, thank you. It's got to catch up and get your reaction to the inflation report. The numbers just dropping about 8 minutes ago, in line with expectations. Headline month-over-month CPI coming in at 0.2%. The core number, stripping out food and energy, coming in at 0.3, leaving the door open for a rate reduction at the Federal Reserve. Weighing on yields at the front end of the curve, yields down, unlocking higher equity markets this morning as well, up by 0.5% on the S&P 500. That follows the first look at this data. Let's get a second and third look at this data with Mike and McKee. Mike, I know you've got more.
Yeah, John, we're looking to see what the impact of tariffs is, and it's very mixed. We are seeing tariff impacts in certain areas, but in some of the areas you'd think would be showing some more movement, they are not. One thing that stands out is tomatoes, up 3.3%. Remember, the president put a tariff on Mexican imported tomatoes. Coffee prices, and we've got a tariff on Brazil, up 2.3%. From Asia, household furnishings are up 0.7%, but appliances down 2.2%, including washing machines down 1.8%. They had moved up a lot in the last couple of reports. Video and audio equipment up 0.8%, however, while toys are only up 0.2%. So you get some that are up, some that are not. There are obviously some pass-throughs from overall tariffs, but we're not seeing a major increase in every category, at least not yet.
Mike, do you think the head of the BLS can get a job back now? I'm joking. Don't answer that. Michael, thank you. Michael McKee, thank you very much. David Kelly of JP Morgan Asset Management with us around the table. David, good morning.
Morning.
Not going to ask you that question. Just want to ask you the following. When will you be comfortable that we've seen the limits of this? How many more months of data do you need?
Oh, we're just getting started. I mean, what we saw today was plenty of inflation without tariff effects. We didn't have a big increase in new car prices. We didn't have a big increase in apparel prices. But let's look at where we did see an increase. Airline fares have come down a lot because the airline industry was very weak. But if you look at the recent data on people going through TSA checkpoints, it's firmed up. And so domestic airline travel is now back on a positive year-over-year basis. We've got a lot of fiscal stimulus going to kick into the economy early next year. But also in the tariffs, even in July, we saw a lot of money collected, but it still equates to about a tariff rate of about 8%. We think this whole tariff rate is going to go up to about 14.5% measured by that later. So we've got most of this tariff increase still ahead of us in terms of just affecting the data. And then, you know, people say, oh, the retailer's going to eat it. No, they're not. They just wrote the check. So of course it looks like they're eating it. Walmart writes a check, but eventually they're going to pass it on. And yes, they've got good margins, but how do they manage to sustain these margins? Because they're great at figuring out how to stiff consumers, and that's what they'll do. And so this thing will feed through. It's just a matter of a number of months. And you know, inflation's going up, but it's going up very steadily, and it will be above, we think, about 3.5% in CPI by the end of the year.
You've made two important points here. One is that you believe that goods prices will continue to firm through the year ahead, and that you're not going to see an offset from services. Is that right?
That's correct, because what's going to happen is the economy is going to be slower in the second half of this year as this goods inflation feeds through. But the big kicker here that people are not talking about is the huge rush of income tax refunds that's going to kick in at the start of next year. It's going to be like an extra stimulus check. And that, you know, we've seen what happens. You give him as a cookie, he's going to want a glass of milk. You give an American consumer a stimulus check, they will spend it. And you're going to have a surge of spending in the first half of next year with limited supply because of all these tariff and supply chain disruptions. You're going to get a second round of inflation, which is going to sustain inflation well above 3%, which begs the question of, why again is the Fed cutting?
Well, that was
if inflation's heading the wrong way slowly.
That was my next question to you. What does the Fed do with this kind of data?
They should stay on hold. I think there's very little argument that in favor of the Fed cutting rates. Rates are not abnormally high. I don't know why they think 3% is a neutral rate in the long run. It doesn't equate to history before the pandemic. I think something 4.5% is more of a neutral rate anyway. But there is no urgency about cutting rates. Now, I think they will cut rates for political reasons, which is very unfortunate, but I don't think they should based on these data.
As you're talking, traders are actually adding to bets of September Fed rate cut because this basically came in line when it comes to inflation. But why for political reasons when actually we saw a trend, 3 months of not so great unemployment numbers?
Well, yeah, but if you look at the overall mosaic of employment, it's still growing. And remember, we've got a labor supply problem too. And one of the things that Jay Powell pointed out is he's not looking at payroll growth, he's looking at the unemployment rate. If we've got fewer jobs being created, but we've got fewer workers, then you've still got a certain amount of inflationary pressure. You just said that the growth potential of the economy has gone down. Well, they can't do anything about that. So if you're not, this economy is not going to spark a huge surge in unemployment. And I think the basic point is by the end of the year, we think maybe 4.5% unemployment, we think over 3% in inflation. They're missing their inflation target by more than unemployment. Therefore, they shouldn't be cutting.
You're just telling this up, though, but you believe they will be cutting. So you've got a Federal Reserve cutting interest rates at a time when inflation is picking up, and the key phrase you used was second-round effects. You don't believe this is a one-off. You're actually going to see second-round effects in the first half of 26. Yeah. What's your market view on top of that?
Well, so I think the market view is not too bad because I think for political reasons, I think unfortunately the Fed will cut twice this year, maybe 3 times next year. They'll get going and cutting. It's not going to really change the economy that much. But if you bring bring short rates down enough, it does push extra liquidity into the equity market. And so you could just maintain these bubbly asset markets. I mean, what we've got is a tortoise of an economy and a hare of a market. And we're just giving more sugar to the hare.
That's the stock story. What about the fixed income story for bonds? Because we've had guest after guest come on this program and say, get ready for a steeper yield curve. They go aggressive. At the front end, you're going to see yields lower. At the long end, you're going to see a questionable development.
Well, you know, it's again, it's hard for a tortoise-like economy to generate a really steep yield curve. So, but I think you could see rates move up a bit. I wouldn't be long duration here because I don't think this economy is going to go into recession. I think by the time the tariffs really hit, we're going to be on the verge of fiscal stimulus because of this income tax refund thing, and that will keep this economy moving forward. And if the economy is moving forward, you've got inflation printing at 3, you shouldn't really have a long bond lower than 4.2.
What do you think inflation is going to peak at in the next 12 months?
I think CPI is going to peak at about 3.5% and then hang there between 3.5% through about June of next year. And then finally it's going to come down again because this is sugar. You know, these income tax refunds, it's a sugar rush. It's not protein. It will wear off. And then by the end of next year, then I think the economy is finally cooling again. Unless, of course, you get some more stimulus. And that's really the problem because if the Fed keeps on cutting rates whenever you know, the other side of Washington asks them to, then it enables more and more rounds of fiscal stimulus to always keep this economy a little bit too hot. So it's not you know, it's called inflammation. Doctors don't like it.
David, it's good to hear from you. I'm not sure if markets will like we've got to say this morning either. David Kelly there of JP Morgan Asset Management. Equities are firmer by 0.5, call it 0.6% on the S&P, and bond yields at the front end of the curve initially reacting to this data lower. They stay lower. We're down by 5 basis points on a 2-year at 3.72. The view in this market is that it's not an upside surprise and we can carry on as normal because the Fed's going to cut come September.
And they're adding to more bets that September is not just on the table. September almost feels like, for some, a done deal. But when David talks, I'm reminded of what Mohamed El-Arian has said as well, that this market inflation picture is likely going to stay around 3%. And maybe the Fed actually, Mohamed's argument was, needs to start targeting a 3% inflation rate, not 2%.
Outperformance on the small caps this morning. The Russell up by 1.25%. With an update on stories elsewhere. With your Bloomberg brief, here's Yahara. Hey, Yahara.
Hi, John. We start by recapping the latest economic data. Underlying U.S. inflation accelerated in July to the fastest pace since January amid a pickup in services prices. Core CPI rose 0.3% from June, which came in line with expectations and rose 3.1% compared to a year ago, above the 3% that economists expected. Meanwhile, President Trump has named E.J. Antony to lead the Bureau of Labor Statistics after firing the previous chief following weak July payrolls data. Antony is chief economist of the conservative Heritage Foundation and has been vocal about his concerns with BLS jobs data and revisions. The position is subject to Senate confirmation. And Elon Musk accused Apple of favoring OpenAI, saying the company makes it impossible for anyone else to reach the top of the App Store charts. Musk said Apple's behavior is an antitrust violation and stated that XAI will take immediate legal action. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate it. Up next, we'll set you up for the day ahead. Plus, Ira Jersey of Bloomberg Intelligence as traders add to bets for a September rate cut following this morning's CPI data from New York City. You're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to their job.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CPI was completely in line with expectations. How we've characterized the sort of tariff-related pass-through, the evidence is that it's happening, but it's happening slower than I think many people expected. The broader story here that we're still seeing is that it's very concentrated within goods. It's happening slowly, and outside of that, inflationary pressures look very manageable. So I think for a Federal Reserve, that is a very good sign.
That was Tiffany Wilding of PIMCO. Inflation data out just 21 minutes ago, and equities like what they don't see. They like what they don't see, and what we didn't see was an upside surprise. Equity futures positive by 0.6%. That data unlocking this move in the bond market. At the front end of the curve, yields lower on a 2-year bond yield in America right now. The 2-year Treasury yield at the moment down about 4 or 5 basis points to 3.72. With less than 1 hour to go until the opening bell, let's get you some morning movers. Here's Yahara. Hey, Yahara.
Hi, John. The bar was high for one of the year's hottest IPOs, Circle Internet, and it appears it has cleared it, with shares up 11.5% in the pre-market. That's because investors are focusing on its stronger than expected revenue and shrugging off a bigger than expected loss in the second quarter. We'll see if these gains hold given that weak spot and given, as I said, that expectations are sky high, with this stock up 400% from its $31 IPO price. What a jump. Next up, we moved on to another stock also rising, soaring 16% on holdings after delivering a surprisingly strong second quarter and lifting its outlook at a time when these footwear makers are under pressure due to tariffs, because like many others, On produces most of its shoes overseas in places like Vietnam, but it is undeterred, with the CEO saying that consumer energy remains high for its shoes. And we end on Tapestry. Shares are up 1.8%. This is a company that reports on Thursday, and ahead of that, Dana Telsey is raising her price target to $125. What Dana is saying, that results will be powered by its Coach handbag unit, which she says is resonating well with younger shoppers, which makes sense because a Coach bag will run you about $300 to $500, not thousands of dollars the way those luxury handbags are. John?
Yahara, appreciate it. Thank you very much. I wouldn't know. You might know.
Coach is actually cool again.
That's accessible.
It's kind of on trend.
Entry-level luxury?
Yes, definitely.
When did it stop being cool?
It was definitely cool when I was in high school, like, in the mid-2000s. But then it became kind of uncool, and now it's, what's old is new again.
There you go. Helpful stuff. Okay, let's get back to the market and the inflation data. Joining us now is Ira Jersey of Bloomberg Intelligence. Ira, welcome to the program, sir. Your reaction to that data from 23 minutes ago.
Yeah, so more or less as expected, but there was certainly a lot of investors that we had spoken to that were worried that we were going to get a slightly hot inflation print, particularly on the core side of things. So more like a 0.4 instead of a rounded down 0.3 as we received. So I think that's one of the reasons why you have this a little bit of a relief rally in the front end of the yield curve.
We've had two different reactions so far this morning, Ira. One reaction is, this is good news, leaves the door open, the Fed's going to cut in September. Another reaction, David Kelly at JP Morgan said, get ready for firmer goods inflation in the months ahead. This ain't over, this process will continue. What's your reaction, and what would you put more weight on this morning?
Well, I think that the goods inflation story is one that will probably linger for at least the rest of the year, because we don't know exactly who's going to pass through the inflation pressures to the consumer, or will that wind up being more of a margins and producer price story. And I think that that's something that we're going to find out tomorrow, right? Will we see higher goods input prices and intermediate goods in the PPI tomorrow? So again, this is not something that's going to go away in terms of core goods. But in terms of the Fed, I think that there is going to be a little relief, and the Federal Reserve could certainly shift toward thinking about cutting because of the softer jobs data that we got a week and a half ago. So I do think that this leaves the door open. Keep in mind, though, we do get another set of inflation data prior to the next meeting. So we have another CPI, another PPI, plus the July PCE deflator. So we still have a lot of data to get through before we are certain what the Fed's going to do in September.
Ira, thanks for the reaction. I know you've got a busy morning ahead of you. Ira Jersey there of Bloomberg Intelligence. Busy morning ahead of us tomorrow. Here's the lineup. Oksana Aronoff of JP Morgan Asset Management, Libby Cantrell of PIMCO, Subhadra Rajapra of SocGen, and then the Treasury Secretary, Scott Besson.
What's so exciting with the Treasury Secretary coming on is he is leading the search, Jonathan, for who could be the next Fed chair.
Looking forward to that conversation tomorrow morning. From New York City, this was Bloomberg Surveillance.
Day 5 at the Cincinnati Open. World number 1 Aryna Sabalenka had to battle the heat and Emma Raducanu on her way to the 4th round. The defending champion closing it out in the deciding set breaker after over 3 hours on court. 7 aces and 51 winners for Sabalenka in the victory. And don't forget, you can watch all the action live daily on Tennis Channel.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. we're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Inline CPI sends futures flying with 30 minutes to go until the official start of trading. I'm Katie Greifeld.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
And coming up, no surprises here. Consumer prices rise in line with most forecasts. 90 more days. President Trump extends a trade truce with China into early November, but Beijing's new guidance on NVIDIA chips may stir up tension once again, Danny.
And we're so relieved that CPI came in line that even with that story, Katie, NVIDIA is heading higher this morning. Some stocks to watch. China is telling companies, as you said, to avoid NVIDIA's H20 chips, especially for government or national security-related work, after the U.S. lifted its ban. Meanwhile, President Trump's meeting with Intel CEO Lip-Bu Tan appears to have gone well. Tan scoring more tops with members of Trump's cabinet. Katie, those shares taken off, up 3 1/3%.
Yeah, what an interesting couple of days for Intel. We'll continue to follow that story, but it's still earnings season, and Circle reported its first earnings since it went public. Now, it lost money in the second quarter, mainly due to IPO-related charges, but reported a 53% jump in revenue. That's being rewarded with an 11% gain pre-market. Danny, this stock up more than 400% since it went public.
100%. Just a slight rally there. Katie, let's get back to one of our top stories and the data this morning, where underlying U.S. inflation accelerated in July to the strongest pace since the start of the year. Let's break down that data with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, what did we get?
Well, we got a few surprises underneath the hood, but no surprise in, except for core year over year in the headline numbers, because as you mentioned, we got a 0.3% gain and not anything that's going to concern anybody on the headline. A lot of that was gasoline, the 0.2 gain there. Gasoline was down 2.2%. Core up 0.3%, but it was a strong 0.3. Services prices were up by 0.4, so it pushes the headline core to 3.1%. The Fed is going to be watching that certainly into September, and we'll see what we get when we get the August numbers for this. Goods and services both rising. Service prices kind of making people a little bit nervous. They were up, as I mentioned, 0.4%, and they're up by about 0.3, a little more than 0.3 for the year-over-year number. Goods prices rising again as well. You can see the little white lines there on the right side of the graph showing that goods prices are now rising. But the real question is what moved, and did tariffs have an effect? And they sort of did. You take a look at what was in the numbers. Airline fares were up 4% in total, and the gasoline prices, I mentioned, down 2.2%. But tomatoes, President put a tariff on Mexican tomatoes, so tomatoes up 3.3%. Appliances last month were up big because of the tariffs on steel, but this time they're down 0.2%. We buy a lot of furniture from Asia. Furniture and other household furnishings up 0.7%. So we are seeing some tariff impacts. Katie, I know you're worried about coffee. 2.3% rise. Tariffs on Brazil.
There you go. There you have it. I am curious, Mike, when you parse the different sectors trying to find the impact of tariffs, how much is that pull forward effect sort of distorting things here? Because we saw that across industries at the start of this year.
It's starting to fade some because companies have now used up their inventories. So we're just on the cusp of what's going to happen. We're going to have to watch this for a few more months because, as I say, the inventories have been worn down now, and companies will have to pay whatever they're going to have to pay for replacements. And at the same time, we're just getting the tariffs imposed in many areas, and there are more to come. So the question is going to be, how fast do they come, the pharmaceuticals, the semiconductors, and everything else, and how fast did that show up in the data?
All right, a lot to look forward to. Then that is Bloomberg's Mike McKee breaking down that economic inflation data that we got at 8:30 a.m. Clearly, the market likes it. Futures really extending their rally after we saw those numbers hit. Let's talk about trade, though, because President Trump extended a pause of higher tariffs on Chinese goods for another 90 days, taking us into early November. Here to explain is Bloomberg's global trade editor, Brendan Murray. So 90 days pause from the U.S. China said in a similar statement that it would extend its own suspension as well. What's going to happen between now and early November?
Well, the two sides are going to continue talking and trying to maintain the stability that they've managed to achieve so far. We're going to see most likely a regular series of discussions, the way Scott Bessent has led the U.S. delegation in talks with his Chinese counterparts, most recently in Stockholm. So they've gotten to a place where they believe that things have stabilized and they can start making progress toward ultimately what President Trump wants is a big trade deal and a summit with President Xi. And we're many months from that, but where we've now got some sort of process set up to accomplish what the U.S. hopes to accomplish. Of course, China is playing a much stronger hand this time around than they played in Trump's first term, and they have control over critical minerals. And they most recently have indicated that they don't really need these U.S. Semiconductors that the Trump administration has signed off on the exports of. So it's a change dynamic, but one that at least investors for the time being can breathe a bit of sigh of relief to say for the next 3 months at least, it looks like things are going to be kind of in some sort of ceasefire when it comes to tariffs.
To that point, Brendan, of China having a strong hand, prior trade deals that the U.S. reached with other nations, it was the U.S. that came in with a strong hand, and other countries basically bowing down to what America had asked of them. What does that mean about this timeline for China, and how long it will actually take to not just kick the can, but get a deal done if China does have that strong hand?
Well, I think it changes the dynamic, really. The President Trump tweeted just 36 hours ago or so about wouldn't it be great if China bought more soybeans? And, these are kind of like 2019 things, and China is now has got a much more sophisticated and complicated negotiating tactic with President Trump, rather than just we'll buy some more soybeans and other agricultural goods to appease the White House. So these other countries, Japan, South Korea, and the European Union still don't have their executive orders, so they don't really have in writing what they've agreed to in a handshake so far. Those will still have to come, and as Mike McKee suggested, these tariffs are still kind of rolling in, and they only really kicked in at a higher rate 5 days ago. So the dynamics and how they play out into the economy are really only getting started.
Brendan, thank you very much for your coverage this morning. That is Bloomberg's Brendan Murray. Now let's stay with China. Beijing is urging local companies to avoid using NVIDIA's H20 chips. The guidance is not an outright ban, rather a discouragement, particularly for government-related purposes. However, the information out with their own report this morning saying that China has demanded companies to halt NVIDIA chip orders over security concerns. You're seeing NVIDIA raise some of its gains pre-market on that report. Joining us for more is Bloomberg Tech co-host Ed Ludlow. Ed, we don't have this information match at the moment, but from what we do understand with how China is approaching NVIDIA and other high processors, just how big of a hit are they taking, even if the U.S. is allowing them to sell chips into China?
Well, there's an issue of chronology because, as Bloomberg reported, notices were sent by Chinese authorities in recent weeks, which would predate the news of 24 hours ago when the president confirmed he had reached a deal for revenue sharing 15% with NVIDIA for the H20 going to China. This is quite normal behavior across Chinese authorities and the internet watchdogs in particular to say to government entities and state-backed enterprises, do not use foreign technology if there is a security concern. The issue that the street's going to be looking at this morning is probably a little bit of rethink and remodeling on how the most bullish forecasts look of NVIDIA starting to book revenue again from China. a lot of the analyst community look at this and then the 90-day extension and see it as a negotiating tactic from China, either because they want access to the higher performance chips that NVIDIA is not allowed to send to China based on current US rules, or the opposite. They're trying to protect their domestic champions that are increasingly gaining ground in this space. Huawei has chips that are better than the H20. But I would note that, you know, there has been a move lower since that information report. The initial pre-market spike was very much in line with CPI. So there's some noise there in the market.
So you can see NVIDIA shares pretty much unchanged now on the morning. Traders deciding what to do with these reports. Ed, I do want to move on and talk a little bit about Intel here. I think if you look at the 5-day chart of Intel, it's really amazing. You can see when exactly President Trump took aim at Liputin, and you can see, of course, the reaction now that they seem to be back in good graces after Liputin visited the White House yesterday. It really speaks to how much Intel needs to curry favor with this administration, how much they're relying basically on having a good relationship with President Trump.
Yeah, last Thursday on Truth Social, President Trump called for Liputin to resign because of historic ties to China. Those ties, by the way, are well documented in the technology industry. It's been known about for a long time. And Intel's board of directors knew about them as well when they appointed him CEO. The thing is that on paper, what Intel wants to achieve as an American company that's trying to grow its manufacturing footprint in this country, it's highly analogous with the AI strategy of the administration. That is what they are focused on. Things that are tangible, can be invested in and built quickly. And, you know, the reporting is that he will continue to meet with other cabinet members. Intel has just not been there in the race. You know, they have not been put at that level that NVIDIA or even AMD have from how the president communicates to champion those companies in leading America's AI efforts.
Yeah, absolutely. That has been the narrative dogging Intel for well over a year now. Ed, I know you'll have much more on Bloomberg Tech. That is at 11 a.m. That is Bloomberg Tech co-host Ed Ludlow. Meanwhile, let's get back to these broader equity markets in reaction to that CPI data that we got at 8:30 this morning. Coming in as expected, Danny, and you can see how that is being greeted by the bulls right now. The S&P 500 higher by about 0.4%. Similar story when you take a look at the NASDAQ 100 and that two-year yield falling as people recalibrate their Fed bets.
It was definitely a bond market that was prepared for an uglier and a hotter number. So in line is good enough, perhaps going forward. The worry is that services inflation didn't come in as much as expected, and that's supposed to offset any goods inflation coming from tariffs. So one, maybe flying the ointment that might cap some of the rally from here.
Absolutely, but at least for right now, folks seem pretty happy. Better than feared, as you said.
Definitely. Well, coming up, we're going to talk earnings. Circle extending gains, even though it reported a loss in its first earnings since the IPO. We're going to have details for you next on Bloomberg Open Interest.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
In case you missed it on the close.
With regards to the electric vehicle business, when we talk about the commitment to new models and more importantly, commitment to the infrastructure to support that, what's the plan?
We're starting to see different kinds of hybrids that customers are excited about. E-revs, which go about 100 miles all electric, but then you could take a 700-mile trip once in a while. Those look really promising for a three-row crossover like Explorer. We're going very low end, super affordable EVs for urban duty cycles and for commercial. We're not going to invest in a lot of the very expensive crossovers for pure EV. We think that that's going to be a hybrid business.
What does the supply chain look like specifically for the EV and hybrid business right now?
We've moved out our cycle plans. We focused on affordable and commercial. We're fortunate we moved 3 or 4 years ago, and we could tilt to hybrid and a specific kind of EV. And the supply chain has been able to move with us so far.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Let's get you some high interest stories, a look at what's making headlines around the world. Shares of Hanes brand, they are jumping in the pre-market, up 37.5%. A report that Gildan is closing in on a $5 billion deal to buy the underwear maker. The FT reporting that the deal may be agreed to by the end of the week. Negotiations, though, they are not yet final. Sinclair shares, those are also jumping this morning, up just under 19.5%. It launched a strategic review of its broadcast business. It announced that it's considering also a separation of its ventures unit. On holding, that's also rallying this morning, up nearly 17%. It raised its full-year outlook. The Roger Federer-backed company reported better than expected earnings, had strong demand, and sees revenue growing more than 30% on a constant currency basis this financial year. Katie, I should admit my bias. I have 2 pairs of on holding, so yeah, you're welcome on.
They're hot. They're trendy. I'm more of a hookah gal, but we can get into that.
House divided.
There you go. We'll get into that in the commercial break. Let's talk a little bit about Circle shares. They're surging despite posting a one-time quarterly loss. Traders optimistic after revenue jumped more than 50% in its first earnings report since it went public. Remember, it IPO'd at $31 a share on June 4th. That certainly feels like a long time ago. Bloomberg's Bailey Lipschutz joins us now. So, okay, they had that one-time loss. It was revenue rising 53% that has traders psyched this morning.
That and the fact that there's still that scarcity value. This is still one of the better performing new companies, up about 6x from where it priced at its IPO. Katie, and beating expectations really kind of on the top and bottom line. The big question, though, is the fundamentals of the business, and we were talking about that. This is a company that benefits from shorter dated treasuries. That's where they're holding their cash. And is basically, if we do see 3 rate cuts, as investors are increasingly betting on, that could dent kind of their outlook. But the big question is, what does that mean for crypto?
I think it's fascinating, and this is really where TradFi and whatever this is really intersect. The fact that it does hold a ton of those short-term bills, as you say. So if that's the case, you get these earnings on the same day that you get CPI that people are looking to as really cementing in the idea that we're going to get a September rate cut, really not affecting the stock at all, up 14%.
No, not at all. And the one thing that we did talk to a few analysts about before earnings was this debate. If we do see the Fed cut 3 times, what does that mean for a company like Circle? And if you want to take the bullish view on the entire crypto space, well, maybe there's more leverage. Maybe there's more demand for crypto assets. Maybe there's more demand for DeFi assets, and that could actually benefit Circle. But again, that is kind of bulls talking their book to an extent.
And should say the Circle CEO is going to be on BTech at 11:30, so one to watch out for. Bailey, another hot IPO that we're going to get the earnings for is CoreWeave. How high is the bar after we heard from all the hyperscalers and the amount of spending they're doing on AI?
I think it's quite high. This is a stock that's up about 250%. We are seeing it under a bit of pressure this morning, so this is going to be a closely watched report. The big question, especially with some of these newer companies in these hot spaces like AI and computing, is what does management say on the earnings call? How do they address some of the tougher questions? Because this is a stock that's hotly debated, not only by the buy side, but by the sell side. 16 holds, 5 buys, and 3 sells. Average price target implies a 16% sell-off. So there's a lot of debate around if this company deserves its current multiple and where it's trading at. And one thing to also keep an eye on, as analysts have called out, lockup is expiring later this week. So that's going to open up about 80% of shares available for trading. That's going to be key.
Yeah, that's interesting that we're getting this report on a Tuesday afternoon. As you mentioned, the lockup expires on Thursday. How does that usually go? What does it usually look like when we see that lockup ending?
It can get choppy. The big thing with a number of these companies, this is a hedge fund hotel, if you will, as some of the skeptics put when they were going public. The big thing is a lot of the long-term investors, as bankers and investors will say, need to play fair. You don't want to see a rush to the exits. That only hurts each other. So the big thing is going to be, do we see some slow selling? What does that actually look like? We will likely see some filings on Friday if we are seeing investors going towards the exit. So it can increase volatility. But again, you have a hot stock in a hot area with a lockup expiring.
Maybe
Fireworks.
take some profit?
Exactly.
I was going to say, they're sitting on some pretty paper profits, so maybe they want to make that real. Bailey, thank you so much for joining us. That is Bailey Lipschultz. Coming up on the show, Nuveen's Chief Investment Officer, Sarah Malik, on the CPI print and potential frothiness in markets. Stay with us for that conversation. This is Bloomberg Open Interest.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The bulls will say there is further room to go in terms of positioning. However, there is also some substance to embolden the bear narrative, and in particular the fact that the average FMS cash level remains at a low 3.9%, which historically has been a strong signal to say that global risk assets are toppy, as now is a good time to retreat or hedge your position.
That was Bank of America's Elias Gallo following their survey showing that a record number of investors see stocks as overvalued. Nuveen's CIO and head of equities and fixed income, Sarah Malik, joins us now to discuss. And Sarah, I would love to hear you weigh in on this debate because, yes, okay, U.S. stocks look expensive, but then you compare that to what we're seeing in the economy, what we're seeing in underlying corporate America right now, and there's a real debate to be had.
What you think of U.S. stocks depends on 2 factors, and that's technology and also earnings growth. So let's start with the latter. Earnings growth is very strong for the second quarter. We came into this quarter expecting almost 5% earnings growth from consensus. We're going to end the quarter at about over 10% earnings growth year over year. That's positive for the U.S. economy. And secondarily, it's been led by technology stocks and that continued investment in artificial intelligence. And if you're bullish on tech and their earnings growth, tech earnings has accounted for almost 2/3 of earnings in the recent history. We are bullish on technology and the continued spending in artificial intelligence. So I think that is supportive for a stock market, which I agree is trading at a worrying premium.
Sarah, there has long been this expectation that tech dominance and especially advancements in AI would at some point mean a broadening out of the rally as other companies adopt tech. When and if ever does that play out?
We've certainly not seen the broadening of the rally to small caps or even cyclicals at this point. And I agree, you would expect to see that start to play out given the strength of the economy. But as I said, earnings have really been driven by tech stocks. So we've not seen the earnings growth to support these companies. And with the economy showing some signs of slowing, with employment missing numbers last month, that again bodes well for technology stocks, which have their own structural growth drivers. So that is a challenge where you're seeing this continued imbalance where technology is leading the way and just about everything else is getting left behind.
Well, I think it's the 5th time that I've mentioned this stat from Goldman, but I think it really encapsulates what we're seeing and what you're saying, that you think about the second quarter, you had the Magnificent Seven grow their earnings by 26%. That number was just 4% for the rest of the S&P 500. Sarah, what is it going to take to finally see earnings broaden out in a consistent way? Is it rate cuts? Is it something else?
Aggressive rate cuts. Now, given the CPI number today, odds are on the table for a rate cut in September, but whether we get 25 or 50 basis points, the question after that will be, where do we go from here? So are we going to get aggressive rate cuts that stimulate this economy even further from a manufacturing and cyclical point of view? I think that's unclear. Now, the good news for cyclicals, though, is manufacturing is coming back to the United States. One positive call we've had outside of tech is infrastructure. Not only is that a play on a resumption of more manufacturing in the U.S., but it's also a derivative tech play with AI data centers and the need for building those in the U.S. So you can find areas outside of tech that sort of are on both sides, a play on a stronger economy and also a play on artificial intelligence, and that's infrastructure.
Sarah, literally just a minute here, but for those who've said that this market is too concentrated, that it's starting to look like a bubble, what would you say to that?
Well, I've been in the industry for 30 years, and technology has made this market look concentrated for almost a decade now. So I would be careful of just trading in and out of the markets based on valuation, because that can be very painful. I was a small cap growth portfolio manager in the late 90s, so I lived through that period where markets and tech looked expensive. What they have going this time that they didn't have in the late 90s is that earnings growth. In the late 90s, we had a lot of companies out there that were public, that were unprofitable. If you look at the tech leaders today, that's Microsoft, NVIDIA, Broadcom. These companies have very strong sales and earnings growth. And so I think that is what is different this time around.
It's an important point. We're talking about big, mature companies, Sarah. We're just getting started. You're sticking with us through the opening bell, which is up next. Don't go anywhere. This is Open Interest, and you can see it's setting up to be a green open. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned
Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were gonna probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is gonna get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
All right, we are moments away from the official start of the cash trade on this Tuesday morning. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. We have green on the screen behind me. An interesting setup, too, after we got those inflation figures at 8:30 a.m. for the month of July, coming in line with estimates, maybe a hair higher when it comes to annualized core, but no one seems to be worried about that at this moment. The S&P 500 rising in the pre-market. It's actually the small caps that are outperforming today as you see those treasury yields come down, especially at the front end. Traders saying that September looks like a lot for a Fed rate cut. You can see the bells ringing behind me as we officially welcome in the start of trade today. And there are some things to keep an eye on under the surface. One of them is China telling companies to avoid NVIDIA's H20 chips, especially for government or national security related work. That's after the U.S. lifted its ban. Meanwhile, you have President Trump's meeting with Intel CEO Lip-Bu Tan appearing to have gone well, with Tan scoring talks with more members of Trump's cabinet. And you can see that those shares are rising right now. NVIDIA maybe a little bit less.
I was going to say, I've got to look for you, Katie, on those. Maybe the reason NVIDIA is rising less, indeed it was in the red in the pre-market, was the fact that we had this report from the information that China was outright asking companies to stop importing them. You mentioned Intel up 2%. Katie, let's also get a look at Circle this morning because it reported its first earnings since going public. It lost money in the second quarter. That was mainly due to IPO-related charges, but it reported a 53% jump in revenue. And Katie, those shares are up nearly, just under, I should say, 14%.
And we're back now with Nuveen's CIO and head of equities and fixed income, Sarah Malik. So a really interesting setup here. Sarah, I want to go back to that trade discussion because you do have China and the U.S. extending that 90-day pause. At the same time, you do have those issues percolating under the surface when it comes to NVIDIA's chips in particular. We think about the discussions of trade talks across the world, it feels like, but how important specifically is that U.S.-China relationship and making sure that it stays open?
U.S.-China relationship is crucial, I think, in terms of trade talks, and that, I think, has always been one of the main areas of focus for this administration. Part of this NVIDIA is negotiations that will be ongoing. I think a bit of relief for the markets that we get a 90-day delay here. But overall, what we see in terms of tariffs is up to about 15% tariffs across the board outside of the U.S. And if you calculate those numbers in terms of how they affect GDP and inflation, they should be a drag on GDP of about 1.5% or so, and a bump to inflation perhaps of 1% over time. Of course, we are not seeing that show up dramatically in the inflation numbers yet. That would get you quite close to a recession. So it'll be interesting to see how this plays out over time with the impact of tariffs.
To your point, Sarah, they're not showing up in the inflation numbers yet. It's worth just taking stock of where we are in the market because some of the gains in treasuries have petered out. Indeed, only the 2-year yield is gaining, but now less than 2 basis points. Sarah, part of the data we got this morning was services inflation that continued to look hotter than expected. It was supposed to be services coming down to offset some of the core goods inflation rather. Does that give you pause if other elements, non-tariff related elements, look more stubborn?
Short-term good news for the markets is investors expected CPI to come in today hotter than expected. So that's the positive and why markets are looking to open up. Now, the shift, exactly as you pointed out, from goods to services is the issue. In the past, we saw some pickup in goods inflation last month, with toys stronger than expected, sporting goods being strong. Services had not seen a pickup in inflation. Now, today, of course, what we see is that inflation creeping over and spilling over from goods into services. And that is an issue for the consumer in terms of, is the consumer now starting to make tougher choices because of the impact of tariffs? We'll see how that plays out from here. Of course, as you noted earlier, on holdings, it's not spilling over to athletic shoes at this point because that number was very strong from them. But I think consumers are making tougher choices when it comes to experiences, how much they're going to pay for airfares and hotel rates going forward.
Absolutely. I mean, that seems to be the anecdotal evidence that's out there. Not seeing it in the numbers yet, but that could change in the months to come. Let's talk a little bit more explicitly about what's going on in the bond market, because you see a reaction to these numbers. The 2-year yield down about 2 basis points or so. You take a look at what the 10-year yield is doing. It's been percolating in a really interesting range over the past few weeks. It had felt like we were glued to 4.5%. That seems to have reset a little bit lower. Now we're hanging out between 420 and 430 on your benchmark. Where do you think we go over the course of 2025?
10-year yields likely remain about range bound. We've come a long way from where we were when we saw the spikes during Liberation Day 1.0. But bond markets have been calmer about inflation and the outlook for the U.S. economy going forward. We see an incremental slowing for the economy. We started to see that with payrolls last month, which came in at 73,000. And the Fed rate cut for September, whether we get 0, 25, or 50, we're in the camp of 25 with upside to maybe a 50 basis point rate cut. That would depend on how do non-farm payrolls look for August. Do they come in again sub 100,000, and are they disappointing? How does the next CPI number look? The Fed has stated that they would look at inflation related to tariffs as a one-time bump. So I think that's what the bond market is counting on. Now, looking within fixed income, there's an area that we like, which is preferred securities. And you're talking about what do we like outside of technology? Preferred securities and fixed income are backed by the strong fundamentals of U.S. banks, which are in good shape. So areas like preferred securities and also municipal bonds, where fundamentals are also strong, are attractive areas within that segment.
Sarah, even though there's attractiveness in bonds, to your point, we saw a whole host of weak auctions across the curve last week. How much of that is due just to lower yields, less attractive following the payrolls report, versus some really serious challenges for the bond market around things like Fed independence and a growing deficit?
Those are issues that have been bubbling up. The growing deficit has been something that investors have been thinking about for quite a while. High interest rates, of course, even more problematic for the deficit. So I see that as a structural medium-term to longer-term issue that the U.S. needs to think about and how to deal with it. In terms of looking at the Fed independence, there's been some volatility around that for equities as well as for bonds. I think the Fed will stay independent, and we'll soon find out what's going on with the next Fed chair nomination. So those are issues for the bond market. But I think generally U.S. safe haven status remains intact now that we've gotten our arms around what's going on with tariffs, and the economy is slowly decelerating, but not at a rate where a recession is imminent. Those are all positives for the bond market, and why we've seen Treasury yields move to a more stable base versus what we saw in April.
Well, to your point on figuring out who the next Fed chair is, it just feels like that potential list continues to get longer. We heard from Jim Bullard on CNBC this morning saying that I'll accept Fed chair job if we accept Fed independence. So a lot of question marks there. But Sarah, before we let you go, I do want to ask, what is your preferred haven in this market? We're talking about the bond market. It feels like treasuries in particular have been a bit of an unreliable hedge. I don't know if gold near record highs is trading as that hedge, or whether you see somewhere else as your preferred form of protection here.
I like areas which have their own structural growth drivers that can remain resilient in any kind of environment, including a recession. So I talked about infrastructure earlier. Infrastructure not only has the positive of manufacturing coming back home, but the components of infrastructure tend to be utilities and waste management. We still turn on our lights and take out our garbage during a recession, so it tends to be more resilient, and it has that growth upside from artificial intelligence and data center growth. Second area we like is an income providing area within equities, dividend growers. These companies tend to increase their dividend over time, so they have very strong cash flows and balance sheets. Again, more resilient on the downside, but also able historically to capture much of the upside of markets.
All right, Sarah, great to spend some time with you this morning. That is Sarah Malik of Nuveen. Meanwhile, let's get a check on the stock market right now. You're just about 8 minutes into the Tuesday trade, and you can see we have some pretty good breadth on this rally. The S&P 500 higher by about 0.6%. You have more than 400 names in the green right now, and you can see it's Meta, Microsoft leading the way higher. Apple and Alphabet, Amazon also putting up a fight as well. That is leading to some pretty sizable gains when it comes to your benchmark following CPI. But on the downside, this is what you need to keep an eye on. Cardinal Health is up there at the top, reporting pretty poor earnings, or at least not being received well by the market. NVIDIA, you can see trading places here. It's switching around, but NVIDIA erasing its gains. We did have the information report that China told companies to halt their orders of NVIDIA's chips. That seems to be affecting NVIDIA's sentiment. But let's take a look at the sector level, because as of right now, you have a perfect score, 11 out of 11 in the green. Communication services and financials up top. Your relative underperformers today, energy, consumer staples, and utilities. But Danny, overall, this is a very risk-on market.
It is, despite the fact that bond yields have given up some of their gains, or rather we're looking at a long end that's now pushing higher and only a front end that's coming lower. It is the continued optimism of the equity market versus pessimism of the bond market. Speaking of some of that pessimism, you mentioned it, Katie. Coming up, we're going to discuss China urging companies to avoid NVIDIA's H20 processors. How much does that complicate Trump's AI chip deal? We're going to have more on that story coming up next on Bloomberg Open Interest. Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Victor, Idaho, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Welcome back to Open Interest. A quick check on this rally extending right now. The S&P 500 higher by about 0.7%. There's a lot going on with tech, with the chips, which we'll talk about in just a moment. You can see the NASDAQ 100 also rising by about 0.7%. It's the small caps that are stealing the show right now. The Russell 2000 outperforming. It does help that you have yields declining a bit in the wake of CPI, but as Danny pointed out, those gains are starting to dissipate a little bit in the bond market, so we'll see if small caps can hold on to this win. But it's time now for our top calls. Some of the analysts' action in focus this morning. And first up, Baird upgrading Starbucks to outperform, expecting that new leadership will effectively drive its turnaround strategy. Starbucks shares up about 2.5%. Next up, you have Piper Sandler upgrading Chipotle to overweight, seeing limited downside after falling 25% over the past month alone. And finally, you have Argus downgrading Union Pacific to hold. The analysts anticipating export challenges due to tariffs. Shares pretty much unchanged, maybe a little bit higher, Danny.
Well, speaking of tariffs and trade, Katie, back to one of our top stories this morning, and it is around tech, with China urging local companies to avoid using NVIDIA's H20 chips. Now, that guidance, it is not a ban, but a discouragement, particularly for government-related purposes. Joining us now is Bloomberg Tech co-host Caroline Hyde. And Caroline, it seems the information adding to some reporting here, but what do we understand about the current state of China and allowing their companies to order these chips?
Well, exactly the risk that Jensen Huang, the CEO of NVIDIA, has been trying to tell the market time and time again, trying to tell the government time and time again. If you limit our ability to sell our high-performance chips into China, and indeed if you curtail the performance of the chips, of course they've asked them again and again to make them less and less useful and powerful, so that's why you've got the H20, which Trump himself calls obsolete. If you do that, you will spark innovation in China and they will outcompete us. They will start to lean in on Huawei's Ascend Accelerator program. You will start to see the ByteDances and some of the other key giants, the Tencents, the Alibabas, go to local domestic production rather than NVIDIA and AMD. And here we have it. We are reporting that already we look like the government is leaning on these big tech giants to try and perhaps pull back from their dependency, particularly around government-related use cases. But the information is also going a step further, saying it's not just leaning and saying and nudging, it's actually demanding that these big tech giants don't buy the H20. This is, of course, exactly what had been perhaps thought through by some of the leaders in chip makers here in the US.
Well, you touch on what I've been wondering about, because we've been talking about the US government's perspective, we've been talking about China's perspective, but this must be enormously frustrating for CEO Jensen Huang. I mean, you think just about the money that he's losing by not having access to the Chinese market, but then that existential fear that you bring up that maybe they're going to get left behind, that you're going to see some of their Chinese competitors really step up their game.
And look, this is the paradox, and probably one that the US government, of course, have thought through. If we keep making these CEOs, Lisa Su and Jensen Huang, play a game of ping pong instead of focusing in on innovation and in sales, when probably you're going to spark an issue here. And of course, that's exactly what's happened. They are losing a ton of money. Now, we understand, of course, we estimate, Bloomberg estimates about $7 billion worth of H20 chips go from NVIDIA per quarter to China. And of course, that's a nice little earner if you're able to make 15% cut on that. But in so doing, you're hearing that the Chinese pushback is there, that they don't want $7 billion worth. And in fact, they want every company to be trying to avoid these sorts of business deals with US giants. They don't want it in their overall tech stack. And also, there have been some fears they've been articulating. They worry about security, efficiency. And meanwhile, all of this has been going on. Huawei has been busy trying to innovate, getting money from the Chinese government, a special tech fund. There is a lot of concentration going on China to try and outcompete. And here lies the paradox. Yes, you try and curtail, you're going to have an issue.
One of the interesting things, though, is Jensen Huang had made a concerted effort to appeal to the Chinese. On Trump's inauguration, he wasn't at the White House, he was in China. So we see this effort from tech CEOs to try to play politics. Karen, we have to talk about what happened with Lip-Bu Tan of the Intel CEO yesterday. It seems that Trump has had a bit of a 180 after meeting with the Intel executive.
And that's always what everyone prepares themselves with President Trump. And indeed, Lip-Bu Tan has done what was necessary in terms of actually deciding to go to the White House, and what he declared would be trying to restate misinformation in the market about his relationship with Cadence, where he used to be the CEO, and what had been done with Chinese institutions, and indeed some of his own investments that he's made with his venture firm into Chinese stars in the chip sector. SMIC, he was actually on the board of that company. All of this was known, but it suddenly sparked worry amongst lawmakers and again from the administration itself, where they called for his own ouster, for him to remove himself. He's managed to persuade President Trump with some warm tones coming from President Trump, saying what a success story he's had as someone who has come as an immigrant from Malaysia, built himself as a US citizen, and managed to become the CEO of an incredibly integral company. Now he has to go back next week, talk with cabinet members, we understand, for President Trump. What then of the innovation that's going to happen here in the United States thanks to Intel? What then of manufacturing? What then of some of the access to $8.5 billion of the CHIPS Act money?
Looking forward to see how those conversations shape up. Of course, Intel, an American icon, but definitely feels like it's been on the decline. That is Bloomberg Tech co-host Caroline Hyde. Now, we do have some breaking news. That is President Trump saying that he is considering suing Fed Chair Jerome Powell over his handling of reconstruction of the Federal Reserve's buildings. Michael McKee, he is Bloomberg's international economics and policy correspondent. He joins us now. Specifically, Mike, he says that he is considering allowing a major lawsuit against Powell to proceed because of the horrible and grossly incompetent job he has done in managing the construction of those buildings. What do we know so far?
We don't know anything. This seems to be another effort by the president to flood the zone, as they say, just come up with all kinds of distractions to keep people not thinking about some of the other things they don't like about his administration. There wouldn't seem to be any way to sue Jay Powell for this. First of all, you'd have to have somebody who could have standing. In other words, somebody who could claim they were harmed by whatever the Fed chairman did or did not do. And then it would have to be proven that Jay Powell did something wrong. The fact that a building is over budget, I think any of us who have had home repairs done know about things going over budget when you're doing construction. So I don't think there's really going to be any lawsuit. Remember that his whole MO is I'm threatened to sue or sue people, and he loses almost all those cases, but settles them or something. It's just what he does to try to intimidate people. I find this tweet interesting, though, because not only is he insulting Jay Powell by going back to the too late thing, he's now insulting Steve Mnuchin, his Treasury Secretary, in his first term, calling him Maniuchin, something like that. I don't know how he pronounces it, and I don't know what that's supposed to mean.
I think that might be an attempt at a phonetic spelling at Mnuchin. That is literally my only guess. But to your point, Mike, he's criticizing his former Treasury Secretary for picking Powell. It seems like his current Treasury Secretary right now is leading the search for who will replace Powell. How is that search shaping up? And I mean, you got to look at this, Mike, and say, is he maybe taking a second thought about letting someone else lead the search for who becomes the next Fed chair?
No, I think this is very typical Trump. It's not my fault. I didn't have anything to do with this Fed chair. It's Steve Mnuchin's fault. Now, the interesting thing is 2 years from now, whoever is Fed chair, we'll see if he likes that Fed chair or if he blames Scott Bessent. And what nickname will he give Scott Bessent?
I think it's Scotty B, right?
Well, now because he likes it.
Right. If it turns negative, Scotty F,
if it
maybe.
turns negative.
I don't know.
I mean, the bottom line is he says Powell needs to lower the rate now. Obviously, the Fed chair can't lower the rate by himself, and there's no Fed meeting until September 17th. So it's in that sense, it's kind of meaningless.
Fair enough. All right, Mike, thanks for keeping us up to date on that. That is Bloomberg's Michael McKee. For what it's worth, 30-year yields at highs of the session up just over 3 basis points. You are watching Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Welcome back to Open Interest. Let's take a check at this market right now. The S&P 500 still higher, but gains actually coming in a little bit after we heard from President Trump that he's considering allowing a major lawsuit against Fed Chair Jerome Powell. The Nasdaq 100 also coming in up about 0.3%. It's still the Russell 2000 that is leading the way. We'll have to see how that develops. Let's take a look at some of the individual gainers right now. You do have some good news in the form of Meta. You have Circle higher as well. They reported earnings. Those were well received. Nvidia has been sort of treading water here. It's now a little bit lower, of course. It is firmly in the crosshairs of U.S. and China trade negotiations. Hims & Hers Health down about 4%. And then Celanese Corp down 21%, Danny.
Some other movers that we are watching this morning, Katie, worth pointing out pot stocks, if we can get a look at those, because why not? Trump saying yesterday that he might consider reclassifying marijuana, putting it at a lower schedule. You can see Tilray there up 13%. This market acting like the federal government's going to legalize it should, again, just worth note, it will still be illegal. It will just be at a lower classification of illegal.
Just like a little bit less illegal. What
Right.
I find interesting is that, I mean, people have been getting behind pot stocks for a while now. There's been a lot of false dawns here when it comes to how they'll be treated legally. But if you take a look at where the money is going, ETF that I like to watch, ticker MSOS. This is the Advisor Shares Pure U.S. Cannabis ETF. Not really seeing a ton of inflows. It took in almost $20 million yesterday, but in ETF land, that's pretty much a drop in the bucket. So investors, still a lot of skepticism here, I think it's safe to say.
Does that just speak to who's investing in these pot stocks? If the individuals are going up, is that basically just like the online Wall Street bets are betting and maybe more measured ETF people aren't?
I don't think a lot of institutions are putting big money
You're
into
probably
the
right.
marijuana.
I don't think they're allowed to, a lot of them.
But if you are, let us know. In any case, coming up in the next hour, great lineup. Rebecca Patterson joins us to talk CPI and U.S.-China trade relations. Then Marsh McLennan CEO John Doyle joins as well, and Claudia Sahm. This is Open Interest.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is As more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that three-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. It is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Despite worries over President Trump's tariffs, consumer prices rose at less than expected 2.7% annually in July. Business analyst Jill Schlesinger.
There was, in addition to energy prices being down, there was some improvement in the cost of shelter, which is up by 3.7% from a year ago. That's down significantly from the peak that we saw a couple of years ago, and a slight improvement from the June reading.
Furniture prices, the cost of tires and pet products all up. So is the Dow. It's ahead 233 in early trading. A Justice Department spokesperson tells CBS News Attorney General Pam Bondi is expected to meet with Washington, D.C. Mayor Muriel Bowser a day after President Trump took control of the local police force. He says he'll send in National Guard troops, too. Correspondent Scott McFarland.
The president has also threatened to expand his crackdown on crime in other U.S. cities. He named Chicago, Baltimore, Los Angeles, New York, and Oakland, but the president doesn't have the same authorities in those cities that he has in D.C. The Democratic mayors and governors in those communities are already pushing back hard on that idea.
We're expecting an update this hour on last week's deadly shooting at CDC headquarters in Atlanta. One police officer was killed by a suspect who professed anti-vaccine views. Now, some agency employees are calling for beefed-up security, including this one, whose voice was disguised to protect their identity.
There has been constant rhetoric that has vilified CDC. He's called CDC a cesspool. He has, quite frankly, dehumanized all of us who work at CDC.
The Uvalde, Texas school district has released records from the deadly school shooting there in 2022 after news organizations, including CBS, sued the district. Correspondent Matt Piper.
The records include emails between top school district officials and also text messages and emails to and from at least 2 school police officers who were on the scene. There's also the personnel file of the former Uvalde Schools Police Chief Pete Arredondo, including texts of his. At 11:40 a.m. that day, a text to him from a district secretary noted someone reported hearing shots outside Robb Elementary. Nearly 400 officers waited more than 70 minutes before confronting the gunman.
The Kodak moment may go away forever.
Don't miss the moment. Keep your camera ready with new Kodak Gold Plus film.
Eastman Kodak's warned investors it could be forced out of business as it uses up the last of the money from a pension plan to pay down debt and stay afloat. George Eastman launched the company in 1888. It produced the first successful roll film hand camera in the world. This is CBS News. couple of musicians have resolved their messy split.
A court filing indicates the estranged pop duo Hall & Oates reached a private ending after details of the rift between them went public in court documents after Daryl Hall sued John Oates over a business partnership in 2023. It's not clear when the arbitration ruling was reached or what the outcome was. There's been no comment from attorneys on either side. Hall had accused Oates of blindsiding and betraying him, saying their relationship and his trust in Oates have deteriorated. Oates said he was deeply hurt that Hall was making inflammatory, outlandish, and inaccurate statements about him. Steve Kathan, CBS News.
Police in Spain say rescuers have found the body of an American hiker who'd been missing in the Pyrenees for almost a month. They say Cole Henderson's remains were found more than 650 feet down the north face of Monte Perdido. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Live Radio, and that's where you'll find us. Norma Linda, Paul Sweeney here with you in New York. Coming up, we're going to check in with Ed Ludlow, Bloomberg Technology co-host, talking about the story coming out of China urging firms not to use NVIDIA's H20 chips. This story just never seems to be ending here. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He'll give us his thoughts on this inflation print this morning. The CPI print generally in line with expectations, maybe a tid higher on the annualized basis. Maybe we'll see how that looks. Priya Misra, she's going to join us as well, fixed income portfolio manager at JP Morgan Asset Management, get her thoughts on the fixed income market. Then we're going to talk weed. When you want to talk cannabis, you talk to Ken Shea, Bloomberg Intelligence Senior Consumer Products Analyst. I think President Trump has some thoughts on the cannabis market in general, and we'll get down to that. But right now, let's kick everything off with Lisa Mateo and a Bloomberg Business Flash. Lisa.
You got it. In this Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. You can learn more at ibkr.com/around the clock. We've got stocks advancing this morning. This after core CPI picks up to the fastest pace since January on an increase in service prices. Core CPI, it increased 0.3% from June on an annual basis, picked up to 3.1%. You have Ellen Zentner and Morgan Stanley Wealth Management, who said in the short-term markets, well, they'll likely embrace these numbers because they should allow the Fed to focus on labor market weakness, keep a September rate cut on the table. But in the longer term, Zentner said because of tariffs, well, we likely haven't seen the end of rising prices. The NASDAQ up 0.2%, but look at the Dow up 0.9%, 393 points. The S&P 500 up 0.4%, 29 points. The two-year yield 3.74%. That's down 2 basis points. The yield on the 10-year 4.30%, and that's up 1 basis point. The Bloomberg Dollar Spot Index, that's down 0.2%. Shares of Intel, they're higher. They're up 2%. CEO Lip Bhutan met with President Trump at the White House, and this is after calling for his resignation. The president now calls Tan's success, quote, amazing, said discussions will continue. And finally, shares of NVIDIA, they're down about 0.6%. Sources saying China urging companies to avoid using NVIDIA's H20 chips. Sources saying it also affects AI accelerators from AMD. It comes as both companies, they just agreed to pay 15% of their China AI chip revenues to the U.S. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Nora and Paul.
Hi, Lisa Mateo. Thank you so much. We appreciate that. Norma Linda's sitting in today. Nora, the market likes what it saw, it seems like, on the inflation rate. It's a little bit higher, but I think that there are fears where it could have been even higher. But now, a little tepid, so maybe the Fed can cut.
Absolutely. And I think that we're seeing that really reflected in the trade, in the bond market, people really reassessing what the rate cut expectations are. Really, a lot of people pointing towards September here.
Yep. Got the two-year Treasury yield in about 3 basis points, 3.73%. All right, let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Norma Linda. And we're joined by Bloomberg's Natalia Kinyajevic. Natalia, what are you looking at today?
Let's start with Circle Internet, guys. The ticker is CRCL. The stock is up by 6%. We spoke about preview yesterday, so the company delivered. We saw that results were positive. Adjusted EBITDA came at 126 million. Expectations were for 121. There was also beat in total revenue, which gained 53% on a year-over-year basis. Analysts, of course, highlighted its company's stablecoin USDC. So the circulation outlook was very ambitious, and the company said that there was 61.3 billion USDCs in circulation at the end of this quarter. This is a 90% year-over-year increase. So we do see that demand for stable coins is growing. Still, the company posted a net loss of more than $400 million, and shares rose to $170. The IPO price, as a reminder, was at $31.
Wow, just an amazing rip there for that name. Tilray Brands.
Right, so this is a cannabis story. We do see that Tilray Brands shares, the ticker is TLRY, so shares are up by almost 19%. So this company, as well as other cannabis-linked stocks, are moving higher. We saw that President Donald Trump said that he was considering reclassifying marijuana as a less dangerous drug. So Trump said that he may announce a change in the next few weeks. So right now, cannabis is labeled as a Schedule 1 drug, basically in the same category as heroin or LSD. Analysts are saying so this potential reclassification could lift the entire market and, of course, help those companies with better access to capital.
Definitely. I mean, looking at shares of Tilray Brands down 25% this year, so it'll be interesting to see whether or not these developments really create a lift for this company and others in the sector here. You're also looking at Venture Global.
Yeah, so this is the energy story, and this is also another IPO story. So the company posted earnings. So on the one hand, shares are up by 2.7%. The ticker is VG. The company posted higher profit, revenue more than doubled. So revenue rose to $3.1 billion from $1.1 billion. And the company also, of course, saw an increased profit driven by higher LNG sales volumes at one of its facilities. However, keep in mind that the company went public in early 2025, and there was lots of concerns about company's fundamentals, and the stock is still down by more than 50% since its IPO.
Wow.
Yeah, went public January in 2025 is $25 a share. Here we are at $12.70. So come down there. But I don't know. I like the LNG business. There's always demand for gas out there.
Yeah, there's no sells here on the stock. I mean, if you're looking, there's about 8 buys and 8 holds here, 0 sells. So it seems that people feel similarly.
All right, Natalia, thanks so much for joining us there. Natalia Kinyajevic covers all the equities for Bloomberg News. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you get your podcasts. All right, I have to be honest with you. I'm having a hard time keeping up with this whole China, NVIDIA, AMD.
Tell me about it.
The 15% tariffs. Can the chips, are they welcome in China? Are they not? Can they sell them in China? Let's go to Ed Ludlow. He's on top of this stuff. Ed Ludlow, Bloomberg Technology co-host. He's over in London right now. Hey, Ed, what's the latest here? China is, I guess they're urging firms not to use NVIDIA's H20 chip. I thought things were kind of thawing out there.
Yeah. This is fast moving. This is, the only appropriate time of the phrase market whipsaw that I've been able to use to date in this context. The information has reported that China's internet regulator has ordered specific technology companies, Alibaba, Tencent among them, to stop placing orders of NVIDIA's H20. The H20 is the China-specific chip that had performance engineered out of it that was subject to export control. What we knew, by the way, as of Monday morning, was that NVIDIA had not in any recent months shipped any H20s to China anyway. But the problem with this latest report, which has been in the last hour or so, is that it's a much more extreme move by China than what Bloomberg had reported overnight, which was basically an advisory Chinese authorities had strongly recommended to various Chinese technology companies not to use the H20 in particular, as well as one chip from AMD. But the market's reacting. That's all that matters, right?
Right. So we are seeing shares of NVIDIA down a touch, about 0.8% here. Can you just speak a bit more about what are the implications here for NVIDIA in particular?
Yeah. So the state of play is really important to understand. NVIDIA's H20 chip is not the best chip that a Chinese technology company can buy. Huawei, which is essentially China's domestic champion, has actually several generations of chip that have better performance and power, not just more than the H20, but of NVIDIA's H200 chip, which until very recently was the sort of cutting-edge generation accelerator that many American companies used. They've since moved on to a later generation called Blackwell that's not available in China. The president, as you know, confirmed yesterday, about 24 hours ago, that he had cut a deal, an ad hoc arrangement, a quid pro quo with both NVIDIA and AMD, where he would allow them to export these China-specific chips with lower power and performance in exchange for 15% of the revenues gained from that market for Chinese AI accelerators. The problem is, like, what are we interpreting this as? Is China responding in this way because it's a tactic in the broader negotiations between the United States and China of trade overall? That is what the analyst community thinks. Or is China protecting its own domestic industry for AI accelerators, making sure that Chinese tech companies buy a Chinese AI chip? Both are possible. The main conclusion across both is that now Wall Street has to reassess how likely it is that NVIDIA and AMD do business in that market, at least in the near term.
And Ed, I guess if I were an analyst or an investor, I'd be saying, I think I have to factor into my model that the answer would be no, that I can't imagine some of the advanced chips being allowed into China. It just doesn't feel like the political winds are blowing that way at this point.
You know, there are certain sections of Wall Street, the most bullish analysts, that NVIDIA's next quarter coming up is the fiscal second quarter. Some people saw them doing $7 billion of sales in China on the basis that, okay, president said it's cool. Even if you have to pay a 15% so-called export tax, and there are questions about how constitutional that rule would be, which we can get into, sure, it's still better to have 85% access to a market than zero. So everyone was like, they can do this quickly, like just turn the tap back on. I would wager, I think I said this yesterday anyway, but 24 hours on, given the news flow, they're probably reassessing their model down and down and down, closer towards zero.
Ed, we of course know that China is a major player here when we think about NVIDIA, but NVIDIA also holds a significant market share in the AI chip sector, about 95%. So tell us a bit how big of a deal this most recent news is, and how does it kind of change how you look ahead of these earnings that we're going to be getting coming soon?
Well, the thing is, and the reason why, you know, Paul and I back and forth over the sell side over the last couple of days is important, is there's been zero business for NVIDIA in China, at least since the turn of the year. You know, they wrote down $5 billion worth of chips that were specifically made for that market, and they haven't sent any of them there. Let's say they're just sitting in a warehouse somewhere. They probably are. However, when you think about the context of AI development, the number of researchers and companies working on models, about half of the world's activity is happening in China. It was an important end market. Will we return?
Ed, great stuff as always. Appreciate the reporting on a fluid situation with the chip makers and China. So are they or are they not going to be doing business going forward in China? Ed Ludlow, Bloomberg Technology co-host, joining us here. Coming up, we're going to check in with Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. Get his thoughts on this inflation print this morning. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. Well, underlying inflation, it accelerated in July, strongest pace since the start of the year on a pickup in services prices. We have Tiffany Wilding is an economist at PIMCO and spoke on the tariff-related pass-through.
It's happening, but it's happening slower than I think many people expected, going back to April when the more dramatic tariff announcements were first implemented or announced. It's happening more slowly, and across industries, it's more uneven.
And that was Tiffany Wilding, economist at PIMCO. We've got stocks on the rise. Look at the Dow up more than 1%, 445 points. The S&P 500 rising 0.6%, 38 points, and the Nasdaq up 0.5%, 123 points. The two-year yield 3.75%. That's down 2 basis points. The yield on the 10-year 4.31%, and that's up 2 basis points. Over to commodities, we have WTI crude $63 a barrel. That's down 0.6%. And over to gold, COMEX gold up down 0.7%, $3,380 an ounce. The Bloomberg Dollar Spot Index off about 0.2%. Shares of stablecoin issuer Circle Internet Group, they're up about 4%. Reported its first earnings as a public company, and revenue rose more than expected. After the close, it's on to CoreWeave and Kava Group. One stock on the move, that's underwear maker Hanes brand. Their shares up 36%. Financial Times reporting Canada's Gildan Activewear close to buying the company. It's a deal that values it at nearly $5 billion, including debt. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Nora and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Nora, Melinda, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. And we're also streaming live on YouTube as well. The CPI print came out this morning. James Knightley, Chief International Economist at ING, is out in the marketplace saying inflation was broadly in line with expectations as tariffs continue to be largely absorbed within profit margins, which he says gives the Fed room to cut interest rates. So that's, I guess, kind of what we're seeing out there in the marketplace. Let's check in with Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence. Ira, what's the bond market telling you today?
Yeah, so we've actually shifted a little bit since we got the inflation print where, yes, we still have lower yields in the front end. And as you said, Paul, the market is pricing for a September rate cut. But the long end now is starting to sell off a little bit. And I think that part of the angst there is over both supply, but also maybe longer term inflation effects kind of being built into the market, because if the Fed does cut interest rates, then it's possible that over the longer run we'll get inflation a bit higher than the Fed really wants.
So we saw core CPI pick up at the fastest pace since January, particularly looking at services here. But I mean, of course, we are seeing a market that is charging higher. How are you thinking about this print? Was there anything that stood out to you in particular here?
Yeah, so the two big surprises, and you talk about that core inflation print, and it's really, and if you look at the super core measure, so you take out housing from that core measure, and what you see is that transportation services and medical services were the two big increases. It's a little bit unclear what caused the medical services rise, but that transportation services was interesting because you had energy prices went down, and usually energy prices are one of the big drivers of transportation services. So it wasn't really broad-based. It was only those two subsectors of the core measure that really drove that higher than expected core measure. But it was very incremental, and like Paul mentioned in the open, core goods really did not move very much, and you'd expect that to be the place where tariffs would really show up in the CPI report.
Neil Dutta over at Renaissance Macro wrote this morning that this data essentially means that the September rate cut is quote unquote a lock. Is the market pricing it in like that?
Yep, the market's pricing in a lock, and it's pricing in another cut thereafter. But what it's not pricing yet are 3 cuts, at least not fully priced 3 cuts. And I actually think that if the Fed were to cut in September, that it will just keep going. That it's not going to start and stop. That's not the Fed's modus operandi. If they were to cut, they would be convinced, oh, we need to cut 75 basis points, 100 basis points, or maybe even a little bit more than that, which is our expectation actually by the time the Fed's actually done. So if the Fed cuts 25 in September, I think that means that they'll probably be cutting through at least January and have cut at least 100 basis points, and probably a bit more than that. Because if inflation hovers here, 2.5% plus or minus a little bit, I think the Fed will think that, hey, we can cut all the way down to 2.5%, and that's close to neutral, whereas right now we're restrictive. You even heard Jay Powell mention that a couple of weeks ago at the press conference that, we're still restrictive, but so to get to neutral, how far do they need to go? Well, in some people's eyes, like Governor Bowman, for example, she thinks maybe below 3%.
So you mentioned the idea of tariffs here, and of course we did see with this print, core inflation was more so from sticky service prices rather than tariff-affected goods. Is there any sort of expectation that there is still an impact that's yet to be seen from tariffs in terms of how we look forward into some of these reports?
Well, there is in the market, and if you look at inflation, what inflation swaps are pricing right now, they're actually priced for CPI to be above 3% for over the next 1 year. So the market at least isn't really thinking that the tariff fear is over. Now, part of that might be an increase in energy prices and some seasonality and things like heating oil, but nonetheless, the market is thinking that this kind of inflation could be a bit stickier. Keep in mind for the Fed though, like if we have a headline inflation 2.5% plus or minus on CPI, they look at the PCE measure, and the PCE deflator tends to be between 50 and 60 basis points below CPI. So we could actually still be relatively close to the Fed's target, maybe 2.2%, which I don't think is an impediment for them cutting if the labor market remains as weak as the July data that we had 10 days ago suggests.
Ira, thanks so much for joining us. Always appreciate getting a few minutes of your time. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, safely ensconced at our BI headquarters down there in Princeton, New Jersey. Let's go to the bond market here. The credit markets, fixed income broadly defined. Again, as Ira's mentioned, we got the 2-year down about 2 basis points, and the 10-year actually up about 2 basis points. So a little bit of steepening there in the yield curve, looking at the 2s, 10s. Priya Misra does this stuff for a living over there at JP Morgan Asset Management, fixed income portfolio manager. Priya, what's your take of the inflation data we got today, and is it enough for the Fed to cut rates, do you believe?
Hi, Paul. Thanks for having me. So I think the report came in largely on top of expectations. You look below the hood or under the hood and you see, okay, goods inflation showed some tariff pass-through. It didn't accelerate, which a lot of people were expecting. I actually think that's yet to come because companies are paying for the tariff. It's just now they're arguing how much do consumers take it versus companies themselves. So I think that's still going to happen. On the service side, the thing I look at the most is housing inflation. That tends to be more, sticky. It tends to be trending. That continued to decelerate. Airfares picked up. So I put all of that together, and inflation, yes, it's above the Fed's target, but it's not worrying enough, I think, for the Fed to hold back from cutting rates. And then you go back 2 weeks, and we had a payroll report that was weak. And the monthly pace of job gains has been much weaker this year. I mean, we're not in the hiring. Hiring is slow. We're not still in the firing mode. But I think that is raising concern from the Fed standpoint. So the market's pricing in a very high chance of a September rate cut. I think it makes sense. I think they're likely to cut rates. We still have the PCE report. We have another payroll report. So there's still more data. They're not going to commit to it. But I think market pricing of the soft landing, what Governor Waller calls good news rate cuts, I think it's fair given the economic data that we have here. So that's what the market's pricing in, that we stay in the soft landing. The Fed can cut, take the restriction out of rates, get rates closer to neutral. And then, I think that's what's reflected in risk assets as well.
So you mentioned that the tariff pass-through has yet to really be seen here. When do you expect that to potentially show up in reports? And if it does, when do you expect the Fed to continue to cut if they do cut in September?
Sure, great question, because if I think the tariff pass-through hasn't yet happened, is that going to be an impediment? So I do think in the next few months, because we're looking at tariff collections from the customs data, you're getting about 30 billion a month that is being collected. And that's actually we estimate that's about a 10% tariff rate. If I look at the trade deals over the last few weeks, the effective tariff rate based on last year's imported goods is closer to 18% actually, depending on exceptions. So I think that tariff revenue is likely to go up. And then companies, it takes a while. They might have had inventory. That is why they didn't raise prices. It takes a while to raise prices. They might have wanted more certainty to know what the tariff number will be like. But I think over the next 6 months, we do expect goods inflation to pick up. Now, your second part of your question, does that impede the Fed? I think the Fed might look through tariff-related inflation. Chair Powell effectively said that as much. As long as service inflation continues to decelerate, and it can happen in a slower pace, but if you don't see service inflation, wages, and inflation expectations ticking back up, or you see continued deceleration there, I think they look through tariff-related goods inflation. They'll say that's a one-time price shock. That's what economics would tell you. And I think they can continue to cut rates at least until neutral. Once we get to neutral, I think the bar then rises. At that point, I think you need to have the Fed convinced that they need to take rates into accommodative territory. I don't think the data suggests that right now, but that's, they've got a long way to go. We're 100 to 150 basis points away from neutral. I think that's why the market's pricing in all these cuts, even with the expectation that tariff-related inflation is likely to still show up.
So, Priya, about 30 seconds left here. What's your fixed income call here today in terms of how much credit risk do you want to take?
So we do like high-quality spread product here. You look at company fundamentals, they're strong. Earnings have been strong. Companies are creative. Once they know what the tariff rate is, they're working through supply chains. So we like high-quality spread product. I also like owning duration against that. Because if the economy slows down a little more, the Fed might cut, but it takes a while for that to show up. I think duration then provides you that hedge. We struggled with cross-asset correlations, but I think duration as a hedge to risk assets is still very much the game in town. So I think own some duration and own high-quality credit, high yield as well as investment grade.
Priya, thanks so much for joining us. Always appreciate getting a few minutes of your time. That's Priya Misra. She's a fixed income portfolio manager over there at JP Morgan Asset Management. I think they're about to move into the new headquarters on Park Avenue, starting, I think, like end of this month, maybe beginning of September. So
beautiful building,
huge building. Next time folks are in New York, walk down Park Avenue and you'll see it. I think it's around 48th Street or something like that on Park Avenue. Just spectacular. And we've watched it be built over the last several years, and I never thought we'd see it finished. It's just extraordinary. So that's Park Avenue. Looking at the market, still green on the screen here, so we'll keep up with that. Coming up, we're going to talk about the cannabis business. President Trump's making some potentially positive comments for that industry. Ken Shea, Bloomberg Intelligence Senior Consumer Products Analyst, is going to join us on what it means for the industry potentially and on individual stocks there. We're talking weed coming up. Why not? This is good.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks advancing. This is as an inline inflation reading kind of boosted hopes that the Fed will have room to cut interest rates in September. Federal Reserve Bank of Richmond President Tom Barkin said uncertainty over the direction of the U.S. economy, well, it's decreasing, but it's still not clear whether policymakers should focus more on inflation or strengthening the job market. Fed officials, well, they next gather on September 16th through 17th in Washington. The NASDAQ up 0.6%, 128 points. We have the Dow up 0.8%, 365 points. And the S&P 500 rising 0.5% or 35 points. In the yield space, the 2-year, 3.74%. That's down 3 basis points. The yield on the 10-year, 4.30%, and that's up 1 basis point. The Bloomberg Dollar Spot Index, that's down about 0.2%. A few companies making news. China Evergrande Group said its Hong Kong stock will be delisted, marking the end of an era for the company. And Elon Musk lashing out against Apple's App Store. He's accusing the iPhone maker of favoring OpenAI over his own artificial intelligence offerings. Apple shares, we'll take a peek over there. They're up about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Nora.
All right, Lisa Mateo, thank you so much. We appreciate that. Norma, Linda, Paul Sweeney. We are live here in our Bloomberg Interactive Broker studio in New York City. We're streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Live Radio, and that's where you'll find us. I'm looking at the cannabis company Tilray Brands. It's a name we've been talking about a little bit this morning. Stock's up about 9%, 10% here. That's the good news. The bad news is it's down about 25% year to date. And I think it's up on part, looking at some of the Bloomberg reporting here. President Trump made some comments that maybe he'd be open to reclassifying cannabis maybe as a less restrictive drug there or substance. So I went to bring in Ken Shea. He covers all this stuff for Bloomberg Intelligence, Senior Consumer Products Analyst for Bloomberg Intelligence. Ken, talk to us about the comments that President Trump made as it relates to the cannabis industry and how impactful could that be?
Yeah, hi, Paul. Sure. So what I understand is President Trump over the weekend made some comments with regard to marijuana rescheduling in the U.S., a topic that's been very top of mind among this industry for a while. And apparently he said that the administration was going to be looking into it. Now that's really a long way between that and actual rescheduling, but nevertheless, this beaten down industry and the close observers to it took that as a dose of overdue good news. I mean, these stocks have, as you alluded to before, are down over 50% or so, many of the big ones. So this hint of good news has led to a rally yesterday and today. But I would advise observers to temper their enthusiasm because, as I mentioned, it's a long process between looking into it and actual rescheduling it, and it's even further to legalize it, which would really bestow the greatest benefits of all.
So you mentioned how we've seen a lot of these stocks really taking a beating this year. Can you just kind of contextualize here for our listeners what has created this lag?
Yeah, sure. So the market really had turned negative for the last couple of years, actually, with a lack of progress made on federal reform of this industry. Many states have taken it upon themselves to legalize either at the medical or adult use level. I mean, some 40 states now, talking about a vast majority of states have now legal cannabis in some form. So a lot of the industry players and the market thought it's just a matter of time that the federal government would retire these really old, the treaties that require cannabis to be a Schedule I drug. And that really puts the handcuffs on this industry to do a lot of good things in terms of business. Consumer product companies in general have the benefits of the economies of scale because they have interstate commerce. They can advertise. They're not hurt by onerous taxes, which these companies are subject to. So a lot of barriers facing this industry still, given their current status. And so it really, prior to these comments over the weekend, I think there's really been a sense of throwing the towel in among investors with this group. And so that's why you're seeing this at the magnification of response to this news today.
So if the majority of states have legalized cannabis, what's the problem with the federal government coming around and doing the same?
Well, the biggest thing, Paul, is because there's a treaty that was signed back in the 70s in the Nixon administration that, again, it's part of the anti-drug wars back then. They set this in a stone, basically, and only an act of Congress can change that treaty to no longer include marijuana, cannabis, as a Schedule I drug. So I guess, Congress doesn't seem to be willing to act. I mean, that's the biggest thing, that the biggest blockade to legalization. Kind of the shortcut reclassification under the Controlled Substances Act. A lot of the industry is saying, look, you're putting us at Schedule I, which is the same level as, ecstasy and fentanyl, all these harmful things. And the definition for a Schedule I is there's no proven medical value. Well, that kind of contradicts the own FDA's decision a few years ago when it approved a cannabis drug called Epidiolex, which is used to treat seizures in rare cases, for epilepsy. So clearly there's a medical use, and it doesn't belong as a Schedule I. If it was rescheduled to 3, it would still remain illegal unless that treaties are changed. It could at least alleviate something called 280E in a tax code, which basically says, look, if you're in the drug business, it may be a bad thing, but we still want your taxes. And so they don't allow these companies, these cannabis companies, to deduct ordinary business expenses like rent, salary, marketing. Wow. And so as you can imagine, the taxation hit to these companies is just dramatic, and that's really their biggest problem.
So there was a time back in the early 1920s when cigarettes were illegal. And then, of course, we know now when we look at the industry, the tobacco industry globally, it's a multi-billion-dollar industry. So if we think about cannabis stocks and a lot of these companies here, what's the bull case?
Well, the bull case is that at some point it gets rescheduled or legalized, and that's a long term. You got to remember the market as a discounting mechanism is looking, well into the future. Now, if you're a real bull, you look well into the future. These companies at the gross margin line are very profitable. You're talking about 40, 50, 60% gross margins. That's a pretty good business, but it's when you get below that, they really get hurt, particularly the taxation line. So if you're a bull in this industry, you say, you know what, these are pretty good companies. You need a license to compete, so there's natural barriers to entry. We know there's a demand for this product. It's been around for a long time. So, if they could just get the regulation right, this could be a pretty good business.
Can you also cover the big tobacco companies? How have they been impacted, or may they be impacted with the various tariff discussions that are out there?
Well, the U.S. tobacco industry is really a domestic business. The big guys, Altria, they source virtually all their tobacco domestically for domestic use. So their only exposure to the tariffs is really very small. Some of the materials they use, like their smokeless tobacco cans, tin, metals, things like that, they may get from suppliers offshore. And there could be indirect problems. I mean, other suppliers could raise prices in a small way for other inputs, but by and large, they can skirt this problem, and it's not really an issue for the U.S. tobacco industry.
Quickly hopping off of that question, I'm going to ask the same of cannabis. Is that more a domestic industry here? Any tariff concerns?
No tariffs concern. Matter of fact, it's illegal to import cannabis into the U.S. So it would only be to the extent where the vaporizers and the electronic goods and the ancillary products that are used with cannabis are subject to those import tariffs. But the plant itself, there's no tariff issue.
Yeah, and the tobacco stocks have done great. Altria's up 25% this year. Philip Morris up 40%. So there you go. Ken Shea, Senior Consumer Products Analyst for Bloomberg Intelligence. And yes, that includes the cannabis industry. And Ken was out with some of the first cannabis industry research several years ago on the street. So he is our resident expert on the weed business. I'm looking at, again, Altria, 52-week high here. I mean, how about that? Up 26% year to date. I guess as we maybe consider it a tariff-free kind of zone,
right.
A sector that might be...
Got to find your corners of
exactly
stability.
Right, so there you go. All right, coming up, we're going to check in with Sam Fazeli, Bloomberg Intelligence. He's a director of research over in Europe, but he's also one of the best pharmaceutical analysts in London. This is Bloomberg.
listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Norma Linda, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. Head over to youtube.com, search Bloomberg Local Radio, and that's where you'll find us. There you go, easy peasy. Nora, what are you looking at? Because you've got a real job when you write about the markets and everything. So what are you working on these days?
Well, there's really a lot to cover. I mean, I cover real estate stocks, so we've got the residential real estate, you've got home builders in focus, especially as you think about mortgage rates. They're so high. And of course, as we're looking at a lot of the stuff that we're seeing as the read through the CPI print and then a lot of the other prints we've been getting, I mean, it's really been something to really dig into. I mean, as I talk to people, it doesn't really feel like I'm hearing too many people closing on a house right now. But I mean, you are still seeing people out there, especially like in the luxury home builder space. But commercial real estate, of course, that also remains top of mind. And one of the interesting sectors that I'm always looking at is the senior housing space.
Right.
Especially as you think about the senior housing boom, and especially a lot of these boomers potentially being in a lot of those properties. So another space that we're watching really closely
here. The 30-year mortgage still high, 6.77%. All right, it's Tuesday. That means we check in with Sam Fazeli. We get the latest on the world of healthcare. Sam Fazeli is the Director of Research for Global Industries, and he's a Senior Pharmaceuticals Analyst for Bloomberg Intelligence. He is based in our London office. Sam, talk to us about some of the latest advances being made in the treatment of bladder cancer. I understand there's a combination of a couple of companies, different drugs that having some pretty good response rates.
Yeah. Yes, Paul, first, very nice to see you all. Having come back from a holiday, was just about to take a sip of my London tea when I realized I'm on. So look, we have one of the things that we're excited about in oncology and cancer is that every 2 or 3 years, there seems to be yet another big news that genuinely changes the potential outcome for patients with this cancer or that cancer. We've had prostate cancer in the past, breast cancer, etc. And now it's bladder cancer. And to be honest, this combination, Merck's pembrolizumab or Keytruda, plus this drug that was initially in the hands of a biotech company called Seagen, Seattle Genetics in the old days, then Pfizer's acquired called Padcev, 2 different modes of action, seem to work like magic. They have side effect issues, of course, this is cancer therapy, right? But the patients who can tolerate the agents are showing significant benefit. I mean, to the point that when the first data set for not the surgery group, but the earlier group where you're past surgery, you got metastatic disease, was presented at a conference, they got a standing ovation. I think the speaker had tears in his eyes when he was presenting it. So these are because you change survival by orders of magnitude in these patients. So bladder cancer is an awful cancer, and here we are, another win.
So who are the other major players here outside of Pfizer as it relates specifically to different drugs and whatnot for bladder cancer survival?
Yeah, so there are, this particular one is currently Pfizer, Padcev, and obviously Keytruda from Merck, which is this magic drug that activates your immune system to attack the cancer. But there's others. There are other types of bladder cancer, which are jargon called non-muscle invasive bladder cancer, where a very, what you could say, much lower tech, although that's not fair because there's a lot of tech going into it, device that you can put inside the bladder, and it releases chemotherapy. And again, that gives a great result in that group of patients. And that's from Johnson & Johnson. It's called TAR-200. That was acquired from a drug development early stage biotech company. So there's that. Then there's new modalities using active viruses that you can put in the bladder. The bladder is a bit special because you can put things in it, and it can act on the inside of the cells if the bladder, if the tumor's there. So there's quite a bit going on, and here's one of the ones that we're really, really excited by. And as I said, TAR-200 from Johnson & Johnson.
All right, Sam, who is this guy, Vinay Prasad, over there at the FDA, and do we care about this guy?
Yeah, we do care about this guy because he's actually a well-known hematologist who was brought in by Commissioner McCarry to run one of the 2 major divisions of the FDA called CBER, Center for Biologics Evaluation and Research. And then for some reason, although there seems to be some disagreements as to whether it was pushed out or wasn't pushed out, what was fake news or wasn't fake news, a couple of weeks back, he leaves. And then McCarry has brought him back. So during the time, the day he left, the biotech sector moved up. I think people were worried that it's going to be really hard on some areas where you can get away with doing shorter, quicker clinical trials in oncology, etc. He had a very puritanistic, if that's a word, I can't do it. You say it for me. Puritanical. There you go. I got it. Puritanical approach to getting these drugs approved. So now he's back. It doesn't look like the market's reacting in the opposite direction. So that's good. And this is the division that looks after vaccines, blood products, and of course, cell therapies and gene therapies, which is, and again, there's a bit of an overlap with other areas. Right. So he has been a controversial person, but I think from a science perspective, is solid.
Where'd you go for holiday?
Oh, but look, I'm an old man. I just spent an hour and a half drive from my house to the beach.
There you go.
It's like you guys going to Jersey Beach.
That's right.
That's sort of
Jersey Shore. Very
like
good.
Me.
Sam Fazeli, Director of
Shore,
Research for Global Industries and Senior Pharmaceutical Analyst for Bloomberg Intelligence. And his beach, it's in France.
Oh.
So, I mean, that's where he lives.
Can't
he lives
even
in France.
compete.
Exactly. So he's playing it down, but he wants probably the south of France somewhere.
Oh, for sure.
That's how he rolls. I do the Jersey Shore. Sam does, the south of France. That's as it should be. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence is going to start right now. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a debt spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, Norma Linda, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up in this hour, we're going to check in with Anurag Rana, Bloomberg technology analyst. Apparently, Elon Musk had some not so nice things to say about Apple, so we'll get the latest on what's happening there. Eric Schatzker, editorial director for Bloomberg New Economy. He's got a great Bloomberg Business Week story out here. He sat down with Scott Bessent, Treasury Secretary, and really talked trade, deficits, and President Trump's economic plan. Fascinating discussion, fascinating read. We'll talk to Eric here in our studio. Dana Dioria, co-CIO and group president for Investnet Solutions, to discuss her outlook on the markets. And Michael McKee, you know him, you love him. He does all the economic stuff for Bloomberg. We'll get his thoughts on the inflation data and President Trump naming E.J. Antoni to lead the Bureau of Labor Statistics. What does that mean going forward? We'll get all that breakdown coming up. But first, let's get a Bloomberg Business Flash with Charlie Pellet.
Hi, thank you very much, Paul Sweeney. Stocks higher across the board right now, with the Dow, the S&P, NASDAQ all advancing. CPI Tuesday, and the S&P right now climbing by 47 points, 64.20 where we stand. We're looking at a record up 0.7%. The Dow pushing higher by 483, up 1.1%. S&P, by the way, holding very close to session highs on this Tuesday morning, with NASDAQ up 154 right now. That is a gain of 0.7%. The Bloomberg Mag 7 index up 0.5%. Dow Transports, by the way, surging 2.7%. Your 10-year 4.29%, with a 2-year currently yielding 3.75%. Spot gold, little change, down 0.1%. Spot gold down $3 the ounce to $33.39. West Texas Intermediate crude 63.68 a barrel, down 0.4%. And Bitcoin at 119,475, up 0.5%. So what about this morning's CPI report? What does it mean for the Federal Reserve? Priya Misra is portfolio manager at JP Morgan Investment Management. She was a guest right here on Bloomberg Intelligence.
The market's pricing in a very high chance of a September rate cut. I think it makes sense. I think they're likely to cut rates. We still have the PCE report. We have another payroll report. So there's still more data. They're not going to commit to it.
JP Morgan's Priya Misra, interviewed right here on Bloomberg Intelligence. NVIDIA lower after the information reported that Chinese internet regulator ordered local tech companies, including ByteDance, Alibaba, and Tencent, to suspend their purchases of the company's chips over data security concerns. The information citing sources. On an update for the rest of the market, NVIDIA down 0.1%. So again, recapping here, stocks are higher, S&P up 0.7%, and yes, our coverage of the CPI report will continue right here on Bloomberg Intelligence. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. As Charlie was just reporting, we've got green on the screen across the board. Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Norma Linda, and we're joined by Bloomberg's Vildana Heinrich. She joins us here in our Bloomberg Interactive Broker studio. Vildana, what are you looking at today?
I'm taking a look at some of the cannabis producers. Obviously, one of the big stories this week, but a bunch are rising again today after Monday's pretty big day. And I was taking a look at Tilray Brands, TLRY. It's up some 9% after a 42% gain just yesterday. Wow. Aurora Cannabis, that's ticker ACB, that's plus 1% today after 16% yesterday. We, of course, know that President Donald Trump said earlier this week and has made some comments in the last couple of days or over the last couple of days where he said he was considering reclassifying marijuana as a less dangerous drug. So that's sending shares up much higher. And there's an ETF I was also tracking, MSOS, and that got a small inflow, some $20 million in Monday's session because of this news.
Wow. We were talking to Ken Shea, and Ken Shea, who covers it for Bloomberg Intelligence, and he was like, I don't think this is going to happen.
Right.
I mean, he was kind of saying there's a long way before we get any federal help here.
So much between that.
And he was even saying these companies were thinking about just selling assets and kind of getting out of the game.
It's definitely a beaten down sector,
Yep.
but some of the ETF tickers are actually really fun to track. There's ticker MJ and there's ticker Toke, so TOKE. So really good tickers.
I love that. What else are you keeping an eye on? I see Gildan Activewear.
Yeah, that's a Canadian company, but it's said to be in advanced talks to buy U.S. underwear maker. Should I whisper underwear?
Sure.
Hanes brand, ticker HBI. So we had the Financial Times initially reporting this, but Hanes brand shares are up 28% as we're speaking in today's trading following this news. Shares had lost some 40% this year through Monday. So big day for Hanes brand.
Most definitely. I mean, we're seeing those shares really in focus today, but you're also keeping an eye on Intel. What's going on this week? It's always in the news at this point.
There's something new about Intel every day these days. But shares of Intel, that's ticker INTC, up 3% today as we're speaking. And that's after President Trump said his meeting with the company's CEO Tan, was a very interesting one. So quote unquote, very interesting one. And the president also said that members of his cabinet would continue discussions with Intel CEO in the coming days. Intel put out a statement saying something along those lines as well, commitment to strengthening U.S. technology and manufacturing leadership, that type of thing. But these remarks are a stark reversal from just days earlier when the president called for CEO Tan's resignation and accused him of having conflicts of interest. So lots of people obviously paying attention to this one.
Just got to go to D.C., put the charm offensive on, maybe write a check, and you're good to go.
I'd be really good at that.
Exactly. All right, folks. Vildana Heinrich, cross-asset reporter, bringing us the news there. For more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. So there you go. Looking at this market, we still got some green on the screen here today. I want to check in with Anurag Rana, Bloomberg Intelligence Technology Analyst. Anurag, I seem to remember something in the zeitgeist, as Tom Keene would say. Elon Musk not real happy with Apple and maybe even vice versa. I'm not sure. What's going on there?
Yeah, if you go back a few years ago, Elon made a big deal about the fee that they have to pay on for, X subscriber, the 30% or so. I mean, there was a visible argument, but in a few days he was seen, walking around with Tim Cook in the campus, and the whole thing I mean, today's complaint was a bit odd because apps on the App Store don't go up just because Apple wants to do it that way. I mean, they go up because users are downloading one app over the other. In fact, the other day, I remember the Perplexity CEO was saying that in India App Store, his app is above ChatGPT and so forth. So, I mean, he's basically complaining that, XAI is not getting the same love as ChatGPT is, which to me is understandable given, where the presence of that is in terms of the ecosystem and the users. So I think that's really, some argument going there. But I think it's just news. Frankly, there's not much to it.
I mean, so you mentioned not much to it. So where do you go from here? I mean, what steps forward would he need to make to see any changes here?
He has to go prove the world that his Grok model is better than ChatGPT and their models. They just launched a brand new model, and they have to go figure out whether it's better than that. And he has to go and sell that to either enterprises or the consumer application and become, have the same number of users. I mean, you just can't say that, my product is not doing better because somebody else is not giving it the same amount of love. Even Google's model Gemini doesn't have that level of user base right now. I mean, the first mover advantage is OpenAI and ChatGPT, and the user growth has just been phenomenal, on that end. And there isn't, I don't think I know anybody at this time who's not using ChatGPT on their phone or any other device that they have.
Well, you can look at me. I don't use it. Let's talk about Apple. I see the stock having this nice move here, during the month of August here. Is this a sense that maybe they'll do something to maybe get a little bit more in the game as it relates to AI?
I think we discussed this a few months ago when, the president came out and criticized Tim Cook for building phones in India. And, the stock really took a hit at that point. But I think Tim Cook did the right thing. He announced a big plan. He went to the White House. He, essentially gave President Trump an assurance that he is working very hard to bring whatever he can in the U.S. This was just glass at one point, but I think that really made a huge pivot. The president was extremely complimentary of the stuff that he's doing. So, I mean, since then, you can see stocks been at a tear. So there was danger that, there could be additional surcharge on Apple or anything out there. So you don't want to be against the president at this point. So I think Apple's done a good job of managing that. Now the question is whether iPhone 17 will deliver. We've heard it's got a really cool new phone coming out. So I think things are looking good for Apple from that pen, but I'm still waiting for one particular element, that is the Google case, and whether Apple gets to keep the, partially or somewhat of the payment that it gets from Google.
All right, Anurag, thanks so much for joining us. Anurag Rana, one of our senior technology leaders for Bloomberg Intelligence out there in that burgeoning tech hub of Chicago, Illinois. Next guest had a fascinating story out. Bloomberg Business Week cover story. Treasury Secretary Scott Bessent. The U.S. Treasury Secretary has the ear of an impulsive president, and nervous investors worldwide hope it stays that way. And Eric Schatzker has an exclusive interview. Eric Schatzker, Bloomberg New Economy editorial director, joins us live here in our Bloomberg Interactive Broker studio. Eric, you sat down with Scott Bessent for an extended period of time. What were some of your takeaways there?
Gosh, well, first of all, the man is unbelievably busy.
Yeah, I can imagine.
Spent a day at the Treasury Department with our colleague Dan Flatley, and to observe how much he gets done in the course of a day, including spending an extended amount of time with us, gives you a window into the life of the Treasury Secretary in the Trump administration. And it's important to emphasize in the Trump administration because this particular Treasury Secretary has been given a whole host of responsibilities that go beyond that of the typical Treasury Secretary. We know that the Treasury Secretary in any administration is involved in tax policy, is involved in economic sanctions, is involved in financial regulation and the like. But President Trump has tasked Scott Bessent with trade negotiations, with striking, and not just any old trade negotiations. China, perhaps the most difficult trade negotiation of all. Japan, which was successful. South Korea, which was successful. Indonesia. The list goes on. He's also the acting IRS commissioner. He also crafted the very novel and original deal that the United States struck with Ukraine for a share of that country's mineral resource wealth back in April. These are not, and furthermore, I have to add, he was instrumental in getting the One Big Beautiful Bill through opposition among Republicans in both the House and the Senate in order to meet the president's self-imposed July 4th deadline. So Scott Bessent has taken on way more than your traditional Treasury Secretary does, and much of that is because the president himself has asked him to do so.
And it seems as though a lot of people see Bessent as really having the president's ear here. And this is a really fantastic story, by the way. What was the most surprising element through your conversation with him?
Oh, there's so many surprises. I would say that the thing I didn't fully appreciate, and which he spelled out for us and which others spelled out for us, is the degree to which this is something he sought after, going back many years. Bessent told us that he thought about joining the Trump campaign as early as 2016. But at that time, he just started a new hedge fund, Key Square Group, and he didn't feel like he could abandon his employees or abandon his clients. But what he did do was start to get to know the people close to Trump almost immediately thereafter, starting with Steve Bannon, and subsequently Peter Navarro, Stephen Moore, Kevin Hassett, for example, Trump's close economic advisors, Art Laffer. He went down to see Art Laffer in the South, made a pilgrimage of sorts to get Art Laffer's blessing for his ambitions to become Treasury Secretary. And these he didn't make known to Trump until October of 2023, excuse me, November of 2023. So it was almost a 6-year period in which he was maneuvering to position himself for a shot at Treasury Secretary. And when he saw Trump in that November 2023 meeting at Mar-a-Lago, Trump asked him if he wanted the job, if he was interested in being Fed chair. And Bessent said, no, I have another job in mind.
Very good. The street, Eric, gives Scott Bessent a fair amount of credit for walking the president back from maybe some of the more difficult tariffs that were initially announced. Is that a valid point? Did Scott Bessent play a big role in walking the president back a little bit? And does he take credit for that, or is he kind of demure?
Bessent insists that his job is not to explain things to the president or to advise the president. It is to present the president with a series of options. Here's path 1, here's path 2, here's path 3. And I will explain to you where we get if we go down 1, if we go down 2, or if we go down 3. And he leaves it ultimately for Trump to make the decision. That's very, I wouldn't say that's unique to this president, but Trump has a very particular view of his role as a decider-in-chief in this administration that is perhaps different from what we saw with Biden or with Obama, or even going back in history to other Republicans like George W. Bush and maybe even Ronald Reagan. So Bessent does not claim credit for being the de-escalationist, but it is clear, talking to people around him and to understanding how the market thinks, market psychology, if you will, which is, you know, one of his areas of expertise, having been a macro hedge fund manager for almost 40 years, that is where it really counts. The market trusts him, and the market, based on its observations, draws these conclusions, rightly or wrongly.
Did he share any concerns he may have about just getting somehow involved in some of the crossfire that happens around President Trump and getting into President Trump's bad graces, or just kind of, I mean, because it's such a perilous, those people that fly close to President Trump historically have done it at their own risk, including the former vice president. So how does he negotiate? Does he even acknowledge that that's a risk?
What I divined from the conversations we had with the Treasury Secretary is that there is a formula for success in the Trump administration, and it means making certain compromises, if you will, with yourself. You can come in with your own ideas, but it is not your job to advance that agenda. So you have to make some compromises. If you don't, and Steven Mnuchin, the former Treasury Secretary, points this out, if you cannot represent the president well, in other words, if you can't get behind what the president wants, the role has no power. What's the point of being in D.C.? What's the point of abandoning a 40-year career in finance where you rose to be one of the most successful hedge fund managers and have, you know, for it all to be worthless, have to have no power? No, you want to be able to wield influence and get things done, and that's very much in the back of Scott Bessent's mind. What's my legacy as Treasury Secretary going to be?
All right, folks, if you really want to get a sense of who Scott Bessent is and his importance to global Wall Street, I really highly recommend you read this piece in Bloomberg Business Week. Eric Chatzker.
Thank you, Paul.
We really appreciate it. He's a Bloomberg New Economy editorial director. You can go check it out, Bloomberg. Absolutely. Looking at the markets here, S&P up 53 points. That's 0.8%. I'll take that. Beats a stick in the eye. NASDAQ up a couple hundred points. That's 1%. So good response to that CPI print. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Best level of the morning right now on the S&P 500 index. CPI Tuesday stocks pushing higher as an in-line inflation reading bolsters speculation that the Fed will have room to cut interest rates in September, driving stocks higher and short-dated bond yields lower. So here's where we stand. We got the S&P up 53 at a record right now, 64.26. That is a gain of 0.8%. The Dow up 1%, higher by 450 points. NASDAQ also up 1% right now, up 210 points. The Russell 2000 index of small cap shares surging 1.9%, and the Mag 7 index up by 0.9%. Dow Transport's up 2.7%. 10-year 4.29%, with the 2-year 3.73%. We do have right now spot gold up $5 the ounce, up 0.2%, 33.47 the ounce. And West Texas Intermediate crude down 0.5%, 63.66 for a barrel of WTI. This update brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. On holding shares higher after the Swiss sportswear firm reported beat and raised second quarter results that Citi is describing as a, quote, standout report. Shares right now up by 8.4%. Again, recapping, stocks higher. S&P right now up 52. That is a gain of 0.8%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Norma Linda, Paul Sweeney live here in our Bloomberg Interactive Broker studio and streaming live on YouTube as well. As Charlie was just reporting markets moving higher. The CPI print came in, showed a little bit of inflation out there, but I think the market's saying basically not enough that would prevent the Fed from cutting in September. That seems to be the bet. We're getting a move higher in the stock market. We got yields, got the 10-year Treasury yield, it's up just a little bit here, 3 basis points. Dana Dioria, she is a co-chief investment officer at Envestnet, joining us here. Dana, are you surprised that on a daily basis, we seem to be making new highs, despite the fact that, I don't know, some trade uncertainty out there? There might be some economic slowdown. There may be some inflation on the horizon. Are you surprised that stock market's done so well here?
I think we've shown that we have just ability and propensity to keep driving it higher and sort of look past the negatives, because I mean, let's face it, we went through a period of time where we thought for sure the market, certainly when you looked at the collective wisdom of market, pundits and just folks who study the markets, it seemed that we were inevitably going to have a bear market after we had the increase in interest rates to fight inflation, and we kind of got past it. Then we have this AI trade that's just, as high as we go with these bulls, the earnings do seem to keep coming forward. And so it doesn't completely shock me. We have a few other good things, right? I mean, we have the indication that, now we've got another reprieve with China on tariffs. It seems to be the case that what was really driving the market crazy in April, Liberation Day, quote unquote, was sort of just a negotiating stance. And so the market has calmed down on that front. So you've got that, you've got the AI trade, you've got earnings keeping up. But your question is very valid. I mean, we are at very high multiples at this point for this market.
Dana, high multiples, we're seeing stocks that continue to charge higher, but where we are seeing some weakness, though, is within the U.S. dollar. Is the dollar still king?
Well, yeah, I mean, it's funny because even that in and of itself can be viewed positively, right? In some respects, and ultimately good for equities. But yeah, I would say, look, it's going to take a lot to move away from the dollar as the reserve currency. You obviously have more efforts along those lines now than you ever have before. And some of that probably bears fruit, but this is a rather inelastic type of situation when it comes to just the use of the dollar as that reserve currency, and the dollar kind of being the bellwether in a lot of respects for economic health. And so I think, while some of that is fraying and you're seeing more diversification maybe in that, it's not as though we're going to move away from that wholesale anytime soon.
I use the INGO function on the Bloomberg terminal. It gives me a Bloomberg index browser. And looking at the fixed income here across the U.S., lots of green there. People are making money in fixed income this year. How are you guys playing that?
Yeah, because we're working with retail investors, obviously, and very much, you're talking about many managers across many different portfolio types, but the 60-40 still sort of the big kind of way that most people are accessing capital markets. That 40%, for a long time, paying you nothing. Now you're finally making money on that. I would say to you that for the most part, we recommend try to have diversification across the yield curve, the movements that we see, from time to time don't really change that. Obviously, the Fed has a lot more control over what happens at the short end of the curve than the long end of the curve. So on the short end, certainly we expect, obviously, September now, base case is 100% that we're going to get this rate cut. But at the same time, 10 years, and when you go out further on the curve, they can be impacted by very different things. And so the average investor, we maintain, is just going to be best off with a diversified approach to that.
And you mentioned diversification. Are there any areas that you're particularly overweight on, any sectors?
So what I would say is that because, again, the average retail investor, number one, a lot of them are indexers now, right? And then number two, even if you're invested in active management, it's hard to have too much tracking error to that index, And so for the most part, the majority of investors at this point, because the indexes are so top heavy, they're top heavy, even if it's not an indexed investment per se, right? And so what we sort of recommend is making sure you do diversify into other parts of the market, not so much because we have a thesis that you need to get away from big tech or the AI trade, but simply because you're already extremely concentrated in that trade just by being in the market or just by being in a standard actively managed solution that really can't afford to have too much of a drift away from the market. And so what does that mean? It means be in small caps. It means be in international, emerging markets as well, try to diversify. And we also, in our market now, certainly in the wealth arena now, you're seeing just more and more penetration of alternatives as well.
Dana, thank you so much for joining us. Always appreciate getting a few minutes of your time. Dana Dioria, she is the Co-Chief Investment Officer at InvestNet, joining us from Hartford, Connecticut via that Zoom thing. All right, you don't like the labor statistics you get from your Bureau of Labor Statistics? Well, you can fire the leader, which is what President Trump did there. And then you name someone that you prefer. And President Trump names E.J. Antoni to lead the Bureau of Labor Statistics. What does that mean? I don't know, but Michael McKee knows because that's his remit, as Tom Keene would say. Michael McKee does all the economic stuff for Bloomberg, joining us here in our studio. So, Mike, who is E.J. Antoni, and will he have any impact on the data that gets reported?
The answer to the second question is no. The answer to the first question is he is a economist at the Heritage Foundation, which is a very right-wing organization, and he helped contribute to the Project 2025 outline that the president is following. And he's not someone with a lot of experience, and so there are concerns about whether he's the right person or not. But the biggest thing is he has criticized the BLS quite often, put it that way, and is going to be seen as maybe somebody coming into the BLS as an enemy of the statisticians who are there. So you can see that maybe he'll probably get confirmed, but it won't be a fun process.
Is this a major shakeup here? I mean, I'm looking at a headline that just crossed the Bloomberg terminal saying that E.J. Antoni is suggesting suspending the monthly jobs report that's on Fox Business. How much of a shift would this be here?
Well, I don't know whether he would have that power, but that would cause a huge uproar on Wall Street, and I'm sure that Mr. Antoni doesn't realize that because the people who have a lot of money on this, they do believe the numbers, and they do trade on the numbers. And as we know, I'm not going to speak ill of ADP in this sense, but their numbers are not predictive. They're their own numbers, and people trade on them one way or another, even if they don't think they're going to tell you what the actual BLS number is going to be. So the idea that you would not have numbers would serve only one purpose, and that would be to hide the performance of the economy under Donald Trump, which is one reason I think that he is appointing this person.
On the one hand, I feel like the data's the data. There's not much he can do to it. But then I remember back to my junior investment banking days when I had to put the pitch book together, and you could manipulate those league tables any way you want to make your firm look more competitive. So data can be manipulated, I guess. What's the feeling in the market as to the authenticity of just government data in general?
There is concern that the data are becoming less scientifically reliable. I mean, they are scientifically valid, but because we've seen a decline in the response rates to a lot of these numbers, that it's getting harder for the statistical agencies to give you the same margin of error that you used to have. And they're having to impute more numbers now because their budgets have been cut and they have a harder time recruiting people to get out and check the prices and to make the phone calls and that sort of thing.
Right.
So there's been a general concern about that, but not because the statisticians are inaccurate, but because the statistical agencies are being starved of resources at a time when they do need to make some changes,
right,
because the way people relate to pollsters and people asking questions has changed.
Exactly. All right, Michael McKee, thanks so much. We appreciate that. Michael McKee, International Economics and Policy Correspondent. Here's an interesting red headline crossing the terminal. AI startup Perplexity makes $34.5 billion offer for Google Chrome. This is according to reporting in the Wall Street Journal. That was not on my bingo card.
Not at all.
I mean, A, I didn't know it was up for sale. B, I don't know much about Perplexity as a private company. And boy, that's a big number. But
Massive.
maybe sensing that the government may be pressuring Google to break up some of its business and let's get in there early. But we will have more reporting on that. But Alphabet, the stock is up about 0.75% today. It's up about 7% on the year, and on a trailing 12-month basis, it's up about 28%, but 25%. It's got a market cap of $2.45 trillion. Does Alphabet. So that is interesting news. Perplexity makes a $34.5 billion offer for Google Chrome, and this is according to the Wall Street Journal. So we'll have more reporting on that, you can be sure, because that kind of gets your attention. All right, folks, coming up later this month, join us for live coverage from Jackson Hole. We'll be on the ground in Wyoming to cover the Kansas City's Fed annual meeting and remarks from Chair Jay Powell. It all starts Wednesday, August 20th, and finishes up with a special edition of Bloomberg Surveillance. Tom Keene, Lisa Bronwitz, and Michael McKee will be at that part of the special on 9 a.m. Friday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a developing story. Headline right off the Bloomberg Professional Service, AI startup Perplexity is making a $34.5 billion offer for Google Chrome. This, according to the Wall Street Journal. Alphabet shares up now by 1%. But again, repeating the headline, we're watching the story. AI startup Perplexity making a $34.5 billion offer for Google Chrome. Again, this according to the Wall Street Journal. U.S. stocks trading at just about the best level of the morning right now, with the S&P up 52, 64.26, a gain now of 0.8%. Dow Industrials up 429. That is a gain of 1%. NASDAQ also higher by 1%, pushing higher by 210 points. Indeed, records right now for both the NASDAQ Composite Index and the S&P 500 Index. Our Mag 7 Index up 0.9%. Cannot ignore the Dow Transports up 2.8%. 10-year 4.29%, but the 2-year 3.72%. Spot gold up 0.3%, 33.52 the ounce, and West Texas Intermediate crude oil down 1%, 63.33 a barrel. Bottom line here, stocks are pushing higher. How much further can the bull run? That question this morning for Dana Dioria, Co-Chief Investment Officer at Envestnet, who was a guest right here on Bloomberg Intelligence.
We have the indication that, now we've got another reprieve with China on tariffs. It seems to be the case that what was really driving the market crazy in April, Liberation Day, quote unquote, was sort of just a negotiating stance. And so the market has calmed down on that front. So you've got that, you've got the AI trade, you've got earnings keeping up. But I mean, we are at very high multiples at this point for this market.
Dana Dioria of Envestnet. Again, repeating our top story at this hour, the AI startup Perplexity has made a $34.5 billion offer for Google Chrome, this according to the Wall Street Journal. Recapping, stocks higher, S&P up 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. As always, a Google Chrome story and Perplexity, really fascinating, and in anticipation of what might be a judge's ruling requiring some divestiture of some of Alphabet's assets. So we'll stay on top of that. Another area that, Ed Ludlow, who's our technology dude out there in San Francisco, he's been extolling the virtues of robo-taxis, autonomous vehicles. He's been in them. He's all in on this stuff. And I don't know. I guess we're going there. I don't know. I'm going to check in with the expert on this stuff, Andrew Grant, head of Intelligent Mobility at BNEF. Andrew, thanks so much for joining us here. Where are we with robo-taxis in the U.S., in the rest of the world? Give us just an update here.
Yeah, thanks for having me. So, wouldn't it be a great way to have a way to measure how the progress that we have on the robotaxi side and the self-driving vehicle side? Sometimes it can be quite difficult to monitor the sector, and there's a lot of promises made, and there's a lot happening in the kind of AI black box. And what we try to do is measure things that you can actually see and count. So we've been looking at some real operational statistics that have been coming out from some of the robotaxi companies, and coming up with a way to grade how serious an operation is. Are these projects actually operating on public roads? Are they offering their rides to the general public, or do you need to go on a selective wait list? Are they putting their money where their mouths are and charging a fee for the service? Do they actually have a safety driver in the vehicle, or humans still supervising in the vehicle, or have they pulled that? And are they able to operate in all weather conditions 24 hours a day, 7 days a week? And if they kind of score a 5 out of 5 in our grade, that's a fully functional operational robotaxi service. We count about 8 of those operating in different cities around the world. I should say around the world. At the moment, it's just China and the US.
Okay, so we're seeing China and the US as the two leaders here?
Yeah, at the moment, we have kind of 4 companies that have met those grades. We do have another 16 projects that are kind of 4 out of 5 on our ranking metric there. I should mention that Tesla just gets 2, but a lot of these companies are looking to expand outside their home markets, certainly expanding to places like Singapore, the Middle East, and the UAE. And then, of course, Europe, which at the moment there's regulations that are kind of preventing a wider spread rollout of robotaxis, but a lot of these companies are targeting 2026 for deployment across a number of European cities.
So who are the leaders here at this early stage?
I mean, really, you're talking about Waymo with the most projects that meet our grading of fully operational robotaxi services. But from the Chinese automakers, the China robotaxi developer side, you're also talking about Baidu, WeRide, Pony AI that are scoring highly on these metrics and looking to expand.
What are some of the regulatory hurdles here? Are there any areas in particular in the United States where it's a bit more open season?
It's a very complex regulatory environment at the moment because you can kind of have these national or federal level ambitions, but really it comes down to not just even state level, but down to city level, where you need to work really closely with a lot of these regulators to deploy these services in a tightly geofenced environment. So you need to be actively, if you're a robotaxi developer, you need to be actively talking to a lot of these regulators and helping them understand what you're trying to do and how you're trying to complement what they want to do on the public transport side or on their transport infrastructure side to make this work and make it a valuable project for both entities. So I always describe the regulatory environment. It's very iterative. You kind of need to tick one box, prove to your regulators how you're doing, and then continue to grow that relationship and kind of build the regulations with them. And a lot of knowledge exchange needs to happen as you progress.
Yeah, I'm just looking at your self-driving vehicle tractor at www.bnaf.com. Have to be a Bloomberg terminal user, I believe.
Yes.
But very, very cool. It's an interactive kind of model showing you where around the world. So what are the gating issues here, Andrew, for fuller and fuller deployment going out over the next several years? Is it regulatory? Is it technology? Is it capital? What are the key drivers for just, I guess, adoption over the next several years?
I mean, we talk a lot about the technology and the regulatory side, and both need to improve, and I think both will. What's probably doesn't get enough attention, and we're starting to see a lot more focus on that at the moment, is just the value chain really starting to take shape. Building a car, building the software and the related hardware that goes into powering a self-driving vehicle, matching the vehicle with users, owning the vehicle. These are all things that have different skill sets from a company perspective. They have different capital requirements, and they have different payback periods. So we're starting to see different roles form in this part of the value chain. You're seeing the many deals that, say, Uber has signed over the last 18 months. They've signed deals with at least 10 different self-driving vehicle developers across the taxi and truck space and the delivery bot space, I should say, as well. And they're really trying to put their best foot forward, or to borrow the Jeff Bezos expression, just focus on what makes the beer taste better and really specialize in their different areas. So we're really starting to see a more robust and definitive shape form for the robotaxi value chain.
Andrew, are you expecting any new entrants into this space or any new partnerships potentially?
Definitely on the partnership side, and there could be some new entrants on the robotaxi side of things, but really I think there's a room for many new companies to become involved in the robotaxi value chain, maybe along vehicle ownership, operation, fleet management, that side of things, where a lot of the robotaxi developers want to remain focused on building out their technology and improving it on that side of things. They seem at the moment quite happy to work with a lot of the ride-hailing companies, your Ubers, Lyfts, and Didis of the world. So there's potentially significant room for companies to come in and actually own and manage and operate these vehicles in localized and distributed environments.
Andrew, thank you so much. Really fascinating stuff. And again, this self-driving vehicle tractor, go to bnef.com. If you're a Bloomberg terminal user, you need to get that for authentication. But you can really see where these things are being deployed and what stage of deployment it is. It's a great, great tool. Andrew Grant and BNF folks getting it done over there. Andrew Grant, head of intelligent mobility. I'll go with that. This is Bloomberg.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Hey, Norma Linda here. Happy Tuesday here with Paul Sweeney on Bloomberg Intelligence Radio. My head is in the clouds today, or rather space. We're joined here by Bruce Einhorn. He's Bloomberg News editor and space reporter based out of our Princeton, New Jersey office. And he's here to kind of break down what's going on, what's the latest with the space industry. We're looking at shares of AST Space Mobile today. We're looking at the company that's headquartered in Midland, Texas. They build satellites in space so that regular cell phones can connect to space in the same way that they do cell towers here on Earth. Bruce, I want to kind of get an idea of what your main takeaways were from earnings that we saw out last night.
Well, the key thing with AST Space Mobile is they're building out their network of satellites. The goal is they want to have sufficient number of satellites, ultimately around 90 satellites in low Earth orbit to be able to provide service worldwide. At the moment, they only have a handful of satellites up there. So they're in the process of getting those made and then launched. They were pretty optimistic in their assessment yesterday in terms of how quickly they're going to be able to get those satellites up in orbit. They talked about having regular launches next year, and so I think that's one reason that investors seem to be enthusiastic about the company today.
Here's another company that I completely missed on AST Space Mobile. I mean, it's got a market cap of $18.3 billion. The stock's up 11% today, up 140% this year, up 160% on a trailing 12-month basis. So clearly the market likes us here. Bruce, who do they compete with? Because isn't like SpaceX doing the Starlink thing and stuff like that?
Yeah, there you go. They're competing with SpaceX. And that's one of the problems is they're competing against SpaceX because Starlink has a similar service that they're doing with T-Mobile, direct to device. At the same time that AST is competing with SpaceX in that business, they're also relying on SpaceX to get their satellites into orbit. They plan on using SpaceX rockets for some of their launches. They also want to use rockets from Blue Origin, the New Glenn rocket. Blue Origin, is the company that's backed by Jeff Bezos. That rocket has had some issues. It had its first launch earlier this year. They were hoping to have a second launch in the spring. That didn't happen. We're now just waiting to hear when there's going to be another launch for the New Glenn. That said, the company, AST, seems to be pretty positive that they're going to get the rides to space that they need, whether it's from New Glenn or whether it's from SpaceX.
Well, we saw AST Space Mobile really laying out an ambitious plan here, launching 45 to 60 satellites this year and in 2026. They also said that they received 2 additional early-stage contracts for the U.S. government. But when we look on a broader scale, who's the real leader here? Is it Starlink, or who's getting the most government contracts?
Well, it's in this business in particular, the direct-to-device business. It's still very, very early in this in the development of this business. So while it seems that at the moment Starlink has an edge because they have the satellites up there, and
they've started offering some service with T-Mobile. There's still quite a way to go, so there's plenty of room for AST here to catch up. AST, in their comments yesterday, did make the point that they need fewer satellites because their satellites are larger, so they don't need the thousands of satellites that Starlink has. They're talking about fewer than 100.
Who have they partnered with, AST? Who are their partners? Because I would think they would need some telecom partnerships here.
Indeed, yes. And they do have some big names. They have agreements to team up with AT&T, with Verizon, with Vodafone, a lot of other companies around the world. So they do have some big names. They are talking about having some service, what they call intermittent service, so not continuous coverage, but at least beginning to offer service in the US by the end of the year and also in some other countries. And then their goal is sometime next year to have enough satellites up that they can ramp that up to more full-fledged service.
So when we're thinking about the industry more broadly, what is the estimate for when we actually expect to see that there will be no coverage gaps? Because the whole point here for this industry is that they're just trying to eliminate any sort of no signal. So you should be able to get signal whether you're in the ocean or some remote desert, right?
Yes, I think that's a good point that you're making. That is the goal. I think that while some people look at this and think, oh, I'll be able to use satellites for all of my cell phone stuff, all of my mobile devices, and I won't need to have a cellular network at all. I think for the most part, the idea is rather to fill in gaps to make sure that there are no drops in coverage. So with AST, the big question is just how quickly can they get the satellites up? So they, for the US and their other key markets, they say that they need around 60 satellites. At the pace that they've laid out, they might be able to have those up by next year. We'll see.
Bruce, I know you're a graduate of Princeton University, so I have one critical question that I ask every graduate. Favorite sandwich at Hoagie Haven?
I'm going to disappoint you. I keep kosher, so I can't eat at Hoagie Haven.
Dude, you're crushing me. Hoagie Haven does everything kosher there?
Well, you'll have to talk to my rabbi.
All right, very good about that. Hey, great story, Bruce. Appreciate all the reporting on this AST. Again, another company I miss. Bruce Einhorn, he's editor and space reporter for Bloomberg News, joining us from our Princeton campus. All right, folks, Bloomberg is now in your dashboard with Apple CarPlay and Android Auto and access to every Bloomberg story. Okay, promo. Which one? There you go. I'm looking at the markets here. We got the S&P 500 up 56 points, 0.9%. The Dow's up 450 points. That's 1%. Bloomberg is now in your dashboard. Oh, no. For listeners in the U.S., a reminder, you can listen to us via satellite radio. Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Balance of Power is coming up right now.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Tuesday edition with a big treat right off the top. Conversation with the new commissioner of the Securities and Exchange Commission, Hester Pierce. We'll have analysis immediately following with Nathan Dean at Bloomberg Intelligence. And as core inflation warms up, we learned that this morning in the CPI. We'll review the data with Bloomberg Economics editor Molly Smith. But first, Wall Street in a very good mood following the print here. Maybe there's more to it, including earnings. We start in New York, as always, with Charlie Pellet on the markets. Charlie, how's it look?
Right now, a lot of green on the screen, Joe Matthew. The core consumer price index increased by 0.3% from June, in line with economists' forecasts, and stocks are taking off. In fact, the S&P right now, best level of the session, up 55. That is a gain of just about 0.9%. We've got the Dow up 464, up 1.1%. The NASDAQ Composite Index up 210, up by 1%. 10-year 4.29%, the 2-year 3.73%, and spot gold up 0.2%, 33.48 the ounce. Recapping CPI Tuesday, stocks higher, S&P up 0.9. Balance of Power kicks off now. Back we go to Washington once again. Here he is, Joe Matthew.
All right, Charlie, many thanks to Charlie Pellet. We'll have a more complete readout on the markets and all the headlines driving business today a little bit later on in the hour here. About 20 minutes from now, we'll check in with Charlie at World Headquarters in New York. Thanks for being with us on Bloomberg Radio, on the satellite radio channel 121, and on YouTube if you want to watch the radio on TV. And this would be a good time to do it as we prepare to hear from the new SEC commissioner. Search Bloomberg Business News Live. CPI Day, we're going to get into that, as I mentioned, a little bit later on with Molly Smith. The data here raising new questions about the trajectory of inflation. But we first want to hear from the big boss at the SEC, Hester Pierce, now in conversation on Bloomberg Crypto's TV program. Katie Greifeld holding forth in New York. Let's listen live now on Bloomberg.
To allow those retirement accounts to invest in private assets, to invest in crypto, or at least to allow it. How will the SEC approach this? What does that checklist look like?
Katie, it's great to be here. I think we've already started that process of opening the private markets to retail and thinking about ways that we can get them access in a way that's diversified, professionally managed, and consistent with their investing timeframes. And so I think we'll just continue with that work.
Appreciate that context. So as we continue on and as you approach this, talk us through some of the potential risks that you're thinking about, because certainly a lot of folks on Wall Street and elsewhere have been anticipating these rule changes, but there's also a lot of concern too about putting what are risky assets in retirement accounts.
Yes, I mean, I think those are legitimate concerns. What we've seen, of course, is that the public markets are dominated by several large companies, and also companies are waiting longer to go public. And so we're looking for a way for retail to get earlier access to the growth of companies. And so that's really the goal of it. But of course, you want to do it in a way that makes sure that we're not just using retail as a dumping ground for bad assets. So I think it's making sure, again, that there's professional management, that it's done in a way that's careful, and that we're paying attention to the risks associated with it.
A conversation I've been having around this topic is about how this isn't as simple as switching a light switch necessarily, that you're not going to see private assets, you're not going to see crypto in retirement accounts overnight. You said that you've already started this process on your end, you're working through that checklist. What do you see as the timeline here?
Well, I mean, I think even already we have loosened, SEC made restrictions that really were not based in law on the percentage of private assets that could be available in retail accounts, in funds that are available to retail investors. So I think that process has begun. We have a new head of our Division of Investment Management, and he's working closely with the staff. And working also with people who have been thinking about how to do this in the private sector. So it's a combination of those things.
All right, well, appreciate the update there. Hope to keep talking about that. But I do want to move on, and I want to talk about tokenization. That obviously another big hot topic of the moment. And when we're talking about everyday investors getting involved with tokenization, what are some of the risks in your view that could potentially come about?
Well, I think there has been a lot of interest in tokenizing securities and other real-world assets, and that's something that really opened up after the SEC changed its perspective on crypto. So we're seeing a lot of interest from traditional financial firms and native crypto firms. And there are different approaches that are being taken to tokenizing. So we will work with people. We're willing to work with people who are taking different approaches. But it's really important that people be very careful about disclosing what the nature of the asset is. When you tokenize something, it's still a security. If you're tokenizing a security, it may be a security with different characteristics, and that's something that needs to be conveyed to investors. And it's also important to be aware of sometimes their trading restrictions, or their restrictions on who can access particular types of securities, and so that's something people have to pay attention to.
And that's a point that you've made in the past, that tokenized securities are still securities. You do have some firms, I'm thinking of Robinhood, for example, rolling out tokenized stock trading. I believe that's taken hold in Europe. So, I mean, do you see that as a potential area where you could run into some of these confrontations over firms trying to really regulate and innovate and introduce measures such as that, but potentially coming up against some of these regulations that you're putting in place?
Well, without talking about any particular firm's approach, I think the bottom line is that we encourage firms to come in and talk to us. We expect that there will be some different approaches taken to tokenizing, and we're looking forward to working with folks to try those different models out and see what the market's like, and see whether or not tokenization of equity securities takes hold. I mean, that really will ultimately be up to the market. But what our message is that we're willing to work through different potential models with people.
Well, you said something interesting there. You know, if tokenized equities take hold, and it's a good reminder that this is very nascent, that we're only just seeing the first few attempts at this come about. But should these tokenized real-world assets, should tokenized equities really take off, should we expect a formal pilot program from the SEC for tokenized securities?
I think the pilot program, again, is more likely to look like multiple pilots with different people coming in and trying to do this in different ways. And again, we're not trying to be the picker of winners and losers, but letting the market decide. So really, we expect that there will be multiple options.
I do also want to talk about how you interact with some of the other regulatory bodies in DC. For a lot of folks, it's kind of like alphabet soup. You have the SEC, you also have the CFTC. And I'm wondering how you work with the CFTC on crypto right now, if at all. What does that relationship look like?
We have a good relationship with the CFTC. We've worked with them. I personally have worked with the CFTC over the years on a number of issues, including security-based swaps. And so right now, both agencies are coming off the President's Working Group report recommendations. We're both trying to implement those recommendations, the ones that we can start already, absent market structure legislation. And so we're coordinating with the CFTC on moving forward on those recommendations.
Well, to that point, one of the recommendations was that crypto exchanges and other crypto entities that are registered with the SEC, that they should have to pay transaction fees the same way that traditional brokerages do, for example. Do you agree with that?
I certainly understand that we need to have the fees fall on the people who are benefiting from the revenue of the fees. So I think that as the markets change, those changes should be reflected in fee revenue.
And Commissioner, you also brought up market structure. We know that crypto market structure bill is working its way through. The sense seems to be on the street that it faces a much tougher go-ahead than the stablecoin bill, for example. I would love to hear your thoughts there.
Well, I don't prognosticate about legislation any more than I do about where the markets might go in terms of which models of tokenization they might embrace. But I do think that the work has been really impressive on the part of the House, and the Senate is now looking at these issues. It's a very complicated piece of legislation to work out, but I think important, and we're happy to work with people in both the House and the Senate on trying to get it to the place where it will help to guide the shaping of the industry.
And just game planning here. Let's say that Congress isn't able to finish this market structure bill by November. What would that mean for the SEC and your approach to regulation?
I think one thing that's important to underscore is that we at the SEC are not waiting for legislation to work. We have a lot of work that we can do under the existing authority that we have, and we think that the President's Working Group report urged us to take those steps. And so we've been working since January on providing guidance about where the securities laws apply, and then where they do apply, helping firms to navigate those rules. And so that's something that we are hard at work on. We're working on rulemaking, and we think that what we do will be consistent with whatever market structure legislation comes out.
And Commissioner, I do want to talk a little bit about Project Crypto. I know that, that's put together to help implement the Presidential Working Group's recommendations. How is that project going right now? What does that look like?
I mean, it's going very well. We're working very collaboratively with staff all across the Crypto Task Force is working collaboratively with staff across the building at the SEC. We are meeting with industry and with other interested parties. We're taking written comments as well, and we're putting that together into a package of reforms. As I said, we've already gotten some guidance out the door, but we are hoping to get some proposed rulemaking out the door as well.
Well, Commissioner, we really appreciate you taking the time to speak with us today. That is SEC Commissioner Hester Peirce. Now, coming up next on Bloomberg Crypto, we'll be speaking with...
There you have it from Katie Greifeld. Many thanks, Katie, for the great conversation with the Commissioner of the SEC. I'm Joe Matthew in Washington. Thanks for being with us here on the Tuesday edition on the early side on Balance of Power on Bloomberg Radio. Dial us up if you want to watch the radio on TV, on YouTube. Search Bloomberg Business News Live. As we want to keep this conversation fresh with Nathan Dean, our friend at Bloomberg Intelligence, was listening along with you and I, senior U.S. policy analyst. When we consider, Nathan, great to see all the angst that surrounded her predecessor here at the top of the agency. What is the approach that makes her different from Gary Gensler?
Well, Gary Gensler took the approach for when it comes to crypto that 1930s era securities law still applied, and therefore you had to come in and register, and you sort of had to fit your plan within something that hadn't been updated in 90 years. What the SEC is doing right now, on the other hand, is they're saying, look, we now have a new digital asset class, and there needs to be new rules for the road to determine how is this going to operate in today's markets. So, they mentioned in the interview the Clarity Act. This is the bill that's going through Congress. Think of that as like a touchdown, using a football analogy. What the SEC can do on its own gets in the field goal range. So it's not exactly going to get you exactly what you want from the Clarity Act, but what the SEC is doing in terms of clarifying what is a security, what is a commodity, and trying to figure out how firms can operate within today's regulations will certainly be much more beneficial to the Robinhoods and the Coinbases of the world than what we saw under the Gary Gensler era.
So as we try to unravel that, there was an interesting question about working with the CFTC, the extent to which the SEC can even do that without a leadership role at the CFTC. What did you make of her answer?
Well, so I think obviously the SEC and the CFTC are going to have to work together on this because remember, the SEC has authority over securities and the CFTC has authorities over commodities. And Bitcoin has already been deemed by the courts to be a commodity. And I think most of the crypto world wants their assets to be within the CFTC realm. The problem is that we don't have any permanent leadership over the CFTC. Brian Quinten's former CFTC commissioner was confirmed. Then the Senate Ag Committee pulled back, due to some reporting that maybe some folks in the crypto space aren't exactly thrilled with this idea of new regulation coming in. So I think for anything to really happen, you need both agencies to be working together, and you need that leadership to be put in place over at the CFTC so they can drive their changes forward in addition to what the SEC is doing, because I think most of the crypto world is interested in what the CFTC will eventually be doing.
Interesting. One of the headlines across the terminal from that conversation, Peirce says, not waiting for legislation to work on crypto. What can the SEC do without it?
So essentially, the SEC can, at a first point, go out there and say, look, we're not going to put you into enforcement violations. The idea of a gotcha violation. And what Commissioner Peirce was talking about was almost what we call in the regulatory space is principles-based regulation. She talked about pilot programs, and she said, well, we're going to have multiple pilot programs. To me, what that says is that we're just going to test maybe regulatory sandboxes, innovation, but we're going to go out there and we're going to let crypto firms develop what they think is going to be meeting the spirit of the regulation. They'll come to the SEC, and the SEC will say, great, we like this, you can continue with this. We don't like that. Remember, she said in the tokenization piece, securities are still securities, but you're not going to get hit with the gotcha violation for it. So it's going to be a little bit more innovative for the industry.
Looking at Bitcoin, where are we today as we discuss all of this? Just below $120,000. It's up a little bit less than 1% today. There was a huge development recently that the president signed the executive order to allow 401ks to start using crypto. Wasn't that supposed to be the floodgates moment? How come we're not at $250,000 on this?
Well, because I remember the executive order is just the first start of this process.
So when is that complete?
Well, so the executive order directs the Department of Labor and the SEC to go forth and conduct rulemakings within 180 days.
Okay.
Now, we think the Department of Labor, because remember, they own the retirement account jurisdiction due to ERISA. They're going to put out a proposal, we think, sometime between now, most likely either the beginning of next year. Then it has to go through that comment period. Where I'm going is you're not going to get a finalization on a proposal until mid to late next year.
Wow.
But then even at that point, well, if I'm a 401k fiduciary, do I want to bring in Bitcoin? Do I want to bring in Ethereum? How do I deal with the risk profile of a decentralized asset? I think you're going to see 401ks programs to come in and say, look, we are going to start investing in crypto, but it may not be the floodgates that people were anticipating.
Well, it's really interesting. As a forward-looking mechanism, you would think that they'd start pricing this stuff in because this is the story we've been hearing for years, right? Once we get these in retirement accounts, once there's an industrial component, this thing goes to the moon. That was the justification for $1 million coin, wasn't it?
Well, I think also a lot of it is the institutional adoption. Because look, retail adoption is out there in terms of speculation. But people want to see in the crypto space, they want to see institutional adoption. That usually only would come, I don't think that would come unless the Clarity Act passes.
Understood.
That gives those companies the ability to have their breather and say, look, we can go forth and actually develop strategies on bringing in crypto. But at the end of the day, there's a risk profile. These fiduciaries have to make sure that they're not just investing something that goes to zero. I'm not saying it would, but again, they have to account for the risk profile.
Interesting. So once the legislation passes, then we could see a repricing of the coin, I think is what you're saying, yes?
Well, I think once the legislation passes, the crypto advocates don't really have anything else that they would want from Washington.
Got it.
Now it's up to the market.
Understood. As we spend time with our friend Nathan Dean, I see you're writing about pot again. Trump's remarks point to marijuana status change, but not in second half. What is Nathan talking about? This elusive rescheduling that we've touched on so many times. It had cannabis investors in a tizzy this week, and the president did speak. Well, he was asked about it. He didn't bring it up at the news conference yesterday. Here's President Trump.
We're looking at it. Some people like it. Some people hate it. Some people hate the whole concept of marijuana because if it does bad for the children, it does bad for people that are older than children. But we're looking at reclassification, and we'll make a determination over the next, I would say, over the next few weeks. Very complicated subject, the subject of marijuana. I've heard great things having to do with medical, and I've had bad things having to do with just about everything else.
Since we're older than children, we can talk about this. Just that moment sent pot stocks on a tizzy. The MJ ETF was up like 27% in a day. Of course, we'd have to do that about 1,000 more times to get back to our high. But has anything changed here in your view? Is getting some lip service, has anything actually changed in terms of policy?
No, I mean, I think that answer was really good at saying, yes, we're going to do something, but maybe we won't.
We won't.
You know, what I'm going with is I think you are going to see an announcement from the White House coming to the DEA saying, look, we are going to move forward with some form of reschedulization, but I think it's going to be under the guise that there needs to be more analysis. That's not exactly what the pot community wants to hear.
They've heard that before.
Because we do think anecdotally that this DEA is not in line with this move. Terrence Cole, the administrator of the DEA, has a history of anti-marijuana views.
Yeah.
So what I think, you know, to be careful from what we're saying to our clients is, look, I do anticipate you're going to see a positive announcement that will get folks saying, look, reschedulization has happened. But let's remember, we've got 12,000 comment letters to write or to read. We've got a couple more hearings to go through. We've got additional studies and analyses to go through. That can't be done in 2025. And so I don't think this is going to play. I think this is going to be slow walk. I think they're going to continue to play this process out, and we'll have to get a better idea if they're actually going to do it in the first half of next year.
So it sounds like for investors who've been sitting on these stocks and watching them go down in just a painful process since everyone got their hopes up ahead of the Biden administration, that nothing's about to change anytime soon. If you're going to make money, it's on volatility.
Exactly. I mean, most of these, the reason why these stocks are going up 20-30% is because these are low dollar denomination stocks. I mean, these are $5 or less. You know, my colleague Ken Shea just put a note out just this morning as well, saying, look, the marijuana industry is struggling. And even if you get reschedulization, it's not going to change a lot of parameters from the fact that, you know, there's a lot of issues going on with marijuana at the moment in terms of logistics, in terms of compliance costs, in terms of risks. And even if you get full legalization, which we don't think is in the cards anytime soon, you still are going to have market-sensitive pressures against this industry. So, you know, reschedulization gets you that 20% bounce that, you know, you may want from a speculation perspective. It doesn't get you much more than that.
We get safe banking in the next year. Nobody talks about that
Nobody
anymore,
talks about it.
Wow.
We don't
Wow.
think it's in the cards.
Not in the cards. Incredible. As the president considers the whole concept of marijuana. I think the way he puts that. By the way, somebody told me recently only old people call it pot now. Is that?
I still call it pot, so I must be old.
Nathan Dean, we'll be old together. Bloomberg Intelligence, many thanks, sir. His phone's ringing off the hook. I sit right next to Nathan, and this is, in fact, what people are calling about, well, at least on a day like that. Imagine having Nathan at the other end of the phone. That's why we bring him on every week to talk to us here on Balance of Power. We do want to watch Wall Street. Aside from pot stocks, some movers today on this CPI day, and we're going to get with Molly Smith on the data after that. Charlie Pellet takes a look at the markets in New York for us. He's live at World Headquarters. Hey, Charlie.
Well, hello there, Joe Matthew. In a word, we're higher. S&P 500 index up 57 right now, looking at a gain of just about 0.9%. Dow Industrials up 456. That's an advance of 1%. NASDAQ up 225. NASDAQ Composite Index higher now by 1.1%. S&P topping 6,400, hitting a record today. Russell 2000 Index of small cap shares up now by 2.1%. All of this as an inline inflation reading this morning bolstered speculation that the Fed will have room to cut rates in September. The 10-year at 4.30% with the 2-year currently yielding 3.73%. Spot gold up $4 the ounce at $33.47, up by 0.2%. And West Texas Intermediate crude down 1%. WTI $63.30 for a barrel of West Texas Intermediate crude. Bitcoin, just talking about crypto, right now up 0.8%, just below $120,000. Bitcoin at $119,790. We're keeping an eye on shares of Alphabet. Right now, Perplexity has made a formal offer to acquire Google's Chrome browser for $34.5 billion. This, according to a Perplexity spokesperson. Shares of Alphabet right now, they're up by 1.2%. Recapping, stocks are gaining. S&P at a record 64.30 right now, up 57, up 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues now. Once again, your host, here he is, Joe Matthew.
All right, Charlie. Many thanks to Charlie Pellet, as ever. He's a big part of this program, and you'll hear from Charlie again in about 15, 20 minutes. We'll take another look at the markets. This is the way we get to talk politics and connect the dots between Washington and Wall Street every day here. And coming up, we will do just that with Molly Smith, Bloomberg economics editor on the data this morning. Speaking of connecting the dots, the most important story today, I'll say it out loud, for anybody on Wall Street or in Washington, is the great work of Dan Flatley and Eric Schatzker, Scott Bessent on tariffs, deficits, and Trump's economic plan. A lot of people have an opportunity to talk to Scott Bessent on TV. I love that, by the way. Look at the cover there if you're with us on YouTube. They gave him his own coin. Is that like a crypto thing? Bessent coin? I digress. This is one of the more important stories when it comes to policy and understanding a man who you hear about and see on a daily basis in these snippets of 9 or 10 minutes. Dan Flatley spent the whole day with him, went around town, saw him behind the scenes, trying to get a sense of how the man operates. Because I think if we've learned one thing, it's that he's got the president's ear, typically the last to talk to the president before he makes a decision on policy, whether it's interest rates, tariffs, or otherwise. Dan Flatley is with us right now, and it's great to see you. The best sent with a C, Matt. That's good. How are you? Thanks for coming over.
Doing well, yeah. Thanks, Joe.
This is a great piece of work, and we were talking off the air. This is one of the most challenging projects that we've really had in this new administration, getting to this Treasury Secretary, who I would argue is a more prominent Treasury Secretary than maybe we've seen since the Clinton administration. What did you learn about Scott Bessent you didn't know?
Well, he's an interesting person to be running the Treasury at this moment. I think that, a lot of the people that I spoke to and Eric and I spoke to pointed out that his experience as a macro investor, as a strategist, as somebody who's an expert on currencies, really comes into play if you're trying to reorder the global economic order, if you're trying to implement tariffs, if you're trying to do a lot of the things that the Trump administration is trying to do. So he's very well prepared in that sense. He knows the economics and the strategy inside and out. And he does have, or is viewed to have, I should say, a moderating influence on the president.
Is that a fair view after the time you spent?
Well, I think that he is a calm, cool, collected person. I think is fair to say. He does not see himself as a moderating influence on the president.
Really?
So the way that he describes his role is that he gives the president options and outcomes. So, you could kind of draw your own conclusions as to how that influences the president. The president, of course, is very against the idea of anyone telling him what to do. There was some reporting earlier this summer about Bessent urging caution on the Federal Reserve, and Trump really pushed back hard on that on social media. And so I think that Bessent is very much reluctant to be seen in that light. And I also think that that's not how he views himself or his role.
Okay.
He views himself, I think he would even hesitate to call himself an advisor or a counselor. He just sort of tells the president, look, if you do this, this is what could likely happen. The one thing that he is known for, or at least what people have emphasized in our reporting, is that he tries to see around corners, quote unquote. And so his value to Trump, or one of the things that he brings to the department, is this idea of trying to basically see around corners, see what the unknown unknowns are, if you will.
Yeah, sure.
Yeah.
Well, I love this breakout quote. It's very easy for the building to run you, he told you. You could be a great manager here and have good bond auctions and get the tax bill done, or you can have bigger goals and leave an imprint. It makes me wonder about Scott Bessent as a manager, but also Scott Bessent as a visionary, because that's the type of talk that could redefine the role.
Yeah, look, I mean, I think it's his role has expanded. He's negotiating trade deals, which is very unusual for a Treasury Secretary
in a literal
to
sense
do.
now, too. He's running the IRS, for crying out loud.
He's got two jobs.
Yeah.
He's not only the Treasury Secretary, he's the acting head of the IRS. Obviously, IRS falls under Treasury, but it's unusual to have the Secretary in that role. It was interesting, one of the things, there's a lot in the story, and I would encourage everyone to read it, obviously, but I think one of the things that really comes through is that he is thoughtful. And he is thinking about not just what he needs to do on a day-to-day basis, but what his legacy wants to be, or what he wants his legacy to be, I should say. And one of the things that he said, and you quoted, is that it's very easy to let the building run you, but I have this list of things that I want to accomplish before I walk out the door. And obviously, he's been thinking about this list of things for a long time. One of them is dollar supremacy. One of them is bank deregulation. One of them is and maybe the primary one is this idea of, he calls it parallel prosperity. And it's the idea that both Wall Street and Main Street can do well. And one of the things that I think is clear in our conversations with him is that he's very much worried about, if we don't sort of shore up capitalism per se, that people will really lose faith in that system, and that could lead to some dark places. Now, of course, we pushed back on some of his views and asked him, what about the debt and deficit? You came in as a debt hawk, as a deficit hawk.
Yeah.
The One Big Beautiful Bill increases the debt and the deficit over the 10-year time frame. And he has an answer for that, which is economic growth will offset that.
Sure.
We asked him about tariffs and trade and this question of even the BLS, the firing of the BLS supervisor. And he gave us a statement on that. I mean, he's defended all of these moves, of course, and that's his job. And
yes,
I do think that to a great extent he believes in the mission that he is on there. But, there are differing views. And so I think that we present that in the piece as well, that there is, this is not, it's a bold experiment. It might work, it might not.
Wow.
And he will certainly be one of the figures that is working on it and will be held responsible if it doesn't work.
Did you guys go to Butterworth's or anything?
No, it's a great question. I mean, we did get. We were very fortunate to get a lot of time with him. He's very generous with his time. This is one of the few print interviews that he's done since being in office, and so we're certainly appreciative of the time that he spent. I actually got a chance to observe him in this meeting with some folks from South Carolina. Of course, he's from South Carolina himself. And in that meeting, it emerged that his Secret Service codename was Swamp Fox.
What?
Which
Really?
Yes, which
awesome.
is it's in the story, and it's a reference to a Revolutionary War figure who was from South Carolina.
Right.
And he was very proud of that fact. He let it be known to this group, and they
That's
were all
great.
very appreciative of that. And the other thing that was interesting in that meeting is that he sort of said, people ask me if I want to run for office,
Right, yeah.
and he said, I'm not interested in that. I have one boss, and he's a lot.
Uh-huh.
he might be as much as 5 million voters in South Carolina, but I feel very privileged to be in this position that I'm in. I serve at the pleasure of the president and all of that.
Yeah.
But yeah, I mean, he's got a sense of humor. He's an interesting guy. He's humorous and thoughtful and all of that. But he's the spotlight's going to be on him for quite some time,
Well.
and it is not a set of policies that are without risk.
Spotlight starting with the cover of Bloomberg Business Week. Dan, thank you so much.
Sure.
Check this piece out. Dan Flatley and company. Eric Schatzker. Great read. Swamp Fox. I'm Joe Matthew. This is Balance of Power. We have to get to the data. As promised, Molly Smith has been patiently waiting for us at World Headquarters in New York because it's CPI day, and we saw a little warm-up on the core this morning that does not seem to be bothering Wall Street, but maybe that's the whole point. Molly joins us to look under the hood. Molly, what's got your attention here? Is this the beginning of what a lot of people have been predicting in the age of tariffs?
Hey, Joe. Honestly, I think this report threw a few of us for a loop that this really was so much more of a story about services inflation rather than goods. And the good side is what we've all been really carefully monitoring for to see the pass-through of tariffs, which, did happen, but to a much lesser degree than what we saw in the June data. So if anything, I think this is now probably pretty concerning for the Fed, who maybe was starting to think that services inflation was getting to be more under control, at least compared to, in the years when inflation was really spiking, it was so much because of services, but had largely been subdued more in recent months when we were focusing on the good side of the equation. So we may now have to really be paying more attention to services again.
Is this a sigh of relief then at the White House? Everybody's been predicting tariff inflation, and we just aren't seeing it yet.
Well, certainly that's how President Trump took it. You saw that he posted on Truth Social after the data saying that, everybody's been wrong about tariffs. They're not causing inflation, specifically called out Goldman Sachs for putting out an incorrect estimate of what he said is incorrect about that. Look, there definitely are signs that tariffs are boosting inflation. It's just a lot more limited than what we thought it was going to be in terms of how severe the impact would be, how lasting it would be, and how broad.
We got PPI tomorrow, right? Or is it
Thursday?
2 days from now? What are you looking for?
Take a beat. Thursday. Yeah, so we have PPI coming up on Thursday. So that's a report on wholesale inflation. And then Friday, retail sales is another big one in the meantime, as well as consumer sentiment. So there's going to be more looks to see how consumers are reacting to tariffs. That's certainly what we're going to be looking for in the retail sales report, since that largely captures spending on goods. Of course, we have all this drama with the BLS in the meantime that Dan had just alluded to beforehand. So that's also keeping us pretty busy.
Yeah, we're going to have to talk about that a little bit more. EJ and Tony, are you guys friends?
Not yet, at least. No, we are not. I wouldn't say we're friends, but maybe getting to know each other, hopefully.
Well, yeah.
At
You're
least
going to be
I've gotten
relying
to know
on his
him
data
a lot
quite a
better.
bit.
Sorry?
Absolutely.
Yeah.
You're going to be using his data quite a bit starting right now. Molly Smith, thank you for joining us as always. Molly is at World Headquarters in New York with our eyes on the CPI, goods inflation more subdued. Molly's going to start worrying about services. How about that? You hear it first from the editor, the person who cranks the data out on the terminal. We'll assemble our panel next. Thanks for being with us here on the Tuesday edition of Balance of Power. Rick Davis and Jeannie Shanzano are on the way in. This day after the president deployed the National Guard to the streets of D.C. We'll go to ground ahead on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing as an in-line inflation reading bolsters speculation that the Fed will have room to cut rates in September. Here's where we stand. S&P right now, best level of the morning, of the afternoon right now, up by 59. That is a gain of 0.9%, 64.33. We've got the Dow up 465, now up 1.1%. Dow Industrials, 44,439. While NASDAQ is up 238 for the NASDAQ Composite Index, a gain now of 1.1%. The NASDAQ 100 Index also up 1.1%. The Russell 2000 Index of small cap shares is surging 2.2%. The 10-year, 4.29%, with the 2-year, 3.72%. Spot gold up $7 the ounce, $33.49, up 0.2%. And West Texas Intermediate crude down 1.3%, $63.15 a barrel on WTI. So again, update for the Dow, the S&P, and NASDAQ after this morning's CPI report. David Kelly is Chief Global Strategist at JP Morgan Asset Management.
I think there's very little argument that in favor of the Fed cutting rates. Rates are not abnormally high. I don't know why they think 3% is a neutral rate in the long run. It doesn't equate to history before the pandemic. I think something 4.5% is more of a neutral rate anyway. But there is no urgency about cutting rates. Now, I think they will cut rates for political reasons, which is very unfortunate, but I don't think they should based on these data.
David Kelly of JP Morgan Asset Management interviewed this morning on Bloomberg Surveillance. The dating service provider Match Group has agreed to pay $14 million to resolve FTC charges. Federal Trade Commission says Match online dating misled users about guarantees. Right now, Match up by 2%. Recapping stocks higher. S&P up 0.9%. Balance of power continues right now. Back we go to Washington. Once again, your host is Joe Matthew.
Okay, Charlie, many thanks. We'll get back to Charlie Pellet at the top of the hour for his view on the markets on this Tuesday. Thanks for coming along. It's Balance of Power, live from Washington, where we're still looking, in some neighborhoods at least, for all the uniformed troops and federal police officers. It's not that obvious, I have to tell you. Maybe I'm just in the wrong neighborhood, though the president said it would be in the big tourist areas. Right here I sit in downtown D.C., so it doesn't look like Armageddon. If you're curious about the optics here, I guess there were some arrests overnight. And the Attorney General, Pamela Bondi, on Twitter, writing, "I just concluded a productive meeting with D.C. Mayor Bowser at the Department of Justice," the mayor just down the street with the AG. "We agreed," she says, "there's nothing more important than keeping residents and tourists in Washington, D.C. safe from deadly crime." At President Trump's direction, the Justice Department will work closely with the D.C. city government and D.C. Police Department to make Washington, D.C. safe again. Sounds like a good old collab, more than a federal takeover. We did hear from Mayor Bowser following the president's announcement yesterday. Here she is.
"We are American citizens. Our families go to war. We pay taxes and we uphold the responsibilities of citizenship. And while this action today is unsettling and unprecedented, I can't say that given some of the rhetoric of the past, that we're totally surprised."
Well, there you have it. Long in coming here as the president announces that the police department will be under direct federal control and he will deploy the National Guard to the streets of D.C. It seems we haven't seen them quite yet. 800 of those troops are on the way. And there's an interesting leg to this story because if you were with us yesterday, you heard a lot of concern after the president called out Chicago and New York about this being duplicated in other places. The stakes would be different. The rules would be different. Those are, of course, not the federal city, and they don't live under a home rule act. The Washington Post says the Trump administration is now evaluating plans that would establish a so-called domestic civil disturbance quick reaction force. This is not like a domestic incident where you call the police. This would be composed of hundreds of National Guard troops, as they say, tasked with rapidly deploying into American cities. 600 troops on standby at all times so they can deploy in as little as 1 hour. We have Minutemen standing by to deal with trouble in our own cities. They would be split into 2 groups of 300, stationed at military bases in Alabama and Arizona. One side of the Mississippi goes to you, the other side goes to the rest. Interesting concept here, just hours after there was an argument about whether this might be extended to other cities. We bring in our political panel for their take on this and a lot more going on today. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. Rick is partner at Stone Court Capital, a Republican strategist, and great to see you both. Jeannie, is this what you had in mind yesterday when you were talking about other cities? It's one thing to make threats, but to actually create a domestic civil disturbance quick reaction force strikes me as something that you would actually want to use if you have it. What's your view?
Yeah, I mean, I don't think we knew yesterday, and I don't think we still know today where this is going. And we've heard the reports that you're talking about. And the concern, of course, is that Donald Trump may not be able to contain himself to Washington, D.C., where he is legally allowed to do this, but go to other cities in the way that you're talking about. And that's got to be concerning, particularly for conservative Republicans, for whom the idea of a large, strong federal government, energetic, coming to their local communities and telling them what to do and when and controlling is a bridge too far. And to me, there's a lot of reminiscence of Donald Trump with immigration. And that's why I think we need to wait and see how this pans out, because what's happened in that context is he's gone too far for many Americans. It's one thing to close the border to illegal immigration. It's one thing to address the issue of illegal immigration, but it's another to start picking people out of schools and off the streets. And so I think in this case, we might see a similar context of overreach by the president that is going to turn people off, Republicans and Democrats alike.
It's interesting here, Rick. This goes back to the first administration when President Trump, following the murder of George Floyd and a lot of the protests that we saw, wanted to employ active duty combat troops. And it was the then Defense Secretary Mark Esper who talked him into using National Guard troops. Since then, they did actually test this whole idea back then for fear of violence around the election. Split the country in half with the Mississippi. You've got 2 units ready to go, but it was never about quelling violence or, I don't know, fighting crime or however it is that we're qualifying this. Could you see this actually passing muster in the courts? Because it's one thing to use the National Guard here in the federal city. It's different when you start going into other states.
Well, you know, the fundamental aspect of this is, you know, normally when you use military assets, it's under the legal framework of Title 10. It's very clear what you can use them for, what you can't. In this case, evidently, this document talks about using Title 32, which is a completely different statute than what is typically founding, because you can't use an Arizona National Guardsman in California. They're there for the state that they belong to and under the control of those people in that state. So, yes, president has the discretion. As Mayor Bowser articulated, I thought, well, yesterday, that he's within his rights to do what he's doing. And, you know, this is why, as a conservative Republican, it's disturbing because, as Jeannie said, if you have the right to do these things, you make use of that right. And Donald Trump has proven in his first term and now a number of times in his second term that he likes the use of military assets, National Guardsmen, and active duty, like he deployed Marines in L.A. To deal with civil disobedience, whether it be violent or not. And so I don't like the idea that these rights are so easily exercised, you know, and I think that it's a dangerous trend. And I'm actually surprised I'm not seeing lots of tweets from conservative Republican senators who would likely feel the same way if this were a Democrat doing this.
Really interesting, Jeannie. Rick points out an important point here. The fact that National Guard members cannot just go from one state to another. You cannot operate in a state other than the one you are in without permission. Could Donald Trump go to red state governors and ask for their help deploying their troops? How does he get around that?
Yeah, I mean, legally, that's what he would have to do. And he's less likely to ask for their help than direct them. And as we're seeing in Texas in a different context with the redistricting, they are prone to go along with it. And I think what is so troubling to so many people about this is that every thinking person wants to address crime. And I give the mayor of Washington, D.C. so much credit for her statements yesterday and today, talking about welcoming more troops, more police officers to help them combat crime and their partnership with federal law enforcement. That said, the most violent day in Washington, D.C. of late was January 6th, when President Trump was in office. And we didn't see him do this on that day in response to that kind of violence against police officers, with police officers and protesters killed. So what is troubling to so many people is President Trump once again seems to want to exercise this force against his political enemies, not against all people exercising violence or engaging in violent behavior. And of course, it's only a few months ago that he comes into office, and his first act is to pardon the over 1,000 people who were convicted of violence in D.C. on January 6th. So that is what is most troubling. If he was serious about combating crime, he would have done it that day as well, because we know he's talked about this back to his first term.
Rick, you talk about the way conservative Republicans may view this. They would have an opportunity to weigh in here when lawmakers get back. The law, the home rule law that we've talked about here governing the way Washington, D.C. is run, allows the president to take control of the city police force for 30 days. We talked about those 48-hour increments. Apparently, there is a total duration of 30 days in which he can do this. Extending beyond that point would require an act of Congress. If Democrats write a bill opposing what the president is doing, or if they're asked by the president and they say no, will Republicans join them?
It's an interesting question, because I don't think there is any dissent that D.C. should be safer, D.C. should be cleaner, there should be a better solution to homelessness. I mean, I think these issues that Donald Trump has pointed out are universally felt around Washington. I mean, we've heard lots of debates in Congress, including withholding federal funds to the district because of policy measures that they believe in Congress don't meet the needs of the community. And so, yeah, I think that there's a general attitude that we need to clean up Washington. And regardless of how it compares to previous years and violent crime versus nonviolent crime and things like that, you can get lost in that debate. At the end of the day, I think you're going to find universal support for the idea of making Washington safer and cleaner.
Interesting, Jeannie. What are your thoughts on that? If a Democrat initiates that legislation, would that be enough for the bill to be DOA? Does a Republican need to start this conversation?
I'm not sure. We may find a few Republicans going along with Democrats, although, as of course, the last 6-7 months, that has not been the case. In this context, maybe. And I agree with Rick. Everybody wants a clean, beautiful, safe Washington, D.C. The problem that Donald Trump has, it's the execution of this. Number one, the overreach I talked about. And number two, is this the best use of federal resources? As many people involved in crime, researching crime will tell you, that the idea that you take federal officials who are not trained to do the work of police officers on the ground in any big city and put them in a big city without training, does that make any sense? This is why some people say if Donald Trump's truly interested, invest more in police training, in police officers in D.C. Why federalize when most people agree that's not the best solution if there is indeed a problem, which again, the statistics don't show. But of course, you can always be safer and cleaner. So why not do that with an investment in the very people and the training of the very people whose job it is to do this, not pulling federal officers and FBI officials off of other jobs and having them do this for political reasons.
All right, Jeannie and Rick Davis, thank you both. They'll be back in our second hour after we have a conversation
with Nizar Nakhaktar, who's going to be joining us here. Nizar Nakhaktar on the president's decision to delay the truce with China by 90 days, also telling companies to avoid NVIDIA and AMD AI chips just after the licenses were approved. We'll have that conversation and also welcome two members of Congress, Tim Burchett from Tennessee, Jake Auchincloss from Massachusetts, all part of Hour 2 of Balance of Power, straight ahead here on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
China rejects the AI olive branch from President Trump. Welcome to the Tuesday edition of Balance of Power here on Bloomberg TV and radio as Beijing tells companies to avoid NVIDIA's AI chips just as the licenses are approved for their sale. We're going to talk about this along with President Trump's decision to extend the China trade truce with Nizar Nakhaktar at Wiley. She'll be with us in just a moment. We'll bring you conversations with Republican Congressman Tim Burchett of Tennessee and Democratic Congressman Jake Auchincloss of Massachusetts. And we'll have analysis from Bloomberg Politics contributors Jeannie Shanzano and Rick Davis. It's all after a look at Wall Street on this CPI day. Everybody's in a good mood on Wall Street as we check in with Charlie Pellet at World Headquarters in New York. Charlie?
Thank you very much, Joe Matthew. Not just a good mood, but perhaps the best level of the day right now on the S&P 500 index, up 61. Yes, at a record 64.35 on the S&P 500 index. We're looking at a gain right now of 1%. The Dow up 450. That's an advance of 1%. While the NASDAQ Composite Index is up 253 points for NASDAQ, an advance now of 1.2%. Our Mag 7 Index up 1.1%. The Russell 2000 Index of small cap shares surging 2.2%. An inline inflation reading bolstered speculation the Fed will have room to cut rates in September. That's driving stocks higher. The 10-year 4.29% with the 2-year 3.73%. Gold is up $6 the ounce, $33.48, up by about 0.2%. A retreat for West Texas Intermediate crude oil now down 1%, $63.32 a barrel, and Bitcoin up 0.6% at $119,595 on Bitcoin. The AI startup Perplexity says it has made a formal offer to acquire Google's Chrome browser for $34.5 billion in anticipation of requirements that may be imposed on the search giant in antitrust proceedings. Right now, we do have shares of Alphabet. They're advancing by 1.5%. Again, recapping, stocks are higher. CPI Tuesday with the S&P up now by 1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks. Live from New York, the voice of Wall Street and the New York subway, Charlie Pellet. We'll have more on the markets coming up about 20 minutes from now here on Balance of Power. I'm glad you joined us today. The Tuesday edition on Bloomberg TV and radio. A gorgeous day here in Washington, even if it's a bit warm, kind of like the core inflation reading this morning. But we're watching shares of NVIDIA and AMD just like we were at this time yesterday. And nobody could seem to care less about the news from China. They both closed higher yesterday after the 15% story ran. Remember, they would agree to give 15% of revenues from sales of AI chips to China to the U.S. government. Not a thing. Now today we hear the opposite. China's turning course. Stocks are still higher. And it comes against the backdrop of a trade truce, if we can actually call it that, because there are some tariffs in place, that the president has continued here with Beijing just yesterday, which would have been the deadline. We got another 90 days, suggesting there could be more time to reach a deal and maybe exercise more deals like these with the chip makers. This is where we want to start our conversation with a familiar guest. Nazakda Kakhtar is with us today, National Security Practice Group leader at Wiley and a voice of experience, as I say, in being a former Assistant Secretary for Industry and Analysis at the International Trade Administration. Great to see you, Nazak. Thanks for coming in.
Wonderful to be back.
So let's start big picture here. We just bought ourselves another 90 days. Is that enough to actually create a trade deal, or is just simply an indication that talks are continuing?
You know, it's pretty much an indication of talks are continuing. Trade deals, especially if they're going to be comprehensive, they're incredibly complex. They cover different sectors. They cover different measures with respect to goods within sectors. So 90 days is really an indication of let's continue talks. At the end of the day, I think the consensus is we're probably going to get a very narrow trade deal with China, but really the goal and all eyes are getting some kind of trade deal.
Okay. Does it rely on the president getting in the room with President Xi?
I think at the end of the day, probably these trade deals also have, especially based on which each country is asking for. We're asking for magnets. They're asking for chips. These materials have incredible geopolitical consequences. There's sectors of the economy, really critical sectors of the U.S. economy, that are still not getting magnets that they need from China. And so this isn't going to be resolved unless both country leaders get in a room and hash out what they need from each other.
Yes. Well, it sounds like it. The president had said at one point that we've got a deal up front. The term he used was upfront providing of rare earths, the batteries that are needed for these critical components. But we're getting a sense that that did not happen exactly the way he wanted.
No, I mean, China's repeatedly said, yeah, you'll get it, but China operates on its own time.
Okay.
And just because you get a few doesn't mean all the sectors that were previously getting it from China, for all the end-use applications, are going to get it. Yes, will our auto OEMs get some of the things they need? Absolutely.
Yep.
But we've got still issues with our defense primes that are not getting things. Industrial applications, they're not getting the magnets for their motors. At the end of the day, China is slow walking it, and they're playing games.
Well, you just said it. OEMs are one thing. National security, defense is another. Does that suggest that China has the leverage?
China has a considerable amount of leverage. And I think what I've been trying to sort of educate the community about is that, look, we are making enormous, the United States, correctly so, in critical mineral production and magnet production. We're going to need till 2028 to scale what the U.S. government is heavily investing in. So we really have about 2 years to solve for. And what I've been trying to socialize with the White House is, magnets can be refurbished. There are a lot of countries that use magnets that discard them at the end of the day.
Yes.
And this isn't recycling, but we can recover magnets.
How are you trying to socialize that with the White House?
I mean, it's just education, talking to them about it, talking to them about options. Absolutely. Just a few weeks ago, they had a summit to discuss this with key stakeholders. It's resonating. There's companies who've come in, raised their hand, and said, "We're happy to do this for you, White House, if push comes to shove." So the point is really making sure that we have a strategy in place, and whether we're going to basically cave to China anymore, based on the fact that we're not as vulnerable as we think we are.
Well, I'd love to hear your insights on what's happened in the last 24 hours. A big olive branch to the other side of the world, rebuffed by Beijing. And this is, we could talk about a lot of elements. I'd love your take on this deal that NVIDIA and AMD made as well, to actually give a chunk of proceeds from China sales to the U.S. government. But that was the concern yesterday. Now the concern is, are they going to buy it at all? Beijing is telling Chinese companies, don't buy NVIDIA, don't buy AMD. And this whole arrangement is something that we talked about last evening with Congressman Raja Krishnamurthy, Democrat from Illinois, important as he's ranking member on the House China Select Committee. Here's his take on what we're discussing right now.
He declared our national securities for sale. It's a disastrous dereliction of duty. The first thing that the commander-in-chief and the president needs to do is to protect our country. And so when he basically says that our national securities for sale, that our crown jewels can be obtained through some kind of revenue sharing agreement with the United States government, that is a horrible sign to our adversaries. What are we going to do next? Sell aircraft carriers to the Chinese and the government takes a 20% cut? This is horrible. We should not be engaged in the sale of these H20 chips to the CCP. And the fact that he would even broach the topic of these Blackwell processors potentially being for sale to the Chinese means that they're salivating at the prospect of basically taking those chips, inserting them into their military systems, which would be used against us and our allies, friends, and partners in the Indo-Pacific, and then also used against various minorities in perpetration of human rights abuses. So this is a really, really dark day for our national security.
All right, he just said a lot. So let's unpack a little bit of this. With regard to the arrangement that the White House gets, or the government gets, a 15% take, these licenses have just been approved. And there is an air of whether these were bought and paid for, and whether we're compromising. You just heard the congressman say our national security. How do you respond to that?
I think, look, first of all, first and foremost, what's really important for folks to understand is that when we license chips, we're also licensing the technology, the know-how that goes with it, right? So when on one hand, folks are saying, well, these are sort of lower grade chips, these are still exquisite chips. China has huge market access barriers against the United States. If it can indigenize it, it doesn't want it from us. If it wants it from us, there's a strategic need for it, right? So the transfer of know-how, to me, I think we've got to be very careful about.
Because Huawei has developed a similar chip to the H2.
China's entire semiconductor industry and the industry which is powering their defense capabilities, their military capabilities that they're using right now offensively to terrorize our allies and also aid and abet the Russians in Iran. That has been built, make no mistake, on U.S. technology that we transferred to China. So there are cumulative risks there. But in terms of the 15%, your question, I think this is really in the domain of Congress to decide whether they want these types of transactions to allow the U.S. government to collect revenue. I think when you look at the laws, it seems a little bit the laws are silent on this kind of issue. I think different folks have different interpretations. On one hand, the government can't collect revenue unless Congress authorizes it. On the other hand, they haven't explicitly banned it. So it's really up to Congress to say whether this is permissible or not. But certainly, do we want the National Security Bureau to potentially make money off of sales?